Otherwise, you'll want to end closer to the higher end of the range for today's trading session. Yesterday, one positive was the FIs. They have been selling, last few trading sessions. Yesterday, the sell number was sub 1,000 crores, which is relatively low in comparison to what we saw in the previous trading sessions. What about index futures? They went ahead and they added close to 2,000 short contracts. The short positioning is at around 87%. And in absolute terms, they're closer on 1.6 lakh contracts on the short side from an FI perspective, while the clients are long with more than 1 lakh contracts on the long side. We should get that up for you. And normally that combination isn't so bad. Clients long, FIs net short. Moving to the options data then, the 25,700 call, well, that was fairly active in yesterday's trading session. The premium is around that 200 rupees or thereabouts, while on the downside, the 25,500 put as well, good amount of open risk built up, premium at around 60 rupees. Which brings us to the levels. Today, it appears that the Nifty is going to be starting off closer to around the resistance zone, off around the 25,900 odd mark. The 25,900, the 26,000 mark, that's the crucial resistance mark that you're looking at. On the downside, the recent lows that we have visited in the last week itself, 25,350 to around 25,450, even going by the options data, that's going to be important. On the Nifty Bank, that yesterday as well did a relative underperformance, but you'll want it to find its form. And if you're looking at levels, well, the recent high will be important, 58,500, while the reference point on the downside, which it has been defending on a closing basis, is the 20 DMA. Though intraday, you have been seeing sometimes that number getting violated. In terms of stocks that you're looking at, maybe a couple of these stocks that have BR exposure, like Aditya Vision, good amount of exposure to Bihar. We'll have to see how the stock behaves. It's come up decently from the top, actually 10% from the top. So that's just one of the stocks that we'll be looking at in today's session.
And if I could add, I'd also be looking at the capital market stocks as well, because Gro is listing today. And the indication is in the so-called grey market that the premium is once again completely come off, 3-4%. That's about it. Remember, they're offering shares at the issue price is 100 rupees. We'll see where that listing ultimately goes, but that'll keep the capital market space in focus. Just a word on Asia. Asia is actually a nice shade of green, almost all markets, including markets like Hang Seng, mainland China, Shanghai Composite. All those markets are up and about. Japan is up. In Japan, the biggest news point, obviously, is SoftBank. SoftBank shares this morning fell as much as 10%. They've recovered a bit, but they're still down 6% after SoftBank went and sold its entire stake in NVIDIA. So that continues to be a big talking point. But otherwise, it's a positive-looking screen and a largely positive handover from Wall Street as well, giving us the sense that we will start on a fairly optimistic note, 150 points up as far as the implied open is concerned. Well, Arvind Sanger is with us this morning to share some ideas. Arvind, always a pleasure having you in. So first things first, looks like the shutdown is going to end. And there was this comment that Prashant was alluding to, Mr. Trump speaking to Fox News, right, where he said that, look, you can't expect someone who's been standing in an unemployment line for years to suddenly get ready to make missiles or chips, etc. So would you, draw any conclusions or any implications for Indian listed IT stocks because of this?
I think it may help a little bit, but I think the more important thing is there were concerns that some of the best and brightest who are coming to the US as foreign students may be disadvantaged by being too harsh on this H-1B situation. So I think this is more of a signal and a recognition that the US needs to attract the best and the brightest from the world to come and do all of the technology, high-tech STEM kind of work. And now I think it'll also help Indian IT somewhat, but I don't think that's the central thesis. It is more likely that a lot of the tech companies in the US, the major tech companies, have gone and pointed out that some of the brightest talent they're looking for, whether it's in the AI race or anything else, they have to be able to hire talent globally. And so I think, yes, there will be some benefit for Indian IT, but I don't think that's the central thrust in terms of where President Trump or where the US industry is asking for breaks on the H-1B kind of restrictions.
Yeah, Arvind, I've been speaking of AI. Just your quick thoughts on what's the chatter around that you're hearing on the SoftBank selling the NVIDIA stake, because every now and then, last 2-3 weeks, there's been this murmur around whether the AI trade is now becoming a little excessive. It has implications for global markets, right, including India.
Yes. Well, I think, I was just meeting some friends earlier today, and everybody was talking about the AI bubble. And I made the comment to them, as I'll make to you, that when everybody's talking about a bubble,
it's not a bubble.
It's going to take when everybody stopped talking about a bubble and people have said, okay, this is a new paradigm, that's when the bubble will pop. So yes, you're going to have pullbacks, you're going to have selling. But, I don't think that the NVIDIA sale reflects any great insights. And I think it's just profit taking because they have other investments to do. So I don't see that as anything, it's not a deep seek moment, let's put it that way. Are there challenges from Chinese models and from other things? Those are more concerning. But in terms of the investment, I was just at a conference today where the CFO of OpenAI was one of the speakers, and it's very clear that OpenAI and others are not slowing down. The demand for compute is only going upward and to the right. So there will be some surprise along the way. Maybe somebody will pull back, but it's not imminent.
But in one way, I could use that same method. Just being devil's advocate here, Arvind, and humor me. Morning, Prashant here. There's a lot of mainstream research which is asking the question whether we are in a bubble, and then all of them are answering in a firm no bubble. So when could you use that?
Everybody's asking the question. Well, when everybody's asking the question, Prashant, the question is there. It's in the back of people's minds. It's not. It's not a surprise. So in that sense, the fact that everybody's asking the question, even if they are coming to a conclusion that maybe it's not, there are enough people saying it's a bubble. And so it's not like it's a one-sided debate altogether. But I think the fact that everybody's worried about it and asking about it and questioning it, I'm not saying that it immunizes us from anything going wrong.
Yeah, it's one of the most asked questions, and one of the no is the most given answer. So, India, Arvind, quick thoughts where we are, because there is some upgrades. Goldman upgraded their view on India, the Indian market that is, and others have too. And there's a bunch of things coming together. Maybe this deal will happen. What's your view?
Well, I think, look, the Bihar elections are nice, but they're not really, in my opinion, needle movers. I think the US-India trade deal is much more important. And then, let's look at the economic tea leaves and see how things are developing. I think India has suffered from a time value and a relative correction all year relative to, most of my major other markets. So it's starting to get into the zone where, it's not the cheapest market. I think it starts to become more interesting, and I think especially for FIIs, if the trade deal happens and other signs that things are back on track in terms of India, and the Indian rupee, I guess, has held up reasonably well in this whole dollar recent volatility. So I think there are signs here that India is back on the radar screen. But the one you'd asked about AI. The one area where India is unfortunately, sadly, missing in action is on the AI front. So that part it has missed out, but I think there are other reasons why India could be interesting.
Yeah, that sounds good. I mean, if it only starts showing up in the money flow, investors here will be very happy because FPI is still sellers for most parts of the month so far. But great conversation as always, Arvind. Thank you so much for taking out the time, and we look forward to connecting again soon. Well, with that, let's quickly tell our viewers what's lined up on the show. Plenty of interactions coming your way at 8:30. We'll be connecting with Gautam Chaturya of UBS. The UBS India Summit 2025 kicks off today. We'll find out what the mood and sentiment is like. At 8:40, we'll have with us senior journalist Sanjeev Srivastava to decode these Bihar election exit polls. At 9 o'clock, we'll be connecting with the management of Zaggle, talk about the company's Q2 performance. At 9:20, Rana Gupta of Manulife Investment Management joins in. He's our market master of the day. At 9:30, we go back to the UBS India conference. Sunil Thirumalai will be giving us some perspective on the global front as well. After that, we'll be in conversation with the management of Fortis Healthcare, talk to them about their Q2 performance and the second half outlook. At 9:50, Baba Kalyani of Bharat Forge joins in to talk about their business outlook. And after that, at 10 o'clock, we'll be connecting with the management of RITES. They also declared numbers yesterday. Towards the end of the show, in our special segment, It's the Economy, Lata will be chatting with Santanu Chakrabarti of BNP Paribas on his stock picks after the BFSI Q2 results.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment. We're looking at BSE, Torrent Power, Biocon, Fortis Healthcare and Max Financial. All of them will be reacting to positive news flow, while you have Tata Power, RVNL, PI Industries, Thermax and Concord that will be reacting to negative news flow. Take that break, come back, get into further detail on all of these names.
Welcome back. Well, plenty of earnings as we're in the final leg of the season, the earnings season that is. So let's straight away get to our team with the top 10 list of stocks to watch. Of course, we have the listing of Grow, but that's on the primary market action side. On the secondary side, it's probably more earnings and more earnings. Guys, morning to all of you. Vivek, how did Tata Power look?
Well, good morning. Tata Power, multiple levers. But essentially, this particular quarter for the entire power sector was expected to be quite muted given the fact that FY26 so far has been a year of very moderate demand. So the Mundra facility was shut, given the fact that Section 11 was not extended. But what actually worked in Tata Power favor was the fact that the Odisha Discom, exceptional performance over there, and along with that, the solar cell and module facility, their profits as well as EBITDA doubled. So the weakness as far as the coal business and Mundra was more than offset by the performance as far as Odisha as well as the solar cell and module facility was concerned. Now talking about the numbers themselves, was expected to be slightly muted. Revenues was down 1% on a year-on-year basis. EBITDA, consolidated when we look at it, was down close to 12%. Margins too contracted, and profitability, given by higher other income, fell just around 1%. But three key takeaways from the media call that the company hosted last evening. Number one, they are on track to sign a supplementary PPA with the Gujarat government for the Mundra facility. That's very important. They're also looking to set up a 10 gigawatt solar module wafer and ingot manufacturing facility, and likely to receive an update as far as UP Discom privatization by the end of this month.
Okay, all right. Thanks a lot for that, Vivek. Let's hop across to Sudarshan. Sudarshan, BSE's numbers look quite good.
That's correct. So for BSE, the last 3 months, two issues that happened in the limelight. First, the change in the expiry day, and second, will the weekly expiry remain or go? And the outcome so far on both these issues has looked largely positive. Why do I say so? So when the expiry day was changed and the first weekly expiry day, when it was moved to Thursday, we had seen a turnover of almost 50,000 crore in a single day, and that was the highest ever. And second, the recent comment from Finance Minister and SEBI Chairman regarding the weekly expiry was taken positively, and the day this comment was made, the stock had moved 10% higher. Now talking about the earnings were largely positive and higher than expectations that put out by Bloomberg. On the operating front, revenue was up 11.5% on a sequential basis, and the largest contributor is transactional charges, and that was up almost 8% on a sequential basis. Even EBITDA has improved by 4%. Margin has seen a contraction of 64 basis points. That's the reason of higher regulatory charges, which has increased by 26%. But overall, it was a good set of earnings.
Okay, all right. So thanks very much for that. Torrent Power is the next one we're going to focus on, and Vivek has got details on this one. Vivek, over to you. Morning.
Well, largely aided by the fact that the merchant capacity wasn't idle, and in fact, the company had a set supply offtake agreement in place. That is what actually aided the strong performance, actually above the limited estimates that we were working with. But given the fact that Q3 was very strong, Q3 may be slightly muted given the fact that the supply commitments are largely over. So all eyes will be on any further short-term PPAs that the company would be able to sign. So what aided the performance? Higher contribution from the merchant power sales from the gas-based power plants. So revenues higher by almost 10%, EBITDA higher by 25%, margins expanding over 250 basis points, and profitability higher by 50%. Now the higher LNG sales, higher merchant power clearly aiding. Along with that, an important development, the company secured a 1,600 megawatt thermal power project in Madhya Pradesh, and the tariff were quite attractive at rupees 5.829 rupees per kilowatt hour.
Okay, all right, got it. Vivek, thanks very much. So Torrent Power is going to be on our list. Ekta, good morning. What about Biocon?
Well, good numbers coming in for Biocon. So the revenue came in at around 4,295 odd crores. The EBITDA came in at around 835 crores. Street was anticipating around 843 odd crores, and margins of around 19.4%. The profit came in at around 132.8 crores, again better than expectations. So overall, it was a good quarter for Biocon, which was really led by the generics and the biosimilars business. So generics was aided by launches such as liraglutide in key markets. So that segment was up around 24%. The biosimilar segment, which basically consists of the biologics business, was up around 25% on a year-on-year basis, with margins expanding according to the company as well this quarter. So overall, steady quarter for Biocon. Commentary will be important to assess how the stock moves as well.
Okay, all right. Thanks, Ekta, for that. Going across to Vinny. She's here to tell us about RVNL. Morning, Vinny.
Hi, good morning. So for RVNL, its Q2 performance weak on a year-on-year basis. Sequentially, we are seeing some bit of an improvement. Now, our revenues, they are up by around 5.5% YOY. EBITDA margins continue to be a bit muted. So 4.22% is what the EBITDA margin came in for the quarter versus 5.6%. And profits of the company have seen a decline of around 20%. Now, do not forget that revenues were in line with what the BBG estimates were, as well as margins. When you look at it, that was below what the street or analysts were expecting. One concern that I would watch out for is just that the operating cash flow has turned negative. But yes, we'll wait out for details on that one, maybe in the con call that is there today later. As of now, I would give it a red, but sequential recovery is something that we're keeping an eye out on, and that could maybe lead to a recovery in the stock as well.
All right, Vinny, thank you very much for that. RVNL in focus there. Fortis Healthcare is what we want to talk about next. Ekta is here for this one. Ekta, morning.
Well, good numbers coming in for Fortis. Revenue up around 17%, EBITDA up around 28% year-on-year. Margins have come in at around 24%, and a profit which has expanded Q-on-Q as well as year-on-year. So hospitals, which is the bread and butter business, was up 19.3% year-on-year. Margins expanded to 23% versus 21.4% for that segment. And the diagnostic business did well as well. Revenue was up 7.1%, but margins have expanded all the way to 29%. So good going for Fortis.
Okay. All right, Ekta. Thanks a lot for that. In fact, we have the management of Fortis Healthcare who will be joining in at around 9:40 a.m. to talk about their past quarter's numbers. Let's go across to Sonal. She's here to tell us about PI Industries. Morning, Sonal.
Good morning, Nigel. Well, for PI Industries, the numbers were lower on a YY basis. This was something which was expected. The numbers are better than the poll, though. Revenues down 16%, EBITDA was down 13%. We had EBITDA margins which were up 74 basis points, but the net profit declined 19%. What led to the decline this time around? It was an 18% volume decline that we saw in agrochem exports, which is the CSM business. Domestic revenues declined by 13%, and the volumes there declined by 9% on a YY basis. The company said that in the quarter gone by, domestic revenue was adversely impacted. They're expecting a better second half, and long-term growth plan remains intact, but there could be some volatility in the short term. And in the CSM, on the export business, they have cautious optimism for the second half. But do remember, they've maintained their single-digit revenue growth guidance, and the cautious outlook is what it was in the first quarter as well. So PI Industries will be on our radar today.
Okay, all right, got it. Thank you for that, Sunil. Let's hop across to Vinny, who's watching out for Thermax. Not a great quarter, Vinny.
Yes, not a great quarter, Surabhi, for Thermax this time as well. Now, a miss coming in on all the fronts, whether revenue, margins, profits of the company, all of them missed this CNBC-TV18 estimates as well as the street estimates. Execution, that continues to be a challenge for the company. Now, overall, when you look at the margins, they came in just at 6.96% versus last year of around 10.63%. Impact on the margins was due to the adverse product mix as well as project overrun cost that was there. That was something that impacted the margins, and margins across all the segments, whether you look at industrial product, industrial infra, green solutions, chemicals, all of them, there was weak performance in terms of margins. Order booking, when you look at it, the order inflows, that saw 6% growth on a year-on-year basis. Order book also saw 6% growth on a year-on-year basis. Now, order booking mainly was higher due to improved order bookings that came in from the industrial product segment. Industrial product segment overall saw 12% growth. Margins also a bit of a better margin versus other segments. Industrial infra segment, that saw lower margins, negative EBITDA loss that came in over there. Mainly, that was the impact that came in due to the product mix over there as well. Profitability was also impacted on that industrial infra side due to project costs. So that is what we're keeping an eye on. We're expecting red here for the stock.
Okay, all right, Vinny, thank you very much for that. So it's like an earnings treadmill, right? Non-stop. Concor is the next one. Mangalam is here with details. Mangalam, morning.
Well, so it's a softish set of numbers which have come in. 2.9% growth in the company's revenue. The EBITDA has actually declined by about 1.1%. The second quarter is usually seasonally weak as well. So the margins, they were compressing by about 100 basis points. And the net profit was just about 3% higher. Because the EXIM and the domestic revenues both grew 3%. We already had the volume growth where the EXIM volumes increased by 8.7% and domestic volumes increased by 17%. The conclusion is that there was a decline in realizations, and that's weighed on overall performance. Is the company doing that because there is less volume generally, or is it doing so because there are market pressures? Those are a couple of things that we'll probably get to know from the company's conference call. But for now, going with red on Container Corp.
Okay, all right, got that. Mangalam, thank you. Yash is joining in for Max Financial. Yash, how are the numbers?
Well, the numbers are very, very strong for the second quarter as far as Max Financial Services is concerned. The numbers beating CNBC-TV18 poll on almost all the counts. So, of course, APE was a beat to CNBC-TV18 poll in terms of absolute growth, growing at 16%. Retail AP was in line with our poll, growing by about 9%. VNB, a strong beat to CNBC-TV18 poll, as well as a very, very strong growth of about 25%. And that led to a strong beat on the margin as well. We were anticipating margins of 23.17%. They came in at about 25.49%, so a strong beat to the poll, and up about 189 basis points at 25.49% versus 23.6%. Going with green, the stock hasn't done much in the last 3 months, in the last 1 month, all working for the stock today.
Okay, all right, Yash. And by the way, you'll hear from the management a little later in the day. I think in the 11 o'clock to 12 o'clock wheel, you'll hear from the Max Financial Management. 16:35 is where it ended at. Well, Manisha is now joining us with a roundup of all what is happening in the commodity space and what is top of mind. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, mostly commodities are trading in the positive in the Asian markets right now. Take a look at the gold and silver prices, and we are looking at a 3-week highs, and both of these precious metals trading very close to its all-time highs yet again. There is support, of course, coming in because of the decline in US dollar and expectation of a Fed rate cut for the month of December. But it's not just precious metal. The base metals continue to do well. So whether it's copper or aluminum, which is trading at a 3-year high, also is looking support because of the decline in supplies and production guidelines going in the future. You have the crude oil price is also rising for a third straight day. Rubber is trading at a 1-week high. And many of the other agri-industrial commodities like a cotton and a cocoa also seem to be trading at a multi-week highs. So today in Asia, it really does belong to commodities. Almost everything trading in the green.
Okay, all right, Manisha, thanks very much for that. We'll take a break. We are back, and we have the first of our guests from the UBS conference, which is of course getting underway. Gautam Chachori of UBS is with us from the sidelines of the UBS India Summit 2025. We are back. Welcome back. The UBS India conference, it's a big one, which is getting underway here in Mumbai. Gautam Chachoria is with us. He's head of global markets India at UBS. Gautam, great to have you with us here. Appreciate you joining us. Action-packed next couple of days, Gautam. Tell us a little bit about the size and scale of conference, what you're aiming to do here. Of course, I mean, the basic aim at any conference is getting investors face time with corporates. But what do you plan to sort of, what are the big themes in that sense, which you hope will come up and get answered as part of this process?
Thanks, and good morning, everyone. Again, very exciting. It's a bigger event this year than last year and earlier. We have more than 250 plus investors and 65 or 70 odd corporates. But again, beyond that, we have interesting panels, including from government officials, ex-RBI officials, panels on consumption, on AI, on manufacturing, defense. So a host of thematic panels which we have created for our investor base to hopefully get something out from this conference. And beyond that, we have multiple tours going on. Like we did a couple of days of macro tour in Delhi and Bombay last couple of days. And we have thematic tours on the ground consumption, manufacturing, defense, etc. Again, the big themes, obviously, from talking to investors, this is still early discussions, is around what happens to growth in India second half and later, and also the trade deal. And the big longer-term thematic around manufacturing as to whether we see more manufacturing, specifically around defense, but in a broad way, pick up in India.
In terms of the foreign participation, Gautam, hi. So, what is your expectation in terms of just where investors are coming from? Because a lot of them have given India the skip, right? In this calendar year, they've gone to other Asian markets. And the biggest grouse is that India doesn't have a deep tech story. So, what's your sense? Do you see that tide turning, even in your conversations in the run-up to the conference?
So, look, a few things. One, we are seeing increased foreign investor participation this year. So, we have more number of investors traveling. And this is across the world, not just US, but across countries in Europe and even Asia. Beyond Hong Kong, Singapore, we have investors attending the conference. Okay, so that's the first point. Second is, look, foreign investors have not been investing in India in aggregate for last 5 years, not just last few months. Beyond the yearly buying and selling, net they haven't invested literally anything over the last 5 years. The last few months, obviously, there's an AI and tech thing. There's the India-US trade deal, valuations, and opportunities in other markets in Asia. So that's not helped also. But what we have seen in the last couple of months, and more so in the run of the conference also, is we are seeing interest pick up in bottom-up stock ideas. So we're still not seeing foreign investors talking, okay, let's allocate a lot more money to India, it's bottoming out, etc. But we are seeing in the last 2 months bottom-up discussions, and it's across sectors, not just one sector. Whether it's financials, consumption, obviously, but even manufacturing, defense, etc. We're seeing a lot more discussion from the team here, sales and research, with foreign investors on bottom-up ideas.
All right. Hi, Gautam. Good morning. Good to see you, Ben. And you were quite positive on consumption, namely the two-wheeler and the four-wheelers. And actually, the last couple of months have worked out very well for them. What is your view right now? And from the auto pack itself, consumption/auto, what do you like?
So look, broader consumption theme we continue to like. There are enough tailwinds in this sector. Rural, urban, credit, obviously the government policies around GST and upcoming pay commission and some of the freebies. But again, it has to be more stock and sub-segment specific, not just sector specific, but sub-segments. Like in autos, the theme which we have been pushing is more premiumization. And within two-wheeler, scooter and EVs rather than a broad two-wheeler or broad four-wheelers. So it's also stock specific. It's not a very broad-based view. Again, in the last couple of months, everything has benefited. But for the discerning investor going forward, these themes will matter more because that's where we see higher visibility and higher comfort of growth actually playing through. So we are much more comfortable about the premiumization theme than aggregate, say, car sales volumes, which at the margin, in fact, two-wheeler and cars both, the expectations might be running a bit ahead versus what our analyst thinks. We are much more cautious on the industry level volume outlook being priced in by market. But at a stock and sub-segment level, there are opportunities. The broader consumption beyond autos still looks attractive, whether it's retail, whether it's food delivery, QSR, selective FMCG also. So broader consumption, we remain constructive.
Okay, so constructive on some of the broader, consumption themes. You mentioned, manufacturing, and there will be obviously more conversations around that theme at the conference as well. Right now, what's the house view? And when it comes to the whole capex side of the market, what is the position? Because a lot of these stocks, obviously, through the course of the last several months, they've come off their very high, very lofty levels.
So again, similar to consumption, there is pockets which we are very, very high conviction on, pockets in defense, but also in the capex cycle part, specifically around energy, around renewables. They remain attractive, both near term as well as from a longer term cycle, including what they're pricing in. So that remains an attractive space in general for us. And again, in the last quarter or two, we are seeing some pickup or at least stabilization in private capex. It's no longer a drag or not growing enough. Will it be a proper full-fledged private corporate capex cycle? I think it's too early and premature. And one of the things which we have been telling and we'll highlight again, it's that one of the things we have to remember, don't compare it with what we saw in, say, 2004 to 7. That kind of private corporate capex cycle, if you are defining in that parameter, that's going to be difficult. But from where we are now, uptick in the next couple of years is fairly likely.
I know index targets are what they are, Gautam, but 2026, what's the Nifty target for you?
So we don't have an official target for Nifty for next year, but we do see a small upside from here for sure. Look, at a broader market level, there is the flows from retail investors, mutual fund, which will help stabilize markets. On the other hand, there's also a big pipeline of capital raising, which also sucks away some of the liquidity. So on a technical side, it seems to be a more range-bound outlook. But on the fundamental side, that's the key part. So we are expecting growth to pick up as the policy easing flows to the economy. The only joker in the pack is some level of sentiment and uncertainty, specifically around US trade deal. I think that's also a question of time. We will have clarity around that, and then hopefully we'll see a growth pickup.
Yeah.
And that will be the key for markets to break out of the band we have seen in the last couple of years.
Yeah. You mentioned AI once or twice there, Gautam. We had S. Narain who was saying, and others as well, that yes, this AI, for the lack of a better word, mania around the world fades a little bit. Maybe people will start to notice other things as well, foreign investors particularly. Do you believe that?
So look, there are strong views on both sides. Even a global strategist and economists have published something around what it could mean. Again, the way we look at it, the benefits of AI is going to be long term. Where we are right now is very early stage of creating the capital base or capital stock to drive the AI benefits. We are nowhere in the long-term cycle of the benefits of AI flowing through to normal businesses in their normal workflow processes, etc. That's very, very early. So we are still at a very early stage of creating the capital stock. Now, is there a bubble in the creating the capital stock? Again, it's happened at a very fast level. The business opportunity is real. The answer to that will lie how quickly the benefits to the business flow. So I won't say that it's necessarily a bubble because this is a big change in how businesses are done globally, not just for AI companies, but also normal businesses in terms of how they use leverage and apply AI in their business. So I won't get carried away by simply saying it's a bubble.
Okay.
Too early for that.
All right, Gautam, thank you for joining us this morning. I wish you all the very best for the conference. I'm sure it's going to be action-packed, and we look forward to connecting again, maybe once it's in its final lap, to get a sense of what investors are really saying. Thank you for joining us today. Well, that's Gautam Chowdhuria saying that AI is definitely not a bubble. Prashant, so one more of the nods, right? Everybody's asking the question whether AI is a bubble. We had Gautam say, no, it's not. One more of the nods.
The thing is that if something is a consensus view, how can it happen, right? That's the basic, and that's correct, absolutely right? But the point is, what consensus? The consensus is no, or consensus is the question is being asked. That was the...
I think, it's getting into a high realm, right? We're moving into AI zone. But okay, I think we'll come back down and look at the here and now, because there are some very interesting developments at Tata Trusts. Now, the Tata Trust has named Neville Tata and Bhaskar Bhatt as new trustees. Let's go across to Parikshit to understand this. Parikshit, of course, was talking about this even before the news became official. Parikshit, fill us in on what brings about this change and what next?
This will be a development which will have long-term implications for Noel Tata and also the way Tata Trusts operate. So Noel Tata has inducted, along with other board members, through consensus, Neville Tata, who is Noel Tata's son, and Bhaskar Bhatt as trustees of the Sir Dorabji Tata Trust for 3 years. At 32 years old, Neville will be the youngest trustee of Tata Trust. He currently is the head of French grocery business Star Bazaar. The other important development is the induction of Bhaskar Bhatt. The 71-year-old was the MD of Titan from 2002 to 2019, another veteran of the Tata Group. When you speak about the Sir Dorabji Tata Trust, it's the principal trust of the Tata Trust, which has a 28% stake in Tata Sons. We know how Dorabji Tata Trust and Ratan Tata Trust together have a 66% stake in Tata Sons. Now, what happens after the changes to the Maharashtra Public Trust law is that Noel Tata will be the only permanent trustee for life of Tata Trust. Venu Srinivasan has been reappointed, but only for a 3-year term as vice chairman. So the existing trustees of Sir Dorabji Tata Trust are Noel Tata, Venu Srinivasan, Vijay Singh, Pramit Zaveri, Darius Kambata, and to add to that, Bhaskar Bhatt and Neville Tata. Why has Venu Srinivasan's term changed and been revised? On October 24, we had reported that Srinivasan had been reappointed permanent trustee for life. But there was a Maharashtra Public Trust Act, the amendments to it, which came into effect on September 1st. And after that, his appointment for life did not comply with the new law. And therefore, he has now been appointed for a 3-year term because the law has made changes to the appointment and tenure of permanent trustees. So let's see how the Tata Trust board takes forward the agenda of Tata Sons, what kind of relationship the two have in the months to come. But clearly, these are developments of major significance.
Okay, all right. Thanks a lot, Parikshit, for joining in and giving us that big update. We'll keep coming back to you. Well, time to slip into a short break, but on the other side, we'll be joined by senior journalist Sanjeev Srivastava to decode the Bihar election exit poll. Welcome back. Well, there was a record voter turnout in Bihar as 122 seats across 20 districts go to polls in the final phase of the state assembly elections. A News 18 exit poll gives NDA the edge. Do note, votes will be counted on Friday. To discuss this and more, now we're joined by Sanjeev Srivastava, the senior journalist. Hi, Mr. Srivastava. Good morning and good to see you in. What do you make of the exit polls? Do you think your numbers were aligned to what the exit polls threw up, or do you think there can be an out-of-the-box surprise that comes about? And also, what does this mean for the ruling BJP? Clearly, if they bag Bihar, then, that puts more ammunition to them.
Oh, good morning, Nigel. So I agree with you on all the points that you have just underlined. But what if they had lost? It would have been a real big crisis. Because if they had lost, then Nitish Kumar is there. He's one of the main crutches of the ruling government. But I don't think that is happening. I go with the exit poll numbers broadly. We were there for about a week from 1st November till 7th. And at least in the areas where we traveled, Patna, Darbhanga, Muzaffarpur, Purnia, Kishanganj, one could sense that the opposition has lost the plot and it is not able to somehow galvanize either its cadre or the voter. And you could also feel and sense the lack of big leaders, star cast. On the NDA side, you had it was like a multi-starrer from Prime Minister to Amit Shah to Nitish Babu doing 5-6 rallies a day to Chirag and a number of hosts of central ministers. From the NDA, from the Mahagathbandhan side, it was largely left to Tejasvi Yadav to shoulder the burden of the opposition alliance. So one looked, from a distance, it looked closer. But traveling through Bihar, at least this part of North Bihar, it looked fairly that NDA clearly had a decisive edge. So I would go with the numbers.
Yeah.
All numbers. Let's see. Still, 14th is the real result.
2020, 2015, Sanjeev, right? Both were bit of a, between exit poll and actual results, it was, there was a wide difference. So
that's very interesting, Prashant, you point that out. Yeah. Exit polls, yes, they go wrong sometimes. In Bihar, they go wrong more times than in other states. So that is a bit of a rider. But again, at the risk of, one can never think of oneself as having understood Indian elections or how the voter will behave. But the sense we got traveling through these 4 or 5 major areas and for a week, which is not a lot. You would really have to travel for months to really figure out an election. Maybe you can still get it wrong. But the sense was overwhelmingly clear to us that the NDA has an edge. So if there is a surprise, we'll also be humbled and accept it on 14th. But I don't think that's my assessment.
Okay. Got that. The Prashant Kishore factor, negligible, Sanjeev?
So 2 things, Prashant. One, that Nitish health, whether he's fit enough and everything is fine, and Prashant Kishore's X factor. These 2 things both looked bigger and more significant before you reached Bihar, sitting in Delhi or wherever you are. But once you hit the ground, both factors were diminished. There was Prashant Kishore, the areas we traveled in, we didn't find much traction amongst the voters. There was so much more traction amongst the pundits and the observers. Similarly, Nitish Kumar's ability and his mental faculties, physical health, and how fit and strong he is to govern, able he is to govern, those also look more like issues amongst the chattering classes of the political observers, pundits, journalists, fellow politicians. For the voter, if anything, it was reverse. They felt, "Hamara baap booda ho jayega, to ghar se nikal denge kya? He's fine." So Nitish Kumar is truly an enigma. I think after Naveen Babu, who lost last time, Odisha, Nitish Kumar is truly, because like I keep saying, Tejasvi comes across as the most popular guy on the road. But Nitish Kumar in the end tilts the balance, that who will win, who will form the government, that for the last 20 odd years has been decided by Nitish Babu.
Yeah.
And it's likely to be the same this time. Now the
Sanjeev.
only question which remains is where...
Yeah, lots of questions, and this is a discussion that we can continue, and we will continue to have, and we'd love to hear your thoughts when the actual results come through, but you're saying for now you'll stick with the exit poll results and what they're showing. Thank you very much, Sanjeev. Appreciate your time here on CNBC TV 18. 4 minutes to go for market pre-open session to kick off. We have the management of Zaggle joining us on the second quarter numbers which have come through. We also, of course, will get you technical calls. Sudarshan and Mitesh with that, as always. Stay tuned.
Welcome back. So we'll start getting our pre-open rates. In fact, they have started coming through. 79 points up on the Nifty as of now. Remember, the implied open was telling us that we'll probably start gap up 150 points higher, given the exuberance around the Bihar exit polls and the fact that, there's some positive overtures on the Indo-US trade deal front as well. We've got our technical experts joining in. Sudarshan Sakhani is with us along with Mitesh Thakkar as always. Gentlemen, good morning to both of you. Sudarshan, let me open with you. On the index, what's the strategy today?
Good morning. Well, I'm very pleased. On Monday, we said go and buy. Yesterday, I said go and buy, and Nigel was there, and he is an F&O expert. So I explained that there will be a dip, there will be some choppiness because of F&O expiry. Ignore it, stay long. So anyone who had the courage to stay long on these 2 days is making a decent amount of money. Today is a different day. First of all, I'm not a big fan of buying gap ups. If you see a gap up, take profits on half your positions and tighten your stops very sharply to 25,700. If it goes below that, exit with all your profits. If it doesn't, then look for a small dip to re-enter for those who don't have positions. But today is not a good day to buy.
Today is not a good day to buy, and 25,700 becomes an important stop loss for those who already are running long trades. Got that, Sudarshan. Mitesh, what about you? How are you looking at this opening? If we get a gap up between 70, 100 odd points, what should the approach be?
My idea is that 25, 750, 800 was my first target for this bounce back. And once we start getting past that, then I think, we'll look at a retest of 26, 100. So I think 25, 800 is the level which I'll watch closely. Post the gap up, if there's not enough follow through, not enough strength on the upside, then maybe take profits, reduce a long exposure and wait for a pullback to happen and then enter. If we continue to slice or get past 25, 800, I would maintain my long bias and head towards 26, 100.
Okay, all right. So we are exactly at that level, critical levels on the index. And the index is right now looking at a 100-point up move as we are checking the pre-open. What about individual stocks, gentlemen? Mitesh?
I've got a lot of IT names. So Persistent was a buy yesterday as well. Now can be bought afresh with a stop at 50.70 for targets of 61.50. KPIT Tech is a buy with a stop at 11.90 for targets of around 12.55 to about 12.60. Buy on Bank of Baroda with a stop at 282 for targets of 295, and Coforge is the final buy call. Keep a stop below 1780, look for targets of 1830-35.
Gentlemen, morning. Sudarshan, morning. What about you? What are your trades?
Well, Hindustan Zinc is a buy with a stop under 480, and metals have been coming in this list. HAL is a buy with a stop under 48.65. Remember, I have some small shares in HAL. BEL is a buy with a stop under 420, and Manappuram is a buying opportunity with a stop under 270. It's an all-buy list. It's much better to focus on stocks today.
Okay, focus on stocks. Got that point, gentlemen. Thank you very much. We'll come back to you a little closer to market opening. For the time being, let's put the spotlight on some interesting earnings reactions. That's BSC. That's definitely looking very, very good in the pre-open session, 6% higher. The other is Zaggle. Zaggle, by the way, has actually increased its top-line guidance for the year. It was 35 to 40% earlier. Now they're saying 40 to 45%. So let's straight away get to it. In fact, we have the management joining in to talk about what has been a strong second quarter for the company. Avinash Gokhandi, MD and CEO at Zaggle, is with us now. Avinash, great to have you in. So what makes you confident about this guidance revision? Is it, more contracts, more deals coming through? I mean, just explain to us. It's also been overall a very good quarter with margin expansion.
Yes. Thank you so much for having me, Subi. Good morning. It's been a great quarter and we see great tailwinds, lots of momentum building in the business, lots of consolidation happening in our space. We're seeing a lot of opportunities come to us. And we've been speaking about this consistently, and that is actually reflecting now in the numbers. So that's what makes us very bullish. We see great opportunity for the coming quarters as well.
Okay, all right. Hi, Avinash. Good to see you in. So upping the top line guidance and your margins as well, seem to be in a good space. Tell us what's the trajectory out there. And also, since you're sitting on a pile of cash, you had hinted last time around there could be some more inorganic growth. Should we hear something in the second half of the year?
Fingers crossed, absolutely, yes. We will announce hopefully more interesting activities in the inorganic side. And on the margin side, look, we've already given a guidance of 10 to 11% for this year. We've said in about 5 odd years, we will be at about 14, 15% level. And about 5 to 7 years, we'll be $1 billion in revenue. So we are on track to achieve that. And things are looking great in terms of momentum for us. And a lot of new areas like our fleet management has started to really show great traction with exceptional wins, Adani Total Gas being a very big one, Medha Gas being another one. So a lot of big wins coming in, newer lines of business as well.
Okay, all right. And you said $1 billion of revenues is where you're going to be looking, you're going to be headed by when?
In about 7 years, yeah.
In about 7 years. And how much of that would be inorganic?
Difficult to say that with precision. 7 years is a very long time. I may lose all my hair by then, but
The street will be
organic-
okay if you lose your hair as long as you get to the $1 billion.
we will, God willing, yes, we will. And a lot of it would also be organic. See, end of the day, the business so far has been built largely organic, and we see great tailwinds. Overall, spend management as a space is really getting appreciated in India today. And our Brome product, where we are seeing awesome traction in terms of the petty cash, the utility bills. So many companies have petty cash leakage. They have compliance issues there. The system really works beautifully, overlaying on top of UPI. UPI typically is a B2C use case in India. We have converted that into a B2B2C use case here. And that's the innovation where it allows us to be able to give the same benefit to the user while giving all the controls to the corporate. So it's a great marriage there.
So, Avinash, you have retained your EBITDA margin guidance. You've upped the revenue guidance. EBITDA, you're saying margins should be around 10 to 11%, right? This is despite, I think, in the second quarter at the gross level, there was some pressure in margins. Can you just walk us through what's going in the margin mix and, which of your businesses will be perhaps more margin accretive in the second half?
See, margins and momentum in our business always is second half H2 heavy, right? There is seasonality in the business. It's a 40-60 sort of split, give or take. And margin expansion also tends to happen in these quarters at times. In some previous years, it's not been the case, but operating leverage has really started to kick in a big way. So we see the opportunity to expand margins in the coming 2 quarters is also there. Overall, I see margins growing this quarter. Also, our margins have improved from last quarter as well as last year.
Avinash, good speaking with you, and seeing the hair on your head, I don't think you will. You got to worry about that at all.
So doesn't really matter in the larger scheme of things, honestly.
Nice crop of hair there. Thanks very much with that aspiration, the guidance, and good luck to you and your team as you continue to execute. Appreciate it. Well, it's Zaggle, which is up about 3% or so on the price right now, 385. Well, I think maybe just look at the end of the pre-open session, right? Just a bunch of names as we kick off the session. And, we're going to shine the spotlight on Tata Power in just a bit, and Vivek will come up with that as well. But some of the other kind of stocks, right, which should be up on your screen. IT services, maybe just look at whether there is any reaction whatsoever. Infy, TCS, HCL, Wipro, etc. IT index is up 0.5%. By the way, I think yesterday the IT services index did well, and day before yesterday they did quite well as well. So it's a small, higher start, but small. 1/3%, 0.5% in that range is what you have. BSC should come up on your screen. The reported numbers, and we should look at that. I mean, the other one, of course, BSC is up 5%, and I think I saw a 2,900 rupee target by I think it was Jeffries or someone who covers it. Tata Power will come up on your screen as well, which is related results reactions. There's a bunch of other stuff. Yash was telling us that Max Financial has reported a strong set of numbers as part of top 10. We should look at that. Max Financial is down about 2%, 2.25% at this stage. What else? Thermax, Container Corporation, PI Industries, so many other things which came through. And of course, I mean, the Gokuldas export stock, which I was only half jokingly calling as the India-US trade deal indicator. It was, by the way, it ended about 4% high yesterday. Flattish right now, nothing very much. 870 on Gokuldas exports out there. 9:10 call. Sudarshan and Mitesh are with us. Sudarshan, what do you have?
Manappuram, buy Manappuram with a stop under 270.
Okay. Manappuram for Sudarshan. Mitesh, what about you?
I'll go with a buy on persistent for targets of 16,150.
Okay. All right, gentlemen. Thank you very much for those calls. So 140 points up on the Nifty, very much in sync with what the implied open was indicating at 8 a.m. Tata Power reported numbers and the quarter didn't look that great. They had a shutdown in Mundra. Coal business was also a bit sluggish. Back to Vivek for more details on what brokers are saying. Vivek?
Well, that's right. So many moving parts, especially when you look at a large regulated entity like Tata Power. And like you rightly mentioned, given the fact that Mundra was shut down, Section 11 was not extended. That was one thing, that the street knew would happen. And along with that, even when you're talking about some of the other issues that the company was facing, especially with regards to weak power demand, also went ahead and impacted the overall performance. Now, especially when you're looking against that particular backdrop, also given the fact that Indonesian coal mine profitability was impacted due to moderation as far as coal prices was concerned, the other aspects of the business stepped up this time around, especially Odisha Power Discom performance was very strong, up almost 4x on a year-on-year basis. Also, the solar cell and module manufacturing facility ramped up as well. So that is something that actually offset some of the other negatives in this particular quarter. Now, when you're talking about what brokerages had to say, Axis Capital has maintained a buy stance. What they're saying is that one positive was the company reiterated the guidance of close to 25,000 crore capex in FY26, especially in the backdrop that renewable energy capacity addition was quite muted in H1, but the company expects that to ramp up significantly in H2. JM Financial has maintained a buy stance. They've gone ahead and raised the target price to 475 from 436 that they had earlier. They're saying some of the key highlights include the stabilization of the 4.9 gigawatt integrated solar cell and module manufacturing, acceleration as far as the third-party rooftop solar, and the order book there is quite steady at little over 1,000 crore rupees. Odisha Discom PAT up almost 4x. And one of the key kickers and the key triggers will be the anticipated signing of a supplementary PPA with the Gujarat government as far as the Mundra UMPP is concerned. Once Gujarat is done, there will be expectations that there could be PPAs coming in from the other states as well.
Okay, all right, Vivek, thanks a lot for that. Let's focus on the big mover, though, on the upside. BSE, the stock had come down closer to around 2,000, and now it's on the way to around 2,800. Numbers look good, sir.
That's correct. So what we have talked about, that currently, like all the turnover data that we have been seeing over the last few months, it remains strong. And after the expiry day was changed, the company continues to say huge turnover. On the first day of the change in the expiry date, it had seen a turnover of almost 50,000 crore. And as far as the earnings are concerned, the company has reported earnings that are higher than Bloomberg estimates. On the operating revenue front, it was up almost 12% sequentially, 7% higher than the expectation. And transaction charges, which is the largest contributor to the revenue, was up almost 8%. Even EBITDA has increased by 10.4% sequentially. Margins see a contraction of 64 basis points. That was mainly due to higher regulatory charges, which had increased by 26%. But overall, earnings look very strong.
Okay, all right. Thank you for that. So clearly, BSE is one of the key stocks. And I was just looking at, since we'll have that Grow listing, and Grow is in all probability going to overtake, all the others in terms of market capitalization, it's all set to list somewhere around 65,000 crores of total market cap. So stocks like Angel, Motilal, MK, a lot of the other brokers will be in focus as well, though the indication was that it'll probably be a flat start.
Absolutely. And I think, it'll be right up there, right? Largest discount broker, by the way. So it's going to command a very large market capitalization when it opens up. So what do we have? First rates are starting to come up, 25,828. It's about 0.5% higher. Nifty Bank is up about 0.35 or so, 0.5 I think now. So settling down. Small cap index is higher, mid cap index is higher. So it's a pretty green looking screen out there. 25,800, we're already there. Next stop is 26,100. Those are the levels we put out in the morning. So let's see if the market consolidates around this one, around the 25,800, or it continues to march up. But it's a good gap up that we have on our hands. The CNBC-TV18 heat map gives you a quick sense on the Nifty 50 names, how we are starting. So you got Max Health and Bajaj Finserv on one end. Bajaj Finserv, Bajaj Finance were the two big losers yesterday. There's JSW Steel, which is in the other end, which is the loser. JSW Steel and Nestle in particular. So 117 points higher on the Nifty is what you have. Surbhi.
Yeah, absolutely. Recovery in the Bajaj twins. That's something to track this morning. Bajaj Finance as well as Finserv. Finserv also got smashed yesterday. Both of those stocks are up between 1 to 1.5%. Max Healthcare pushing a gain of 2%, making it the best performing stock on the Nifty this morning. Reliance is batting quite nicely for the bulls. Reliance is up a little over 1%, 18 bucks higher on Reliance, so that one's quite steady. And the IT names, they have continued to chug along quietly so far this week. And in 3 days alone, some of the large cap IT names have put on between 2 to 4%. So quiet gains coming through for TCS, HCL Tech, Infosys once again this morning, taking their tally to about 2-3% for the week. Bharti Airtel is the other one that's on the upside. Eternal is up about 1.5%. On the downside, not too much, apart from JSW Steel, maybe a little bit of red on Sun Pharma and HUL. But that's it. Nifty is quite steady with a gain of about 128 points, 25,800 plus. And this is where our technical experts were saying this is where the big fight between the bulls and bears will be. And we'll see over the next couple of hours who prevails. Nigel.
Well, that's right. Kirloskar Oil from the broader markets, that's a stock that's doing very, very well. I'm just looking at the revenues. That's up closer to 30%. The EBITDA margin as well, holding closer to around 20%. I think the street likes the big top line growth that we've seen on Kirloskar Oil. So that's clearly the stock of the morning on the upside. BSE already pointed out that stock has opened up a gap up. GSFC, that's another stock that's reacting positively. You have Belrise as well that came out with its set of numbers. I was reading a first cut, Jefferies first cut. They've been quite positive on the stock. They like the numbers. The stock is up closer to around 2%. And Zaggle as well. Management just joined us, sounding very optimistic. And the street is buying into that. What else is doing well? Ecos India Mobility, the stock is up 14%. Bazooka move is what we're seeing on this one. Big up move on this particular name. Parag Milk is another stock that's up 8.5%. So good move is what we're seeing out there. I think these are earnings reactions that we're seeing. And IOL Chemicals as well. The numbers look good, very good on a year-on-year basis. I recall having a look at those numbers. So that stock as well up closer around 10%. What's not doing too well? Orchid Pharma. That's selling off. That's down closer around 8% as we speak. So big negative reaction to the numbers. Orchid Pharma now down 8%. Let's pull that one up. PI Industries was down 3.5%. Numbers a little bit softish, but it's recovered a little bit from the lows that we saw a couple of minutes or so ago. Now it's down closer on 2%. And Landmark is another stock that's under pressure. Net, a good start, but you'll want to end with a solid gain because the gap up should not get sold into. We'll give you a sense in terms of the structure of the market as well.
No, just one more stock, Nigel, to add to your tally. Look at Sirma Go. Sirma is up 5-6% today. It was up in a big way yesterday as well after numbers. The numbers are very solid, 150 basis points margin expansion, some 37% top line growth. So it's really piling on the gains this morning as well. Prashant.
No, absolutely. And I think, Sirma continuing the gains. Just a bunch of other new names, right? So I think Max Financial we should pull up. So it's up about 3%. And I mean, the gains are okay, but volumes are very large. It's the third largest volume-led gainer on the NSE right now. Kirloskar Engine Oils is shooting up 12%, right? 1,057 on Kirloskar Oil engines and on your screen now, about over 500,000 shares on the NSE now. There is Yatra, which is coming up with a 6.5% pop at this stage. So 176. Transformers and rectifiers, it's not the price, it's the volume. So 2 days, the stock crashed, I think, 20-25%. It's unchanged, but look at the volumes already on this one. So lots of back and forth activity there. 1%, 1 million shares on in terms of volumes on NSE. Something called I value. Did we mention this? 6% on this one, and it's only coming up on my screen because it's got volumes, huge volumes. 316 on I value. We'll try and look up the stock on this one. IOL Chemicals. I think we mentioned this. LTI Mindtree is up about 2.5%. EID Parry is up about 4%, and so it goes. So it's about 2:1 in favor of advances at this point in time. Hindustan Copper had a massive move yesterday on the upside, ended about 7% higher. It's the top volume-led loser. It's only giving back 3% of that big move yesterday, but it's got volumes. And you got Aether, which is down about 2.5% on the downside. MTAR Tech is down about 3%, had a big move yesterday. Thermax is down, Office is down 6%. And so it goes on the downside as well. So it's a good-looking screen overall. 100+ points on the Nifty is what you have. Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment. Rana, good to have you with us here. Thanks very much. I just want to start by asking you, this new listing today, Grow. I mean, I think it's a business which most people understand because most of our audiences would use some form of broking, if not Grow. So they're familiar with how the business works. And of course, I mean, capital markets as a theme is also has been on everyone's list as a secular kind of theme for many years. How would you think about a business like this? Rana, in terms of the valuations you would ask, that you would give. So at the price that it came to the market cap it was asking for on F5 27 basis, I think Groww comes to you at about 25, 26 times earnings.
Sure, thanks for having me. The way we look at the digital businesses, particularly the ones which has a very large TAM, like let's say financial services, and if the company is vertically integrated on the back end and can offer a plethora of financial services, not just broking, they stand the opportunity to gain from cross-selling to the customers different kind of financial services, wealth management and commodity trading and whatnot, at a very low customer acquisition cost. So if one were to take a slightly longer term view, like 2 to 3 year view on these companies, I think their profits growth going to be quite strong and their valuations will perhaps be a little premium to the traditional, let's say, offline brokers and to also the premium to the brokers that are online and offline. Just a data point, you look at the largest digital online broker at the moment and look at the one that is listing today, their top line is broadly the same, but the bottom line, there's a huge difference. I think that is the power of platform that one has to recognize.
Yeah, and we'll see how Groww does in its listed market journey, and we'll have the rates in just a bit from now. Rana, good to have you join in. What have you made of the Q2 earnings season? I mean, we started the year with expectations of at least 12-13% earnings growth. At the end of Q2, you think we're on track with those assumptions?
So we started the Q2 earning, as far as we are concerned, we started with about 10% earning growth for the year. And looks like, if I now factor in Q2, looks like pretty much we're on the track to deliver 10%. Having said that, I have to say that the earnings surprises has come from some of the financials, where the earnings were very good. Auto results were expected to be strong, but they have become even stronger. And from our side, what we feel is that domestic infrastructure companies, and by infrastructure, we define something like telecom, hospitals, hospitals, and all those things. They have also come quite good for us. So I think for the full year, we are quite confident that 10% will be delivered. The attention of shifts to FY27 and 28, where the projections is about 15%, whether that comes through or not. If in case it comes and our conviction on that is high, and we can talk about it why, then it will point inflection in earnings. If you zoom out and if you see FY25 and FY26, earning growth declined from 15-17% to more like 8-10%. Then if these earning estimates were to come through, it will inflect back to again from 8-10% to 15% in 27 and 28, which is something we are quite hopeful about.
Hi, Rana. Good to see you. Ben, I wanted to ask you about the space, the quick commerce space. There was a lot of enthusiasm, and these stocks did very, very well. Now, silently, these companies have gone ahead and they've given actually quite a large correction. If you look at Eternal, it's closer to 300 rather than 370 that we saw earlier, this month. Even Swiggy is way off the peaks that we have seen. Any view on this theme? They're getting money. When they go to raise money, they're getting money. Swiggy, for example, they're going to be raising 8-10,000 crores or thereabouts, in spite of having good amount of cash. What is your view? The runway seems to be big. There's a fear that intense competition comes in there. And when will profitability come? Your take.
Sure. First of all, let me just unequivocally say that we like the digital space.
Okay.
Because the digital space this kind of connects the large customers with a good back-end supply. But because the company is digital, that is not a guarantee to success. After you establish that, after we establish that we like digital companies, there are many key result areas that we need to monitor. For example, for quick commerce, the store productivity, the profitability of the older stores, the order value, how the company is pushing technology to the edge to tick those matrices up. On that count, the largest quick commerce company rates actually quite well. And this kind of fear that comes to the market that just because someone is putting $1 billion, they will be able to compete with their profits. I think they may have some merit, and that can affect 1 to 2 quarters. But for medium to longer term investors like us, it's we would like to see this as an opportunity.
By the way, we should tell our viewers that Tata Motors' CV business is going to be listing as a separate entity. Demerger is complete, and now when you have the option of playing the PV side or the CV side in different entities. And on that, Rana, where are you? Let's talk autos with the specific focus on CVs first. over the last at least couple of months, numbers have started looking a little better. In fact, I think we're expecting Ashok Leyland to come out with a very good set of numbers again for the second quarter. So how do you look at a large entity like Tata Motors? And I mean, without getting into it's not a buy or sell question, but generally this demerged structure, would it perhaps offer more choice and unlock more value?
Again, we would not be able to talk on stock specific, but in this case, the merger that has happened, the passenger vehicle business still carries JLR, the Range Rover and all these things. I think for us sitting here in Singapore or for people sitting in India, it's very difficult to understand how a luxury car platform is going to perform, especially directionally when they were at a lower utilization, one could have taken the direction call, but now that offer at near utilization, incremental margins, at least we find it very difficult to call. So that being said, I think on the auto side, the commercial vehicle side was commercial vehicle was the other question. Commercial vehicle will typically depend on the industrial activity and the capex that we see. I think capex will continue, but we are not seeing that incremental delta will come through capex. So perhaps CV sales have bottomed out and they will grow at a pretty, let's say a higher single digit phase. But that's, I think, not very exciting as far as we are concerned. In the auto space, what we continue to like is the utility vehicle space, because, the premium consumption, I think, was strong already. And with this tax cuts that has come in, I think it gets another boost. Although I understand that small cars and entry-level two-wheelers have done well for September and probably continue till December, our medium to longer term view is the segments that were doing well, which are like bigger bikes and utility vehicles, will continue to remain stronger for longer. So that's the space that we like in the auto.
We leave it there. Thank you very much for joining us. With that perspective. Always helpful, Rana, and good speaking with you. It's a busy morning both at the BSE and the NSE, and maybe we could just quickly show some visuals. So as Surabhi said, at the BSE, there is the Tata commercial vehicles business, which is going to be listed. We understand that the Tata Group chairman, N. Chandrasekaran, is going to be there as well. And
as the Grow management.
Yeah, on the NSE, on the other side of the screen, you've got the Grow management, and we will, we will try and maybe we could just quickly listen for 30 seconds and see what's happening at the NSE with Grow. Let's listen in.
Achieving its rightful place in the world of very fast-changing technologies. As we ring this bell today, we do it with pride, humility, and optimism. Proud of what Grow has achieved, humbled by the trust we have earned, and optimistic about the opportunities ahead. Thank you all once again for joining us on this special day and sharing with us your joy. And now it's my pleasure to invite our co-founder and CEO Lalit to share more about Grow's journey so far, vision and road ahead. Thank you.
Gaurang Shah, chairman of Grow. Let's just stay with visuals. I think people would like to hear from Mr. Keshre, and we'll have him come up. Lalit Keshre, of course, has been the face of Grow, and we should sort of cut across to it for maybe just 30 seconds or so, right? I mean, it's a capital market play. There you go. Let's just listen in.
I came to Mumbai in year 1999 with my grandfather. And this was the place where I came to know about, that somebody can invest in stocks. Like you can own a piece of the company. I was super fascinated by how you can own a piece of a company. And that's how the journey started. I opened my account. Of course, it was very complicated, very tough. It took me a lot of time to convince the bank manager to kind of open the account. But today, here we are in 2016 when Harsh, Neeraj and Ishan and I started discussing. Our idea was very simple. Can we make this process, can we make this process simple, transparent and delightful for customers? Can we make it on a mobile phone? And if we were also very sure that if people know that they can build wealth, they can grow their life and everything by by being aware about just simple thing that you can own a stock. This was like the realization. The second story is about the confidence of the new India. As part of our customer engagement, all of us visit across the countries, smaller cities across the countries. And then I was at one of those events, we call them Ab India Karega Invest. And I saw a father-daughter duo sitting in the audience, and the daughter, very young, almost half the age of the entire kind of room, and she was asking so sharp and so confident questions. And I got a chance to meet them after our kind of event, and I could see the sharpness in her and the confidence. But what was more important, what was more amazing was how her dad was.
Well, I think we will continue to hear out Lalit Keshre and other co-founders at Grow. So it's an incredible story. It started in 2016.
Yeah.
And 60,000 crores, I think, was the asking market cap valuation. I mean, that's how, with this new age, you can scale so rapidly, right?
And it all happened around COVID. I mean, 2019, the story really started picking up, 20 onwards. And I mean, they came as outsiders, challenged, disrupted a business that was being run by very well-entrenched, very well-established names. So that's the Grow story, and we'll have more on it in just a bit as well. And of course, more on the Tata Motors CV listing as well in a bit. But for the time being, let's turn our attention back to the UBS India Summit. And we have more voices now joining in. Sunil Tirumalai, Global Emerging Market Strategist at UBS, is with us. Sunil, great to have you on. Thanks so much for joining in. Interesting times, right? The summit is happening at a time where so many companies continue to list in India. They keep getting the money as well, at a time when a debate rages on the secondary market that, it's not attractive enough and not enough tech opportunities, so on and so forth. Let's start right there, because I think in your latest note, you are continuing to be underweight on India, and you prefer China and some of the other regional markets as well. So just juxtapose, to us, what is the reason behind your call, and how do you contrast the secondary market underperformance versus this absolutely exuberant primary market?
Thank you, and good morning to all your viewers as well. Yes, it's a very interesting time. So particularly for the India context, after a year of deep underperformance, are the things which are changing? Are corporates, giving you any positive signals? That's something that we are really keen to understand over the next couple of days. I think coming to your question on our positioning and in our underweight position on India, there are a few, reasons behind it, right? If we actually look at the last 3-4 years of actual fundamental performance that we see, delivered by companies in India, the listed companies, the large companies in the index, you actually don't see any extraordinary growth or, either on top line or on earnings. It's pretty much in line, if not a tad lighter than the rest of emerging markets. The markets which are actually doing far superior are the tech markets like Taiwan, Korea, China too. And I think it also starts with the fact that the nominal GDP growth has actually come off significantly. And that matters a lot more for stocks, for top lines, for earnings, etc. Till let's say pre-COVID, or even till 2 or 3 years ago, India's nominal GDP growth was head and shoulders above other emerging market peers. But now it's not. There are other markets which are very within touching distance, right? So while that could stabilize and there could be some improvement, we don't see a catalyst that can take it back up to 12-13%, kind of, nominal GDP growth. In the absence of that, the valuations are actually, reasonably rich. So, in our numbers, historically, India used to trade at a 35-40% premium to other emerging markets. It's now, even after a year of underperformance, it's still at a 60% plus premium, right? Now, in the context of all this, the report that you're referring to that came out this morning, actually, we've done a lot of work on the AI theme itself. It's a global effort, trying to understand where we are in the cycle, how much, more to go at a global level, and which countries, which stocks are more exposed, etc. India is conspicuously absent, on that theme, and I think that's something that, from a global investor's perspective, other markets like China, like Taiwan, like Korea, which are giving you better opportunities. Now, the specific question on the secondary market versus the primary market. I think that's actually one of the reasons for the underperformance of the secondary market. So if you actually see, no doubt the flows of household money into the stock markets is continuing. SIP investments, the flows are fairly high. They're not going much higher anymore. I mean, they're kind of showing signs of plateau. But the other interesting change is that the capital raise activity by corporates has actually shot up significantly. I mean, when we did some numbers pre-COVID, the total on a run rate basis, about 10% of the money coming in through SIP and mutual fund flows and other direct flows into the market from households, about 10% of it was the scale of corporate demand for equity capital. Now that number is touching 25%. And combine that with the fact that foreigners are also not excited. They are finding other markets to invest, and hence money being taken out of India. That's what is preventing the secondary market to do well. So you have a decent supply of paper. I mean, all these IPOs are good. They're really good headline material, but it also means that's money being taken away from the market.
Sunil, you're building a very believable, compelling bear case, justifying that call. So therefore, let me ask you, and we are barely, 3-4% at the index level, we're barely 3-4% away from the all-time highs. Given all the negatives that you described, the fact that MF flows have slowed down, there's no two ways about that, and FIIs have not returned, is there a possibility of some price correction in India? So far, it's largely been time correction. What do you see ahead for the broader market, for the index?
Okay. So let me take a step back. From a global perspective, we are reasonably positive on global equities, right? So, there's on S&P 500, there is a 10-11% upside till end of 2026. On our emerging markets target, it's a tad lower. So we are actually arguing for the US regaining leadership. The setup globally for equities is reasonably good. Global macro, on our economist numbers, US economy should start, revving back up and, accelerating in the back half of next year. China numbers, while they are slowing down, they have actually been upgraded from what it was a month ago for the next year. And in this context, where are valuations? And, let's look at the rates market. There is an anticipation that potentially the Fed could start expanding their balance sheet. There will be stable coin demand in the US. I mean, all of that will keep yields in check. So it's a reasonably benign environment for global equities returns, right? So I think it will be really hard for more than a 5% correction, in the market. Of course, we need to be clear about a dollar correction versus a rupee correction. Our call is for the rupee to depreciate till end of next year. But keeping all of those things in mind, I think it's more likely that the time correction will continue rather than a very sharp price correction, because the supply of money from households is still continuing. That's a fantastic buffer, for the market. It makes it, very defensive and very protected against a big correction.
Okay, all right. Sunil, thank you very much for joining us, and good speaking with you here on CNBC TV18. I think, 90 points higher on the Nifty, 25,785. Is looking super strong. 2:1 is the advances to decline ratio. 1,800 up and about 800 lower. So still looking very, very strong. And by the way, BSE is moved up 6%. By far, the number one volume-led gainer on the NSE. Nigel.
All right. Well, let's focus on Fortis Healthcare. They reported a good set. Double-digit growth continues with margin expansion. We have with us Mr. Ashutosh Raghuvanshi, the MD and CEO at Fortis Healthcare, who joins us on the show. Hi, sir. Good morning and good to see you. Ben, give us a few details. What's the outlook with regard to occupancies as well as the average revenue per bed? And tell us a little bit about how the case mix evolved in the past quarter.
Good morning. Glad to be here. The outlook is, as far as occupancy is concerned, we have had a good occupancy on an enhanced base of beds. We increased about 550 operational beds. On that, we had about 70% occupancy. On the organic basis, it was almost about 80%. So that trend likely to continue. However, third quarter typically is a quarter which has less occupancy because of festivals and holidays, etc. So we would probably see some dip in third quarter, but that should recover in the fourth quarter. As far as the case mix is concerned, we are continuously seeing a trend of more complex cases coming, as well as the surgical cases being higher in number. And that is what is driving the ARPOBs higher. However, if you see from the last quarter to this quarter, our ARPOB has more or less remained stable. It has not grown in the same proportion as earlier. And that's what I have been saying for some time, that these ARPOBs will get moderated. But the increase in ARPOB is exclusively a function of case mix and not a pricing change. So that's the trend which is going to continue in future as well. And we are pretty confident that the occupancy levels would remain high.
Okay, all right. Just to focus on the hospital business then, give and take everything that you said, for the year, we should be looking at what? Mid-teens growth, in the hospitals business with margin expansion of 100, 200 basis points. Gettable?
Yes, so we saw about 19% growth in this quarter in the hospital segment alone. And we expect that this trend would remain. So definitely mid-teens or high teens, I would rather say.
Okay, fill us in with the current status with the insurance companies. The company, there was that dispute with regard to cashless payments. Has that been resolved? Where are we at with regard to that?
Yeah, so cashless issue was not with us, but it was there across the industry. And that is, for now, it is resolved. Having said that, insurance, health insurance is a very, very important component of the healthcare ecosystem. Payer is as important as provider. And we expect that, the relationship between the two would improve. So a lot of dialogue is happening, a lot of engagement is happening with the insurance. And I think there are certain reforms which need to be done. And we are moving in that direction. So one of the demands which the insurance companies have is to get onto the healthcare exchange and have a kind of a...
Can I... Right. Can I just a specific question, sir? We reported this. Good morning, Prashant here, Mr. Raghuvanshi. And of course, I mean, this is with help from, of course, government as well, after discussions, that major hospital chains have agreed not to take price increases for 2026. Can you confirm that for us, if that has happened?
I don't think there is any such proposal. At least we haven't heard of any such proposal. But as I have been saying, that the price hike in the hospital segment has only been to the tune of about 1.5% year on year. So even if this year, whatever price hikes happen, is likely to be in that range only. As far as Fortis is concerned, we haven't taken a price hike this year. But early next year, we would evaluate whether a price hike is required.
So you're saying that there is no... Okay, so you're free to do what you want. You've not taken one this year. Next year, it's possible. But as this gets under more and more, and there is a fair bit of angst around this, right? Both on the insurer side and hospital side, and depends on who you speak to, and you get both views. But this is the issue which is going to come up, the cost of healthcare, right? And who's paying for it is getting more and more scrutiny, and I suspect that will only increase. Mr. Raghuvanshi, what is your own sense, sir? From a hospital perspective, do you expect this to get more look in from the ministry, government, etc. as well? In that sense, making it a little more harder for hospitals. Because I'm speaking to you, of course, some things may happen on the insurer side as well. But for now, if we were to talk about hospitals, price increases to get tougher.
Yeah, Prashant, I have always maintained that price hike is not a lever which the hospitals should be using. And that is our preference, not to use that lever. And as I was saying earlier, the insurance providers and the healthcare providers, both the payer and provider, are equally important parts of the healthcare ecosystem. And it's our responsibility to resolve these issues and make sure that the patient gets the best possible deal. So I think the effort is in that direction, and you are absolutely right. The government also is very proactive in this area. A lot of dialogues are happening as we speak, and we expect that these issues will be resolved not overnight, but over the next 1-2 years. You should see a lot of reforms happening in the payer-provider ecosystem.
Okay. All right, sir. Appreciate you joining in. Thanks a lot for giving us that insight. Wishing you all the best. And we look forward to speaking to you as the quarter progresses. For the time being, we slip into a short break. We'll speak with the management of Bharat Forge. Mr. Baba Kalyani is waiting for us on the other side. They reported a strong set of numbers.
Welcome back. Grow is settling at 112 rupees compared to an issue price of 100. Tata Motors CV, the price is settling at about 335. This is in the pre-open. The listing happens at 10 o'clock. So, interesting with both those. And we'll, of course, go across to NSE and BSE. As I said, it's a busy morning at both exchanges with these respective listings. Bharat Forge is the next business and company that we want to speak with. They reported a healthy set. Baba Kalyani is Chairman and Managing Director at Bharat Forge is with us now. Mr. Kalyani, good morning. Great to have you with us here. It's always a pleasure speaking with you. Prashant this side, sir. So the standalone business was impacted by sharp declines in North American truck production and, of course, the resulting inventory destocking. And of course, some of the other non-truck businesses made up for it. And I guess that is the guidance going forward as well. But can I get a sense, some guidance from you on the truck business side, sir, for calendar 2026 from you?
The truck market in the U.S., if you look at the medium and heavy trucks, that's down by almost 45 to 50%. And it's not just a 50% drop or 45% drop, but because of that, we have to also destock. So our supply is actually at about 30%. So when this gets to normal, and I hope this will get to normal once the tariff situations get to normalcy, not only with India, but with other countries, and that's probably like to happen by next quarter. So we see calendar year 26, second half, things to improve in this sector.
The OEM guidance for 26, companies like Volvo, etc., they're all forecasting some decline, right? At this point.
It is forecasting decline because they also have the problem of destocking. I mean, everybody was building at the rate of 350,000 trucks. So almost 27,000 trucks per month. And now they have come down to 14,000 trucks per month. So there is a hell of a lot of inventory, supply chain inventory, and all kinds of things. On top of that, they have to pay very high tariffs on most of their supplies. So it's a little complicated problem, I think, but looks like the problem is going to get solved, hopefully in the next few months. So we should see unwinding of this probably by second half of 26.
H2 of next year. What about the non-auto business, sir? Could you provide us, and we'll talk specific numbers there, but you think growth there continues?
Yeah, the growth there will continue because that's a strategy that we have put into place, that to grow our non-automotive business in multiple directions. And there are huge opportunities today coming up in that area. And there are high technology products. And we are good at that. That's something that kind of fits our profile. I can't say more than that because most of these products are pretty sensitive in terms of information sharing. But we see a large growth coming in the industrial products. One of the areas where we are seeing a massive growth is the high horsepower engines. Power supply, power generation, standby supply to all the data centers.
Oh, okay. Of course. Yeah, that's a budding industry. Lots of action on the data center front. Sir, got that. If I may ask you, sir, I know a lot of these businesses will build up over the coming several quarters. But if I could ask you for a ballpark understanding of how Bharat Forge consolidated will look like, say, by the end of next year, end of FY27, in terms of total revenue, how much is going to be automotive? Within that, how much India, how much overseas, and how much will come from these newer businesses, whether it's defense and there is aerospace, and now like you're talking about data centers, which is, industrials X of auto?
Yeah, I can't tell you exact numbers. All I can tell you is that, there are certain events that need to take place before we start seeing growth. One is the trade deal that needs to happen. And second is, in the U.S., the industrial and commercial vehicle production has to get back to normal. I'm not even saying it needs to increase. It just needs to get back to normal. These are, I think, two conditions that need to happen. As far as Bharat Forge is concerned, we have kind of taken a lot of steps to isolate us from that, and that's why even in the quarter that just went by, our consolidated data looked much better than this. We have one sector that is growing at a very fast pace, and that is our aerospace sector. We see our aerospace sector going at almost 25-30% annually for the next couple of years. So that's a very good thing for us because we have worked hard on it for the last few years. We have invested in it, and now we are beginning to see the results. And it's a very profitable sector.
All right. Hi, Mr. Kalyani. Good morning and good to see you, Ben. So let's touch upon a little bit about the aerospace business. As you said, you're expecting a big growth. I think at the end of this year, you're expecting it to be a 350 crore business in terms of revenues. Say in the next 2-3 years, how big can this business become? And also in the defense business, you have done a fantastic job. The order book is at around 10,000 crores. However, execution has been a little bit slow in the first half of the year. I think you're expecting the second half of the year to be much better. So what is the revenue trajectory on the defense business that last year did around 1,700 crores? How do you see this business scaling up for this year and post that?
This business execution hasn't been poor. It's just the process that is laid down by the Defense Ministry and the Armed Forces. It just takes a long time. I mean, there's something called FOPM and all kinds of things involved. So once that process is finished, from our side, execution will be extremely fast. Like you saw when we got the order from Armenia for artillery guns, we finished the order 1 year in advance. So execution is not the problem. I think the process is a little complicated process, but I think hopefully by next quarter, that process will get over and then we will start delivering guns to the Indian Army.
So by the end of this year, defense will look like what kind of revenues? I think earlier we were guiding for close to 2,000 crores of revenues. Will that be possible? Second half of the year can make up so much?
No. It will be similar to what we have today.
Okay.
Okay. Maybe some small increases because we are now getting. We just got an order for underwater systems, which we have to deliver. But all that it has to be delivered in the next 12 months.
Okay. Let's take a longer term view then, sir. In the next 2 years, what is the revenue outlook for the defense business where you're sitting on a super order book, and on the aerospace business, which is growing at a very fast pace?
A lot of growth 2 years from now in the defense, because it's not just one vertical of artillery guns or something like that, or we have a large order on small arms, but we have created 3 or 4 new verticals in unmanned systems, underwater systems. We now got an order for an underwater system that goes down to a depth of 1,000 meters. That's a technology which hardly anybody has in this country.
Yeah.
And similarly, we are targeting some unmanned systems in the drone, sophisticated drone area, kamikaze drones and others. We will know about it in the next few weeks. But there's a lot of work going on in our company on that.
A lot more questions, Mr. Kalyani. Just one last. In aerospace, do you supply directly to the 2 players, or you supply? You supply to supplies with in turn supply to the 2 Airbus and Boeing?
No. We have 2 sectors in aerospace.
Defense and
jet engine manufacturers. So we supply to Rolls-Royce. We supply to Pratt & Whitney.
Okay.
And we supply to Honeywell. These are 3. The only jet engine manufacturer we have not yet got orders from is Safran.
Okay.
All the engine manufacturers, we supply them rotating components, turbine blades, active components that are in the engine and the turbine.
Okay. Very quickly.
Titanium, high temperature alloys and all that. So pretty high technology.
All right.
We supply structural components to Boeing, structural components to Airbus through one of their tier 1 suppliers called Liebherr, where we supply landing gear components. To Boeing, we supply large components which connect the engine to the wings, a large titanium forging. So there's a variety of products that we do, and that business is just growing.
Very quickly, sir, some inorganic growth is planned. Have you got a fixed target? Because you're raising some money, I think 2,000 crores for both organic and inorganic. But should we expect some kind of inorganic growth?
Our overall strategy is to pivot our business to the India-centric business, because we believe that India is going to be the largest growing market for the next 15, 20 years. If you look at Honorable Prime Minister's Viksit Bharat program, whatever the numbers come out, whether it's 25 trillion, 30 trillion, whatever it is, the growth in India is just going to be fantastic.
Okay.
And focusing largely creating a tilt towards Indian growth. And that's where some of the M&As, inorganic activities will happen.
Okay. All right. Sir, thank you very much for giving us perspective on all of your businesses. And we wish you good luck with the second half. In the next couple of seconds, Grow will start its journey in the public listed markets. The prices settled at around 112 in the pre-listing session, which is actually a little better than the so-called grey market premium. And I think we have the entire top team there ringing the bell.
Some kiddos as well.
Look at the little babies. They love it. They love it. This is this.
117 rupees now, 70,000 plus crore in terms of market capitalization. So that is the picture at this point in time. I mean, 118 rupees, and it's a good listing. 112 was the listing price, and it's moved up from there. Tata Motors commercial vehicle business listing at 335 rupees per share at this stage. So Grow is, I think, 20% now.
Yeah.
And a lot of demand, a lot of interest. It's a business which people understand, and many, of course, use it as well. 30% higher on the Tata Motors CV business at this point.
I think if you just get those visuals back up, something Surbhi was talking about earlier, diametrically opposite, in terms of those visuals that are coming in.
Two different companies, two different businesses, right? You have
two different businesses, the suit and boot.
The suits and ties on the left, and then the usual jackets or the jumpsuits maybe on the right. One, a new age entity, a disruptor, completely redefined the way broking and especially discount broking, how it took off in the country, becoming the biggest broking entity with the largest number of active clients on the NSE. And of course, on the left, Tata Motors in its new avatar, now with both the businesses separate, PV and CV, looking to inspire more confidence. But yeah, Nigel, absolutely. That's what I was noticing earlier as well, right? You have the suit and ties on one side, and then you have the new disruptors on the other.
Well, and the babies always steal my heart. Beautiful visuals coming in there. I think the little champion got too close to the bell when it went off, and then he was all surprised. But that's about that. We take a break, I think, sir. Come back, and we'll be joined by the management of RITES. Stay tuned. Welcome back. Let's get straight to RITES. They report a good set of numbers in the second quarter. In fact, the management is confident of surpassing their FY25 revenue growth going forward as well. We're joined by Mr. Rahul Mittal, the Chairman and Managing Director of the company. Hi, sir. Good morning. Thanks a lot for speaking to us here on CNBC-TV18. Fill us in with the basic numbers. What kind of a revenue growth are you looking at? Last year, you were talking about, surpassing FY25 numbers. So on that sort of a base, what kind of growth? One, EBITDA margins as well as profitability margins.
Good morning. Yes, when we spoke last, we had said that our aim is to sequentially keep on improving and surpass the last year's figures, both in top and bottom line. And as you see the Q2 results, we are moving in that direction. There's been about a 12% growth sequentially. YOY, in any case, there has been a substantial growth in the bottom line. And also the margins have been able to, we've been able to not only secure them, but substantially above the range that we had set. So we are moving in the right direction, and we are satisfied. We're quite happy, in fact, with this quarter, in the sense that whatever roadmap we had set at the beginning of the FY, we are moving in line with that. So EBITDA margins of above 20%, PAT margins of above 15% minimum, and definitely a growth in the top and bottom line vis-a-vis last year.
Mr. Mittal, your order book is now closing in on the 10,000 crore rupee mark, right? So just tell us how the split is between turnkey and the other segments, and also which segment is going to be driving growth. How it's shaping up, and particularly your big India business on the domestic consultancy side, what is happening out there?
Yes, so the order book has been substantially growing. We've crossed the 9,000 crore in this quarter. We added 150 plus orders totaling to about 850 crores plus. So a net addition of about 300 crores in this quarter. And the turnkey segment is 4,300 crores. The consultancy is about 2930 crores. The export of rolling stock is about 1540 crores, and the balance is about 300 odd crores. So if you see the key drivers in terms of top line, the top line will be driven by the execution of the turnkey projects, but definitely the margins in turnkey are very low. The bottom line and the margins will be driven by my consultancy and the export of rolling stock. And that is what, if you see, has contributed to the Q2 performance also. It's primarily because of the contribution by the consultancy and the export of rolling stock segment.
So your EBITDA margin moved up to, I think, about almost 23.5% in Q2. Are these sustainable margin levels? Because I think your guidance for the full year is around 20%, but because Q2 has been so strong, how is the mix going to be? And then could the overall full year margin be better than 20%?
So you see Q2, because the contribution from the turnkey segment was very low. If you see, there's a 90 crore dip vis-a-vis YOY. And that's primarily because in the turnkey segment, more than 2/3 of my order book is less than about a year old. It's about 8 to 10 months old. And the actual execution and the revenue booking will start in Q3, Q4. So definitely the blended margins will, kind of contract and be in the range of about 21 odd percent. This quarter, the contribution was majorly from the export and the consultancy wing. About 90 crores of the dip in turnkey was offset by 90 crores by the consultancy and export segment. So that's why the margin, if you see in this quarter, has been slightly higher. But to my mind, on an annual basis, we'll settle in the range of about 20-21% EBITDA margins.
20 to 21%. Is there an increase in competitive bidding in domestically? And also just give us some color on exports. Obviously, is a very small part of your business right now, but you are looking to grow it. So just leave us with some, maybe some aspirational targets and what you're thinking in terms of exports going forward.
So you see, we had set ourselves a target of getting one export order a quarter last year. We started this about 7 quarters back, and we've maintained that steadily. Even in this quarter, we got an order for 160 crores for export of rolling stock. And now our export order book stands at 1540 crores. And this is the first quarter that the delivery started. So you see, after a long gap of nearly about 5 to 6 quarters, you see a booking of about 60 crores on the export of rolling stock. And this is the segment which is going to drive in the coming quarters. We are confident that we will continue to maintain a trend of getting at least one export order a quarter, and parallelly delivery on the existing order book.
Okay. All right. We'll leave it on that note. Thank you very much for joining in and giving us some perspective on the numbers. Thanks for being there. Well, we'll take a quick break. On the other side, our special segment, It's the Economy. Today, Lata is in conversation with Santanu Chakrabarti of BNP Paribas on his stock picks after the BFSI Q2 result period.
keep it with corporates. When the banking and NBFC result season started, the fear was there will be deep margin and hence profit cuts. But actually, the banking results season started with a bang, with the likes of ICICI and HDFC Bank barely showing any fall in margins, 4 and 6 basis points. SBI actually showed an increase in margins. But the end of the BFSI season was a bit of a dampener, with Bajaj Finance reporting, the king of NBFCs actually, showing a rise in NPAs and a rise in credit cost and lowering its loan growth target to 22 to 23% from the earlier target of 24-25%. So what's the final takeaway from the BFSI pack Q2 results? I have with me Shantanu Chakrabarti of BNP Paribas to take us through his picks. Good morning, Shantanu. Thank you very much indeed for joining us. Let me start with the last, Bajaj Finance, which has thrown a bit of cold water on actually all the BFSI stocks. The stock was down 7% on the day after the results. It is still your best pick, you say. Aren't you worried that their MSME loans are showing so much of red?
Morning, Lata. Great to be talking to you again. So yes, Bajaj Finance coming in out and guiding for a full year loan growth of about 22 to 23% was the clearest dampener out there, because all the credit stuff that you're talking about in terms of either credit costs or rise in GNPAs, while yes, there has been some worsening that they reported, the guidance range was moved by a very small amount. So what was earlier described as a 185 to 190 corridor was now made into a slightly wider 185 to 195 corridor. Now that, to ascribe a large price move to that level of precision will probably be spurious. So it is fair to say, probably in our opinion, that it is the disappointment around the full year growth, which you rightly point out is linked more to the SME segment, which they are saying is going to grow only 10 to 12% for the full year, is what led to the disappointment. Now, Lata, to be very clear, Bajaj Finance is our top pick within the NBFC space. But you remember this very vividly. I have had at one point of time, close to 60% kind of upside on the stock. But the stock has had a very sharp re-rating. So, in such a situation, even a small near-term disappointment tends to take a little of a stock price and probably given another opportunity for a set of long-term investors to come into this. Because when I step back from the disappointment of a slightly more muted overall growth in the next 2 quarters, what stands out for me is that they have not changed anything regarding their long-term guidance. And if anything, a lower base in the second half of 26 probably sets them up to put out a significantly more aggressive FY27 guidance than they would have otherwise. And finally, you have to see that, the SME problem, which they had been talking about, their specific segment, the other bits, including rural, has now picked up very sharply. And they, of course, like most other companies, they have spoken of a fairly strong October, and they're building into that strength. So from that point of view, I see the current dip as a very clear opportunity. Having said that, obviously, I prefer my banking picks in terms of upside a lot more. Bajaj Finance, despite the 7% correction, is in essence now still a compounding story, not the sharp re-rating story it was, say, a year back.
Fair point. For Bajaj Finance, the quarrel really is, it is still what now, 5.7 times book. So, the worry is it overpriced? But I'm asking you to take 2 other takeaways from the Bajaj Finance results. We are talking about an A1 company, a AAA company. And that company is telling us that they have problems with MSME and problems with SME. Now, where did all the banks show their increase? Take Axis Bank. It was their MSME, their business segment, which they said grew best at about some 16%. ICICI grew that segment by 29%. HDFC Bank grew that segment by 16%. They're all A1 banks. But would you worry that MSME may be the next fall? That we may, if Bajaj Finance has faltered, won't you see it in the other banks when, the reckoning comes next year or something?
Right. So I think the first buyer beware I would like to start with is MSME is a very dangerous jargon in the Indian financial services context because it can mean a lot of things. It can mean
defined differently.
Yes, it's 80 lakh rupees or 70 lakh rupees for a Bajaj Finance top-end customer, while it may be 750 crores for a bank customer. So we have to be really careful in parsing through what each of these definitions mean. Having said that, I think, even within the unsecured working capital loan business, which a lot of the NBFCs did, which was essentially a top-up on an existing term loan for a fully banked customer. And, some of the larger ticket LAP aligned segments have been showing some stress for 6 to 9 months. Now, the reason you don't see too much worry around that within, say, a HDFC or an ICICI, or for that matter, even an Axis, is merely because in the context of their particular balance sheets, that's not a very large amount. And what they call, SME, even within their retail fold, probably has slightly higher ticket sizes. So we just need to parse it a little bit.
Fair enough. Okay, let me hope that, we went through a big infra loan cycle in the 10 years ago, and then we went through MFI cycle, and then we went through unsecured loan cycle. I'm just worrying that it should not be an MSME cycle next. Thank you for allaying my fears. Now, just tell me, what's your pick of the pack in the NBFC space other than Bajaj Finance?
So, so we also like FedFina, but again, a lot of the re-rating has already happened there. We are neutral on something like an HDB because we think it's a decent compounding story, but a lot of the valuation is already there. And we have, our top reduce, if you will, or underperform is essentially SBI Cards, which was probably delivered the 5th or 6th disappointment in sequence, and still stock has probably not corrected as much.
Okay. Now let me come to the banks, which you say is your far bigger favorite. You've upgraded Axis. Take us through that, because there was a disappointment with the asset quality numbers when they came.
Right. But, all things considered, if I look at the last 6 to 7 quarters, I think the market's next day reaction also proves it. This is perhaps the, best set of numbers vis-a-vis expectations that Axis has delivered in the last 6-7 quarters. Because every time Axis has delivered a set of numbers in the last 6 to 7 quarters, bar one, I think, the stock had corrected fairly sharply. So what positives do we see in Axis? Firstly, credit costs continue to remain elevated above what, say, their, if you define HDFC or ICICI as the peer set, then credit costs are significantly higher. And given, where even PSU bank credit costs currently are, or the slippage rates are currently going at, Axis looks a little higher than it should, given the quality of the franchise that we are talking about.
Okay.
But after a long time, there was better than expected performance on growth, profitability, operating economies, and such. And I think even today, what we have done is we have upgraded the targeted multiple from 1.7 to 1.9. Okay. Frankly, if this is a 15-16% ROE bank, it could command potentially mid-twos. So I have only unlocked a little bit of its full potential, given that there is some green shoots within the overall operating and ROE framework that they have been delivering.
Okay. What's your, finally, what's your expected earnings growth for the banking space for the current year and for next? Overall, Nifty earnings is not very impressive. Will BFSI earnings be much better?
So if I look at full year earnings, the growth is going to be low single digits in our expectation. So that's nothing to write home about. But please understand that, the fourth quarter of the previous financial and the first quarter of this financial was kind of the bottom of earnings growth.
Okay.
So if you start looking at the earnings growth, which the quarters or for the second half that is going to come in, I think by the time you exit the full financial year FY26, you'll be seeing double-digit earnings growth.
Okay. That means next year we should be expecting, close to 20% earnings growth from...
Potentially, if next year credit growth is also strong, What we could certainly say is that on a full year margin, just that delta between 26 and 27 can contribute 500 to 600 basis points of earnings growth.
Okay.
Plus whatever you do on loans.
Okay. Well, I will have to invite you for a bigger discussion on another day. Thank you very much indeed for joining us. With
My
your
pleasure.
quick take, we had two big listings today, and that took away time, and we couldn't hear our commodities expert, Manisha. Manisha, sorry for that delay, but what do you have for us today?
Thank you for that, Lata. Well, I'm talking about the aluminum prices because while they have been in flavor and the markets do believe that we would be looking at deficit and price increase going forward, but what the markets are dealing with immediate concern really is the premium in the US consumer market, where the physical market is trading at a record highs right now. So from where we were in the month of January to where we are trading right now, it's a 155% of an increase in prices for the US consumers of aluminum who are making various aluminum products there. So this is on the back of import tariffs, of course, and the tight supplies that we are dealing with in the global markets. So when you look at the calculation overall, remember, US has put 50% of tariff on aluminum imports starting 4th of June, and that clearly has disrupted the market. So US prices basically take LME prices as a base, and then they add premium to that. So when you look at the LME prices for aluminum, that is trading at $28.50 right now. The premium that US markets are commanding right now is $1940 a ton, and that brings the US consumer paying $47.90 a ton for aluminum prices, while the rest of the world or LME is paying just about $28.50, which by the way also is at a 3-year highs. So we are looking at the US consumer inflation clearly coming in for aluminum products in the higher markets therein. So you are looking at LME prices trading at a 3-year highs. We've seen prices gain up by 13% in 2025 till time, and there have been various reasons for that. The biggest one clearly coming in from China, which is reiterating preventing overcapacity in the metal production. Last year, they said that they will not increase capacity more than 45 million tons, and that the markets believe will be hit in 2026. After that, that means China is not going to produce anymore. You already are looking at higher energy costs in sense of Indonesia. Remember, nearly 34% of aluminum cost is energy, and that has been increasing as well. And then there are concerns in Iceland. You have problems coming out in sense of bauxite grades as well. And there is supply concern coming into the street, keeping the aluminum prices on the higher side. Also, there are various reports suggesting that you could be looking at a deficit going forward in sense of aluminum for this year and the next as well. A report from Panmure Liberum says that aluminum market deficit for the current year already stands at 1.8 million tons therein. Europe aluminum demand continues to grow. There is a various reports suggesting that consumption for flat-rolled products in sense of aluminum, that consumption could grow at 123% by 2032. So wherever that you look, the inventories, the production, the mining, smelting, consumption, all those numbers tell you that you are looking at higher prices going forward when it comes to aluminum, with the kind of strong demand that we are looking from construction, auto, packaging, even green energy for that matter.
Oh, wow. Okay, so that's bullishness on aluminum. And yesterday we had a JPM expert telling us that the very high copper prices, he's expecting it to go to 12,000 copper, will also have a magnetic impact on aluminum because of replacement uses, he says. So $3,000 was what he was forecasting on aluminum itself. Well, we'll hear more of that. Wrap up on Bazaar on that note from me and Manisha. Thanks for watching. Chartbusters coming up.
The Indian market opens higher with the Nifty rallying to around 25,850, led by the auto sector, banks and the broader market, which gains in line with the key indices.
Capital market services provider Groww makes a steady debut on the street. The stock lists at a 17% premium in comparison to its issue price of around 100 rupees. It's flying away as we speak, up more than 20%.
The demerged commercial vehicles business of Tata Motors lists on the bourses at around 340 rupees a share, which is a month after the listing of the passenger vehicle business, in line with brokerage expectations.
And shares of BSE jump in trade after a strong September quarter. The exchange's turnover data remains strong despite a change in the expiry day. Shares of IOL Chemicals surge over 10%, while Parag Mills surges 15% as the street cheers strong second quarter numbers. Office Space Solutions, however, is under pressure after a weak second quarter. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as we speak, Mangalam, it's a pretty good looking screen. We started off gap up 140, 150 points, and we're holding on to those gains. And I think more than the headline index, the breadth of the market is good. Two stocks advancing for one stock that's declining, though the Nifty bank still needs to get its act together. If that can happen, then we'll be on our way closer to around the 26,000 odd mark.
Take that point entirely, Nigel. You know, the way the market has moved higher, and at the same time, we're currently closer to the congestion zone, which was earlier a congestion zone between 25,800 and 25,850. For us to get out of that congestion zone, it is the Nifty bank which will be in focus. A lot of individual stocks. At bottom of your screen, we have Advanced Enzymes as well. The numbers hit the bourses right away, and the stock is flying up around 6%. But speaking about earnings itself, we have Welspun Enterprises reported an operationally strong quarter, the September business quarter, and we had a 25% uptick in the revenue, with margins expanding as well. Sandeep Garg, the MD of the company, now joins us. Thanks a lot, Mr. Garg, for joining in. It was a decent quarter, no problems about, jump in the revenue as well as margin expansion, etc. What we want to understand is, payments, because across the board, Jal Jeevan Mission payments have been delayed. That's the kind of conversation that we've had with a lot of the managements around. Just wanted to know, what are your receivables from Jal Jeevan Mission and the government at large, and how are those payments panning out?
Good morning, Mangalam. Thanks for taking me onto the show. Straight into the business of UPJJM. Yes, there are challenges in payments currently in the JJM as an overall scheme. It's not only due to us, but it's the complete industry which is facing this. But we believe that this is just a stop time gap arrangement, that the cash flows are a bit slow. We believe that it will resolve over the next few months. At this point in time, as we see, our receivables stand somewhere around 200 to 220 crores from the JJM. Not extremely exposed, but yes, we believe that it'll resolve over the next few months.
All right, receivables due from the water projects around 200 to around 220 crores. Did we get that correct?
That is correct, from the UPJJM project.
From the UP. And overall?
So we don't have any other exposure to the JJM other than the UP.
All right. So you're saying that it should flow in, and I think that's the promise that the UP government as well. I believe the Chief Minister has been meeting various companies and assured them that these payments will get released. So we'll keep an eye out on that front.
And just to add to that, Mr. Garg, I wanted to know, JJM is 200 to 220 crores, but any other government receivables that you have which are overdue?
No. There is practically very little overdue payments from any government, but because we are in the HAM space, there are milestone-related payments, so the payments come in the bulk.
Okay, all right. Let's focus on the revenue guidance then. I think earlier you were talking about mid-teens growth. First two quarters, actually, there's a degrowth. Do you think that for the year you can achieve these numbers, or will you want to scale down the revenue growth guidance for the year?
So, in the beginning of the year, I had forecasted that our consolidated revenue should be in the range of 4,000 crores. And the split was supposed to be 40% in the H1 and 60% in the H2. So if you were to look at it, the H1 revenue was expected to be somewhere close to 1,600 We are a shade above it. So we are on track to achieve our guidance of 4,000 crores, subject to obviously the two things, that is the climate and the statutory approvals for the new projects. We believe that we will be able to achieve those numbers.
Right. What about order inflow? You know, the first half of this year, your book is at close to around 15,600 crores. If you could give us a sense of what you are expecting in the next couple of quarters, and what would you end this year with when it comes to total orders won?
So the current order book as 15,600 crores at a console level excludes an order on which we have already emerged L1, which is a 7,300 crore total project cost Pune-Shirur road project. We have declared it earlier. The order is yet not received, so we have excluded. We are not considering it. So if we were to consider it, we expect our order book will be in the range of 21,000 to 22,000 crores. My guidance at the year beginning was that we will we'll be booking orders of 8,000 to 10,000 crores this financial year. We believe that it should happen in next few weeks or a month, and that we will achieve that target. Going forward, we still have time, and we believe that we may be able to exceed the target that we had given in the beginning of the year.
Okay, all right. Two numbers I want from you, Mr. Garg. One is on the margins. You know, they were much higher than what we normally see at around 22%. But I think in the past, you've been guiding for around 18%. So you could correct me on that number. What is the margin band we should work with? And the other one is the net working capital days. That's ballooned up because receivable days have moved up. Inventory days as well have moved up. On a steady state basis, where do you see this number stabilizing at, margins and net working capital days?
So currently, what we are seeing as our profit margins and the EBITDA margins, we believe that those could be sustainable. However, as a matter of precaution, we don't guide anything about a particular number because certain things are beyond the control of the business, and these are environmental and governmental issues. So we do not guide beyond that. However, at the current moment, we do believe that these are sustainable numbers for the going forward for the year. The second question that you have asked me about the I forgot that.
Working capital days, sir.
Working capital days. See, as I said, we do operate in HAM, and we do operate in certain areas where your payments come as milestones rather than as a cash flow. So these ballooning up keeps on happening, and then once you hit the milestone, it goes down. So it all depends upon the point in time that the quarter is ending and where are you on the project progress. So this can happen over the few days or a few quarters, but it automatically resolves. And we do believe that the receivables will stay in these ranges slightly lower than what currently is forecasted, but for the year, we will be in the same range.
Just a final question before we let you go. The Wellspun Michigan business that you have, order book of close to 2,600 crores. What's the scalability plan here, and what kind of margins does this business enjoy?
So it's a very value-accretive business that we took. The EBITDA margins are in the ranges of 22-23%. We do believe the rationale of taking it was that we wanted to get into the tunneling business. We do believe that the tunneling is going to be the future business, as you must have seen that in last 75 years we did about 2,500 crores, 2,500 kilometers of tunneling, and we expect in next 10 about 3,000 kilometers. Mumbai itself is doing almost 1 lakh crores of tunneling right now, and we expect at least about 2 lakh crores worth of tunnels are in plan.
All that.
We do expect that to grow. We are positioning the company right. We are augmenting the management. We are creating bandwidth to deal with this great opportunity that we see.
All right, Mr. Garg, thank you so much for joining in and giving us a detailed outlook into your business over the next couple of quarters. We wish you good luck. On the other side of this short break, we will focus on the primary markets. Tenneco Clean Air, the issue opens today. Management joins us here in the studio to discuss their plans. Welcome back. You're watching us here on Chartbusters on CNBC-TV18. Let's shift focus to the primary markets now. Tenneco Clean Air's IPO opens for subscription today. Price band for this 3,600 crore IPO or issue is set closer to 380 to 400 rupees a piece. Arvind Chandrasekaran, who's the whole-time director and CEO of the company, joins us in our studios. Thanks a lot, Arvind, for joining in. Congratulations.
Thanks for having me.
Hitting the street for an IPO. But what's interesting is that it's the part of a US global company, which is a private company, and now you're trying to unlock some value in India, right? Absolutely. So what I basically wanted to understand is every time there is an MNC-India relationship, the royalty, how much from India goes to the US, and how is that likely to pan out over the very near future?
So first of all, if I may, first of all, you guys are looking dapper, so congrats for that.
Thank you. That doesn't make a question.
So we're a $17 billion company, right? So we are US-based Tier 1 MNC. Yeah. We have 180 plants, 30 countries, serving 100 plus customers with 40 tech centers. So we're a very fairly large, well-known automotive company. If you want one sentence to describe us, we'd say we're an R&D technology company. We have access to 5,000 patents and 7,500 plus trademarks. So this is when you talked about royalty. Think about the advantage. Me sitting in India with my team, we have access to patents from Tenneco US, Europe, and even Tenneco China that we can bring to India and apply it to the local OEM needs. What do the Indian OEMs want, right? They want technology, and they want it to be affordable, right? So this is what we bring to the table, and the 2.5% royalty is fairly middle of the fairway. If you look at any other MNC, right? You look at the list of MNCs that are in India, 2.5% is sort of middle of the fairway.
You know, good to have you in the studio, Arvind, and interesting business as we've spoken in the past as well. Just a quick question. We've got it at 2.5% odd is what the royalty is. The street would appreciate business, but they'll also be a little bit cautious. Is there a possibility this royalty rate goes up, or is it fixed, say, for the next year, year and a half, 2 years or something?
So look, we have a royalty policy. We have an independent board of directors now that we're going from a private to a public company. So everything has to go through the independent board. Having said that, look, see, royalty is the function of how much help we need from the parent company. So one is the access to technology. The other one is, them coming in and spending their resources, doing the, vehicle validation, homologation, whatever needs to happen, right? So as long as the technologies are staggered, which is what we see in the next 3 to 5 years, we find that BS6 is going to go to BS7. CAFE norms are coming in for CO2. We're going to have TREM 4 going to TREM 5. And these are fairly staggered between 27 and 30. So as long as these legislations on the clean air powertrain side and also on the shock absorber side, if the evolution of the product roadmap of shock absorbers is happening in a staggered way, which is what we are seeing now, and that 2.5% will probably stay.
And a large part of, in fact, the entire IPO is an offer for sale. It is no funds coming into the company. So for the company's own growth, what's the kind of fund that is required, and will your internal accruals be enough for the same?
Okay. Very good question. So first of all, we're a zero debt company. Okay, apart from the excellent financials we have, we're a zero debt company. The cash generation is pretty high. We're generating enough cash to fund our capex and our working capital as well. So I think we're very comfortable. The OFS basically is a ticket to enter into capital markets. It gives us the optionality, if we want, to enter into capital markets if we want to grow organically faster or through inorganic means. Plus, it gives the brand visibility for Tenneco. Tenneco is funny because our brands like Monroe Suspension and Champion Spark Plugs are even better known than the Tenneco name itself. So it gives us brand visibility. It gives us access to talent. So think of it as a ticket into the door for explosive growth.
And a ticket which is fairly profitable for the US partners because, $17 billion revenue, you account for just about 5% of their overall revenue. Absolutely. But in terms of valuation, given the sort of Indian multiples that we get, it would obviously be fairly value accretive for the American business as well.
India, we are all sitting on this India rocket ship, right? India Inc. is a fantastic story, and Tenneco is, of course, on top of it. And even for Tenneco, right? Tenneco, the company, the parent, India is one of the fastest growing mega regions and also one of the most profitable regions. So obviously all of that money is coming in, the interest coming in. Our CEO, Jim Voss, spends a lot of his time in India as well, trying to make sure that we are set up. So we have a good platform, as you've seen from our financials, right? 18.6% EBITDA, PAT of 12.6%, ROC of 57%. Right. Yeah. That is an amazing number. So we have that platform to exploit the tailwinds going on.
The parent would have said, we've set up a good business, we like the return ratios, let's take some money off the table. That seems to be at play. But let's understand more about business. You have two verticals, if I look at it, clean air and powertrain, and the other one is the advanced ride technologies. And I'm seeing the advanced ride technologies, suddenly occupying a larger chunk of the total revenues. It's currently at around 42 and 58%, or thereabouts. How do you see this revenue split moving going ahead? And between the two, which one is more profitable?
So right now, again, we have a very long sales cycle. So we are in a business where just to get a new technology validated and homologated takes 2.5, 3 years. So you have to really zoom out or take a 5-year window. So the next 5 years, we don't think that ratio is going to change much because
50% a piece, approximately.
Sort of. We're not seeing that much change. I think what is interesting is that the premiumization of shock absorber technology is happening at a very accelerated rate. On the legislation side, which is our clean air powertrain business, that is happening like a heartbeat, right? So every time there's an emissions legislation, we get a bump in content, and then so it goes like that. But the shock absorber disruption that's happening is going to be very rapid depending on the adoption rate.
So suffice to say that currently the clean air business is slightly more margin accretive, but shock absorber, because of premiumization, would get closer to that.
Again, look, we have passenger vehicles, we have commercial trucks, we have off-highway, we have industrial. So we have, so I can't give you a weighted average answer, but yeah, you could say that slightly more on the CAPT side and a little bit less on the ride technology.
And your revenue mix across passenger vehicles, commercial vehicles and all of that will stay the same? 2/3 passenger vehicle, a quarter commercial vehicles and the others?
Again, because of long sales cycles, for now, yes, that ratio will.
And very quickly, before we let you go, what's the utilization levels you're functioning at? Last year, you did ballpark 5,000 crores. So what would that mean in terms of utilization levels?
So we are at a very high capacity utilization, 80% plus. And that's because, again, that's another differentiator beyond the R&D and technology side. We have a very unique method of product and process design that includes standardization and modularization that allows us to run a lot of these standard parts at very high capacity utilization. So I think if we keep that gross block as is, we probably get another 10-12% top line.
Appreciate you coming down, Arvind. Wishing you and the team all the very best. On listing, we'll push you a little bit more for some quantitative numbers, but it's a great business. Taking some money off the table, the parent's a lucky person, I think so. Yeah.
Thank you.
Thanks.
You guys looking dapper.
All right. Look forward to chatting up with you again. Take that break, come back. We continue our focus on markets. Don't go anywhere. Welcome back. Markets holding with solid gains as we speak, but the demerged commercial vehicles business of Tata Motors listed on the bourses at around 340 rupees a share. The listing comes a month after listing of the passenger vehicles business, which was in line with what the brokerages were expecting. Rachna spoke to Girishwa, the MD and CEO at Tata Motors, to understand the outlook for the commercial vehicles entity of Tata Motors. Let's listen in.
Let me give a historic context. I think Tata Motors listed as Tata Engineering and Locomotive Company Limited way back in 1955. Since then, the commercial vehicle business of Tata Motors has been contributing to the country's economy, country's progress, especially in road transportation, infrastructure building. And today marks a very important historic milestone that we are getting listed as a separate entity. Listing as a separate entity gives us now sharper strategic focus, freedom to look at opportunities which are tailor-made for the commercial vehicle business. And looking ahead, we will keep on exploring opportunities which are close to the commercial vehicle and the logistics business. If I may also add, in the past few years, we have driven some strategic shifts in the company which have led to good results in terms of strong margin growth, robust free cash flows, and high return on capital employed, while we also pivoted towards digital and sustainability. Going ahead, profitable growth with all other financial metrics that I mentioned, and looking at the global platform will continue to be our agenda.
So what's your immediate priority?
Immediate priority is, of course, continue to deliver the financial results that we have been doing over the past few quarters and years. I think that's what continues to be the priority.
And your outlook on the industry?
I think post GST rate rationalization, there has been good demand which has been seen on two fronts. Primary demand, mostly in smaller commercial vehicles due to reduction in the prices. And due to increase in consumption, one is also seeing an increase in freight, which will therefore lead to secondary demand, especially for long haul, medium and heavy duty trucks. And therefore, we are quite optimistic about second half of this financial year.
About the regulations, a lot of norms coming in when it comes to emission and also towards electrification. How do you see that?
So decarbonization, circularity will continue to be the most important agenda for us. As far as regulatory roadmap is concerned, there has been a very good close coordination with the government, and whether it is on safety, emissions, CO2, I think there is a close working which is happening, and there is a fair bit of clarity on how the regulatory roadmap will evolve. And as a company, I think we are not only working towards compliance, but actually leading some of the important transitions, especially decarbonization and circularity.
Right, with that, we'll wrap up on this edition of Chartbusters. The news that the market continues to do well. In fact, now very close to the high point of today's trading session, closer to that 25,900 mark.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormis Patakia and Reema Tendulkar. Good morning, guys. Third straight day of greens for our own markets. We're above the 850 mark, actually very close to that 25,900 mark. Nifty IT batting it for the bulls. We have autos as well, which are doing well. PSU banks, oil and gas doing well. ONGC is one of the top gainers that we have. And the most important thing, we are towards the fag end of the earnings season. So a lot of it, the moves that we'll see now will not be results driven, but will be a lot to do with news and other updates. So we'll keep getting that for you. But for now, it is a good looking screen. The midcaps also high by 0.5%, and the advance decline ratio absolutely in favor of the advances.
I think there are two factors contributing to the up move. One is the global cues are upbeat, not just Wall Street, but even Asia this morning. You've got green across the screen. And secondly, the investor sentiment is also perhaps upbeat following the exit poll elections, where the NDA seems to be in a comfortable position to cinch majority in Bihar. So these two factors are driving momentum. And it's good to see the advance decline ratio firmly in favor of the gaining sides. More than two stocks advancing for one in the red. And considering yesterday's low was 25,450, it's been a solid 400-point plus recovery from yesterday's session lows. But let's talk about stocks. Hormis has moved over to the big wall to put the spotlight on the top movers and shakers.
You mentioned it will be earnings reactions at the fag end of the season, but then today's session is dominated by those. The Kirloskar Royal Engines is one such move. Now 15% higher on that stock is the biggest single-day gain that the stock has seen since May. It snapped a 5-day losing streak today. And you take a look at the volumes on the gaining side compared to the volumes on the losing side today. That's 45 lakh shares of Kirloskar Royal have been traded so far. The 20-day average is only 1.2 lakh shares. The stock took support at its 50 DMA and it has rebounded from those levels. And as a result of today's move, the stock has also turned positive for the year. Yatra Online reported results yesterday. The stock was up 13% after that move. And this is a bit of a deja vu because the stock, after it reported its previous quarter results, was also on a tear. The fourth straight day of gains today is up 35% now in the last 4 sessions. Now, today's volumes are already triple that of yesterday's volumes. And you can see that because 2.5 crore shares have already been traded in the first 2 hours of the trading session compared to the 20-day average of just under 5 lakh shares, and it's had a fairly good year so far, up almost 65%. The other earnings reaction today is IOL Chemicals on the positive side, the biggest single day gain in 2 months, 10.5% higher on the stock. Before today's session, the stock was a bit of an underperformer, was down in 4 out of the last 5 sessions. Almost 1.5 crore shares have already been traded. Here too, the 20-day average is only 5 lakh shares. The stock has moved above its 100 DMA of 98. It's trading at that level. The next on the upside is the 50 DMA, which is at 102, and a fairly okay-ish year so far for the stock, up 22% on a year-to-date basis. And lastly, a negative earnings reaction, which is Office Space Solutions, 10% lower on the stock. It snapped a 4-day gaining streak today. It's the biggest single-day fall since August of last year that the stock has seen. Almost 7 lakh shares have been traded. The 20-day average is 2.5 lakh shares. And 1 day of such moves, the stock has moved below all of its key moving averages, yet it continues to remain almost 50% higher compared to its IPO price of 383.
Okay, all right. Thank you so much, Hormis, for joining us with all those details. So those are some buzzing stocks which are on our radar. Let's now talk and take forward a corporate discussion. Stanley Lifestyles reported its Q2 numbers, where revenue growth was soft. EBITDA rose 34% versus last year. The company also saw its margins expand. Sunil Suresh, who is the managing director at the company, is joining us now to understand the outlook going forward. Mr. Suresh, good morning. Thank you so much for joining in. You know, this time around, your revenue growth was soft, 2.3%, that is in Q2, and even in the first half, it's around 5%, more than 5%. Can you give us a sense of what the full year target is and what was it led by, this softish revenue growth in terms of volumes, maybe pricing, if you can break that up for us?
Sure. I think post our IPO, we have been involved in a bit of what I call as the plumbing changes as far as the company is concerned. So that's the kind of results we see. We are much healthier in our EBITDA and our gross profit levels. Also, our PATs have increased. So we have not really rushed into opening the stores. We have been a little more measured because the rental expectation of the landlords was very high. And today, I think we have been able to get good real estate deals, and our expansion as far as this year is concerned, we are on track for that. So we believe that we are now positioned for a better, more healthier growth going forward. That's where we are positioned. Yeah.
What is that healthier growth, Mr. Suresh? If you can put a number to that, will it be high single digit?
Yeah, in terms of, I think where we are pivoting from a typical, sofa-dependent furniture brand towards a complete home solution. In our premium line also, we have launched our full home solutions, and the first pilot store has already been showing us very good results. We're expanding into that. So in terms of where we are going to go is keeping in mind our, long-term plans.
Sure.
Currently, we are at about 73 stores. We want to take it up to about 120 stores, and that's where we are progressing.
120 stores by when?
Next 24 to 36 months.
2 to 3 years. Just some numbers, Mr. Suresh. This current quarter's revenue growth of 2.5%, can you break that up into what was it on account of company-owned, company-operated, secondly, B2B, and thirdly, the franchisee model?
Sure, yeah. We have shown a significant growth in our company-owned, company-operated stores at about 60%. Our franchisee-owned, franchisee-operated stores 10%, and other businesses, including B2B, is about 30%.
No, that is what the revenue contribution is. Can you tell us what has been the year-on-year revenue growth in COCO, in franchisee, in B2B? And also, do you hold on to that 1,000 crore revenue target by the end of 3 years?
Absolutely. So end of 3 years, our target is to reach the 1,000 crores with a 15% PAT. We are up in our COCO stores by about 23% compared to the last year.
And B2B and franchisee?
B2B, the FOFO stores, we are down by about 6%. B2B, we are down by about 5%. Franchisee, we are down by about 5%.
Okay.
Mr. Suresh, what has been your same-store sales growth for the first half of this financial year? And your retail sales, it's 70% of your overall top line. What is the kind of trajectory that you're penciling? Does that remain at 70%, or are you looking at expanding to other verticals as well?
No, I think broadly the ratio will remain, but what it is we are not a typical retail format, and we really don't go by the measure of same-store growth. What is actually happening is the average ticket size of customers spending with Stanley. Roughly about 4 years ago, the average ticket size was about 2 lakhs. But now pivoting into complete home solutions, the average ticket has jumped up to almost 15 lakhs. So thereby, there is a kind of a very different matrix that we are following. So idea is very clear. Both our luxury and premium formats have now moved into complete home solutions. Our value premium is still in the furniture concept. That also will change in a year or so. But ideally, all the three formats by 2030 will move into complete home solutions. So the macro market for us, when you look at what is happening in the housing industry, you must understand that there has been a significant, almost a 70% rise in the premium home market. So if you look at RERA today, last 3 years, if you really study RERA, there's a huge development in the premium housing, which is above 1.5 crores, almost a 70% jump.
Okay.
So new home for us, it is always the new home.
Right.
In India,
So, Mr. Suresh, that is a theme that Stanley has been playing for a while, right? The premiumization, that is what you're seeing in real estate as well. So that's the India story. Why are you expanding into international markets? You plan to have 8 stores over the next 3 years in Sri Lanka as well. So what's the strategy here? And why do you have increase in assets between March 25 and September? Because other financial assets have increased to 150 crore rupees versus 92 crore rupees.
So part of our expansion plan is to start entering nearby markets, especially if you look at it, our plan for next year is Sri Lanka and perhaps Jakarta. Once we have our presence in 3 countries, our target is to also enter Middle East market, especially the Saudi market, because there is a law there that we need to have a presence in minimum 3 countries to go the COCO route. So we are expanding in Sri Lanka and in Jakarta first, and then we will target to go to the Saudi market, where the buying power and the kind of designs that we develop has got a great opportunity to grow.
Thank you, Mr. Suresh, for joining in. That's Stanley Lifestyles. The last couple of quarters has been tough for the company. In fact, I was seeing the last 6-quarter performance. In 2 of the quarters out of 6, it was a negative revenue growth. And in the balance 4 quarters, it was a mid-single-digit kind of a revenue growth. That said, the company believes this period was a bit of a plumbing period, and they're on track for achieving 1,000 crore top line by the end of 3 years and 120 store addition in the next 2 to 3 years. PAT margins seen at 15%. Get into a break. Crypto markets on the other side with Manisha Gupta.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Well, in Crypto Corner, we talk about on the hacks and scams as well that this year has seen. Well, 2025 would be known for its very strong regulations, especially from US, the stable coins doing very well, and then, of course, institutional adoption and the kind of DeFi and tokenization activities that actually grew, got adopted and matured as well. But the other thing that also seems to be bothering the markets is the hacks and scams. And 2025 perhaps would go down as a year where you would be looking at vulnerabilities in blockchain protocols, smart contracts, and DeFi platforms as well. So what I bring to you today is the big numbers that we've seen within this space as well. The first one on the street is Abracadabra. This is a DeFi protocol known for its magic internet money stablecoin and does quite well, by the way. Here we have seen a big loss being drained, and what we saw going down was almost to the tune of $1.8 million drained via a flash loan exploit there.
The other one on the list is Hypervolt. This is a yield farming protocol within the Hyperliquid ecosystem. Here as well, $3.6 million was lost due to a rug pull within the organization where we saw people close their social accounts, take all the money and go away. So this was clearly an example of a rug pull there. The third one I'm looking at is Shibarium Bridge. Here as well, there was a loss of almost 2.4 million recorded, especially in cryptos like SHIB, which is a meme coin, and then Ethereum. And then there are some other listed coins onto that one as well. The fourth is individual Bitcoiner. Well, there was a phishing scam onto this one that did lead to 783 Bitcoins, which were worth $91 million, a loss really as big as that. The fourth one really is BTC Turk Exchange. Well, we did see a hot wallet exploit onto this one. That led to nearly $48 to $50 million of a loss coming in for this one as well. So it's just inching up and we have huge losses and the bigger credible names clearly coming out with that. The Bitcoin Turk Exchange has this one, the breach led to an unauthorized flow of $50 million at the Turkish crypto exchange, really leading to a lot of loss there. And what we understand by the latest news is that nearly 30% of that is just about what has been recovered at this point in time. Take a look also at the GMX V1. This is a decentralized perpetual trading protocol. The attacker herein repeatedly entered, exit, and finally what it did was burn functions in a single transaction, draining almost around $40 to $42 million in case of crypto assets there. The second last that I have on my screen is Resupply. This is a DeFi lending platform focused on tokenized donations. This was exploited for roughly $9.5 million as well. And then finally, I'm also looking at Nobitex, which is Iran's largest cryptocurrency exchange, and nearly $90 million here has been drained from hot wallets. So as I said, 2025 would be known for a lot of things, but within that, it also is going to be about frauds, scams, and hacks that we've seen within the space. Well, that's what we have on Crypto Corner, but with that, let's go for a break, come back and talk more about markets and stock specifics.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. We have with us Naveen Killa, the head of APAC, Telecommunications, Media and Internet, joining us from the UBS Conference 2025. Naveen, thank you very much for joining in. Let's begin with the broad call that you have on the India telecom business. I was seeing some of your notes. You're bearish on Bharti Airtel, which is quite the anti-consensus call. Most people are bullish on Bharti Airtel. Stock is done very well. So if you could take us through that, and plus this entire, the AGR relief, which is likely to come through for Vodafone Idea. So where do you stand on the India telecom sector and what you can share on individual stocks?
Thank you very much. So look, we don't comment on individual stocks, but I'm going to take you through the framework that we have on the Indian telecom sector. Obviously, in the last 5 years, tariffs have grown at about 15% CAGR. And when you look at the tariff levels in India today, our view is that they are broadly in line with the rest of the global emerging market average. And the way we measure that is we look at telecom revenues as a percentage of GDP. And there's a few other matrices that we look at as well. So from here on, our view is that the rate of tariff increases will be a lot more measured. They will happen, but they will be a lot more measured. And then on top of that, and I think this is related to the second part of your question on AGR. So now that we know that with the Supreme Court decision being what it is, there will be some kind of a resolution on the AGR debate. Obviously, there's a lot of questions still there, what the magnitude of the relief is, what the duration of any postponement of payment is, and once that happens, what kind of capital raise Vodafone Idea is able to do, which will then have a significant impact on how much they're able to invest and all. But the point being is that there will be a viable third private player in the market. And when we take into account all of those, our view on the sector is broadly neutral.
So what's the extent of tariff increases that you expect for the industry? You said it will be measured. What should we expect? And how are the valuations looking, if you could share? Because now for, say, someone like you who has a choice of investing in the Indian telecom companies, and the choice here is very limited, versus others in Singapore, Malaysia, and the other emerging markets, how would you say the valuations here are in India?
Sure. So on the tariff side, look, let me break it into two parts, right? The ARPU increases are driven by two factors. One is outright price increases, and then the second one is kind of natural organic upgrades. People migrating from 2G to 4G, 5G, prepaid to postpaid, and so on and so forth. Our view is that at a very broad level, the ARPU increase from here on should be around high single digits on a CAGR basis over the next 3 years. And the mix of that will probably be one big tariff increase sometime next year of around 10 to 12%. And then from there on, a lot more measured price increases in future. But the process of upgrades, as I talked about previously, will continue. A point I would also like to make here is that when we look at the Indian mobile pricing structure, it's actually a very flat pricing structure. This is something that even the operators have talked about. And so the result of this is that the gap between your most expensive plan versus your cheapest plan is actually very low compared to most of the other emerging markets. That allows you then to use the complete income distribution curve to get the richer customers to pay more and so on. That's an adjustment that I think the Indian mobile sector needs to do. And our view is that once we have that next big tariff increase that we expect sometime over the course of the next year, from there on, I think the operators will be a lot more focused on widening the tariff structure, which will then drive the next leg of ARPU growth that I talked about.
Okay.
You did have a second question on valuations.
Go ahead.
Sorry. So on valuations, look, EV to EBITDA is the most common metric that people look at for telecom sectors. Globally, the range for this number is between 5 to 8, and that typically depends on whether you are a number one telecom operator or number two, what the ROIC levels are, where you are in the capex cycle, and how much of your cash flows are being distributed in the form of dividends, right? And so as each of these matrices moves in the right direction, the multiples tend to expand towards that 8 to 9 times range. There are a few very select names that are more than kind of 9, 10 times. In that context, if you look at the Indian telcos, they are trading between 12 to 13 times. Now, granted that there is faster growth and everything that we talked about, but yeah, the fact is that there is a premium that you pay for Indian telecoms.
Okay, all right, Naveen, a lot to ask you, but we are completely out of time. You track other spaces as well, be it the quick commerce space and the likes. We'll discuss that in greater detail, but thank you so much for joining in with your insights on the telecom space. That continues to be the big focus point considering the recent judgments that we have gotten from the Supreme Court. But the big story today, that has to be the movement in capital market stocks. This amid the listing of Grow on the bourses and, of course, after strong show by BSE in Q2. So Sudarshan is joining us now to give us more details on this. Sudarshan, take it away.
So first, take a look at all the other stocks from the BSE, Angel One, CAM, CDSL, and even NSTL. All these stocks are higher, and there are two major catalysts. First, Grow has been listed on stock exchanges today. It was a healthy listing. And second, BSE has come out with its earnings for Q2, and those earnings looked very strong operationally. On the back of that, we are seeing a big or like huge move in all the other capital market names. So now, first talking about Grow. So it saw a healthy listing, listed at a premium almost 12% to the issue price. The issue price was rupees 100 per share. Now the interesting part in Grow is currently 83% revenue that company gets is from the brokerage. Now company is saying that MTF interest currently is 3%. Going forward, brokerage revenue contribution will come down and MTF contribution is going to increase from the current level of 3%. Company is saying that going forward, it's going to increase to almost 13% in medium to long term. So this is one of the major positive catalysts for today's move in the capital market stocks.
So Sudarshan, tell us more about the listing of Grow and what is the management penciling in for the road ahead?
So as I told you, like Grow has made a good listing and recent listing, like most of the companies that list on stock exchanges, majority of them have listed with premium, and also you would have seen that the amount that coming is from the primary market, and BSE even its analyst call has talked about the increase in the flow from the primary market over the last few months, and following the trend, we have seen an healthy listing from Grow, and the management commentary also has looked largely positive. And one important point that they have talked about is the increasing the contribution of MTF and reducing the contribution that they currently have from brokerage firm.
Thank you very much for that. Before that, just a quick word. BSE, very strong numbers, and despite that entire change in the expiry date, they held on to their market share and done well.
So that's what. So before I talk about the Q2 numbers, so recently two headlines that were for BSE. One, there was a change in the expiry day, and second, will the weekly expiry stay or go? Now talking about the expiry day was changed from Tuesday to Thursday for BSE, and for NSE it was changed from Thursday to Tuesday. Now before that there was an expectation that turnover for BSE will come down considering the expiry day, but on the first day when it was changed, very first day, company has seen turnover of almost 50,000 crore, and that was the highest ever that company had seen in a single day on the expiry day. Second talking point was about the weekly expiry. Now recently you would have seen about the SEBI chairman talking that any decision that will be taken on expiry, weekly expiry, will be taken only after a detailed consultation. And also there was some comment coming in from finance minister, and following that, the day this comment came, we saw a huge move in BSE stock. It was up almost 10%. Now coming to the earnings. Earnings looked very strong. Operating revenue has increased almost 11% on a sequential basis, and the biggest contribution that company gets is from transactional charges. There also we have seen an increase. Margin has seen a minor contraction of around 60 to 65 basis points. That's because of increase in the regulatory charges. That saw an increase of almost 20%. But overall, on an operational basis, it was a very good set of earnings. So two catalysts, gross listing, healthy listing, BSE strong earnings, that led to a big gain for all the other capital market names.
Oh yes, we can see that in the stock prices as well. Thank you so much, Sudarshan, for joining in and making sense of the moves that we are seeing in this space. But with that, we'll do one thing. We'll slip into a short break. Management of Axis Max Life Insurance joins us next to discuss their Q2 numbers and more. Stay tuned for that.
Welcome back. Now, Max Financial's APE grew 16% during the second quarter, while its VNB margins also expanded. To discuss the quarter gone by and the way forward, we are now being joined by Sumit Madan, who is the MD and CEO at Axis Max Life Insurance. So, Sumit, thank you for joining in. Your VNB has grown by 27%. Your APE is up 15 this quarter, at least in the first half of this year. And H2 is generally stronger compared to the first half. So what are the kind of growth levels that you are penciling in both for your APE growth and for your VNB growth?
Thank you for having me. I think we've had a good run in H1. There have been a lot of movement as far as the market is concerned. But when you look at the numbers across channels have been exceptionally strong. Our VNB, like you rightly mentioned, has grown at 27% for the H1 period. Even when I look at the margin, they've been in the tune of 23.3 for H1 period. So yeah, across channels, there is a very good growth. We've always maintained that when it comes to industry, and yes, H2 is always far more stronger. When it comes to industry, we are maintaining our margin estimates. And even in terms of growth, we should come better than the industry by almost around 300 to 500 bips when we end H2 as well.
So what is the industry growth currently, Sumit? And if you can give us a sense of, in this AP in first half, what was the contribution that came in from Axis Bank? And do you expect that to improve or reduce in the second half?
Sure. The growth that we have seen in H1 is 18%. When you compare this number with the industry growth, the private industry has actually grown at 8%. But when you look at the entire industry put together has grown at only 2%. So we maintain quite a healthy lead, not over the entire industry, but also when you look at the private industry as one cohort. So the growth is strong. Like I mentioned earlier, the growth is coming across all channels, including Axis Bank. We've been building our partnership business very strongly, and the proprietary business has always been one of the key strengths for us. If you look at the proprietary business, it contributes almost 46% to the entire kitty for us. Axis Bank, in an overall sense, is around 40% for us.
Got that. And on VNB, there was a sharp expansion to over 25%. I mean, as a number. Is that sustainable? And two, what was the impact on account of GST in Q2 and what are the offset mechanisms?
That's true. The number is correct that you mentioned. In Q2, the VNB came at 25%, but when you look at the entire H1, the VNB is at 27%. This number, yes, is very much sustainable. There've been a lot of work which has happened post the GST 2.0 changes. I have to say that post GST 2.0, which I personally believe is a step in the right direction, because given the low penetration levels in India, it makes insurance far more affordable. So I think some of those changes were necessitated. We've seen a very strong momentum as far as protection as a business is concerned. So when the FM also did the initial call post the GST changes, the entire idea was to just increase the pie, reach insurance to the unserved, reach insurance to far more location. I think that seems to be coming pretty much true, given the strong traction we've seen around the protection business in the last 9 to 10 weeks.
Sorry, so you're saying VNB margins in H1 were 27%? Our calculation shows it was 23.3%.
No, the margins were 23.3, you're right. In Q2, the margins were 25.5. You're absolutely right.
Got that. And for the full year, VNB margins should sustain around 24-25%?
Yes, that's correct. The VNB margins should be able to.
The GST impact, I believe, dragged your margins by 300 to 350 basis points. I mean, that's the estimate that you expect on account of the GST input credit for the full. Can you explain what happened? Yeah.
Sure, I'll do that. See, the impact on profit is largely on account of GST. But what typically happens is when you look at this kind of an impact, some of your costs, some of your other growth, you may just postpone for a bit. So let's say the entire focus on opening new offices may have been postponed for a while. So it would not be correct to give an exact number around this. But yeah, largely the impact on the profits that you see is more on account of the GST changes.
So you mentioned on the earnings call, Sumit, that your margins would be impacted by 300 to 350 bips, right? If there is no mitigating action that is taken.
That's correct.
So in that case, where do you see margins stabilizing now while you exit the year at the second half? What are the kind of normal levels that you would be expecting, including this impact if it happens, and if there are any steps that are taken? If not, what happens to those margins then?
I think you're absolutely right. Had we not taken any kind of action, the margin pressure would have been around 300 bips. Happy to tell you there have been a lot of steps that we've taken within the company. And of course, our distributors have been more than helpful around this. So whether it's distributor renegotiation, some steps we've taken around costs, some more steps around the product mix, happy to tell you we should be able to maintain the same margins that we are currently clocking.
So, Sumit, when you say you have taken some steps with the distributors, does it mean you've passed on the commission cuts to distributors or you're planning to retain it? Also, what is the strategy here generally? Because the indication was with Policy Bazaar particularly, there could be something negative for the distributor community overall. If you can explain what's happening in the industry here.
Yeah, I think everyone understands the intent of the government. I think our discussions with all the distributors have been in the same direction. Most of the distributors, for example, have been very willing in terms of accommodating to some of the changes, including Policy Bazaar and all the other players in the market. The discussions are moving in a very positive direction. Some of the discussions may still be WIP, but look pretty reasonable, quite optimistic on that.
What are your plans to integrate Max Financial and Max Life, Sumit?
Yeah, very much on the cards. We are also waiting for some of the proposals to come in the winter bill. Some of the action was supposed to come in the monsoon session of the parliament, but now that it's got postponed very much, we are ready for it. We're just waiting for some of the directions to come from the government.
So if reverse merger doesn't happen in this case because of Section 35 of the Insurance Act, what happens? Will there be an IPO that the company is planning then? You must be having a plan B in case things don't go the way they are planned.
That's correct. Again, like I mentioned, very optimistic about that should come through. Even if it doesn't come through, the company is well prepared to take the next few steps.
Getting back to the GST impact, Sumit, what is the timeline to completely neutralize the impact? Is it 2 quarters? Will it take 6 quarters?
Yeah, to a very large extent, the way things are progressing right now, I'm very clear that in the next 1 or 2 quarters itself, all the impact should be nullified. And like I said, we've taken all the right steps. If you look at the overall performance of the company also across channels, given the strong momentum we have across all lines of the business, I think some of these are, I would say we've been able to manage them exceptionally well so far. So I don't see any immediate challenge in terms of navigating the path post GST 2.0, and that's a reason of the confidence.
So by Q4 FY26, the full impact should be mitigated. And your ULIP share came down to 34% versus 42% in H1 FY26. Where do you see is the share of ULIP and non-PAT by the end of FY26?
See, the current product mix that we have is actually more or less ideal where we want to be. So even by end of the financial year, to answer your question, we should be able to maintain the same product mix where we currently are.
Sumit, thank you for sparing time and joining us today. Wish you good luck for the second half of the year as well. Take a short break, get you more on the markets on the other side. Stay tuned.
Welcome back. You're still tuned into Trading Hour. It's time to talk about the F&O space. Mangalam is bringing us the latest trends from the F&O markets this time. Mangalam.
Well, if you're a bull, it's a solid day of trade because you have seen the Nifty do extremely well, closing in on that 25,900 mark. The IT index is leading the pack. The Nifty Bank, which was an underperformer earlier, has picked pace. Still not at par with the other indices, but definitely a contributor to the frontline index as well. But speaking about contribution, the top contributor today has to be Reliance. That stock's doing extremely well, and that's causing the Nifty, to stay above that 25,800 mark, closer to 25,900, a double century as we speak. And that's percolating down to the broader markets as well. You have Midcap index, which is doing well. The advanced decline tells you that more than 2 stocks are gaining for every stock that is declining. So all these factors, coupled with a sharp fall in the India VIX, tells you that all the ingredients are fairly well in place for a decent market up move, and that's exactly what is currently underway. So what could be the fly in the ointment? Well, a couple of things. On the way up, we are looking at the 25,900 and the 26,000 calls, fairly well written. But on the way down, the support has moved higher. So 25,800 put and 25,900 put. Both of them are fairly well written. So around 25,750 to 25,800, there is strong support that the bulls expect will continue. But the bears believe maybe around 25,950 to 26,100 could be the congestion zone. Why do we say that? Because as the markets moved higher, the put-call ratio has moved into slightly overheated zone at 1.24, and the October high of the Nifty, 26,104, has some unfinished business. So we've seen some supply every time the Nifty went past that 26,000 mark in the past. So those are a couple of things that may keep the lid on the gains above 26,000, but no other reason to believe that the market will fall from here. Good rally is what we've seen, good contribution, and all of that coupled with a decline in India VIX should keep the bulls happy.
Bulls would surely be happy indeed. A double century now on the Nifty, 400 points higher now in the last 3 sessions. Mangalam, thank you for that. Take a short break. More on the markets on the other side. Welcome back. It's a double 100 on the index as we speak. 25,900 now on the board. The Nifty Bank has been an underperformer compared to the Nifty, but still contributing to the gains. The charge led by the IT names. The broader markets doing well for themselves. We're counting down to some major earnings. Overall, it's been a very good first half of the day for the bulls. We take your leave on this edition of Trading Hour. From Rima, Sonal and me, thank you for watching. And halftime report on the other side.
Hopes of easing tariff tensions lift stocks amid steady domestic inflows into mutual funds. IT and auto notch gains while realty and FMCG trade soft.
The stock of Grow owner Billion Brains Garage Ventures scales to 120 rupees post listing, a 20% premium to its offer price of 100 rupees in a promising debut. BSE's strong second quarter show also helps fire all the other capital market stocks.
Tata Motor relists at a hefty premium to its implied price after the demerger of the passenger vehicle business. The Tata Motors now houses the only commercial vehicle business of Tata Group.
Sir Dorabji Tata Trust inducts Noel Tata's son Neville Tata on the board along with group veteran Bhaskar Bhatt. Noel Tata will be the only permanent trustee while Vice Chair Venu Srinivasan shall have a 3-year term in keeping with revised regulations.
Hello and welcome. You're watching us here on Halftime Report. A very good afternoon so far. If you're a bull, we come to you live from the CNBC-TV18 Motilal Oswal studio. The markets are the highs of today's trading session. Near 200 points for the Nifty, the Midcaps following suit, the Bank Nifty, the Nifty IT, Reliance. Be that as it may, it's a very good session. And we have the India VIX, which is lower as well. So all things green.
Hi guys, yes, absolutely. Well, the market is doing well in today's trading session. We have the Nifty, which is at 25,890 at this point in time, and the Midcap index, which is gaining with which is higher by around 0.7%. Advanced decline ratio is also in positive terrain, so we have around 2,600 odd stocks advancing to around 1,500 stocks declining. So good going currently for the markets in terms of the advanced decline ratio. So seems as though it's firing on all cylinders. Let's see whether that sustains through the trading session. But it seems as though it will turn out to possibly be a day in the green for us.
Absolutely, a day in the green for us is what we're hoping for to sustain through the day as well. And all the sectors today, most of them are trading in the green except for Nifty Realty. Just a mild bit of a cut there, so not much of a concern there. All of them managing to hold on to very, very strong gains. Look at Nifty IT, 2% uptick. Nifty Auto managing to hold on to very strong gains as well. So, you know, no complaining on that front across sectors except Realty, which is down 0.05% as of now. So, yes, good performance in terms of the broader end of the market. Nifty Bank managing to hold on to gains as well, and a lot of movers that we're seeing in terms of earnings. Look at Kirloskar Oil managing to hold on to very, very strong gains in the trading session as well. Aavas Financiers, BSE, all these surely are managing to hold on to very, very good gains, and among the top gainers in the Nifty 500 as well. So that was what we'll keep an eye out on. The one that is not doing well is Thermax after its numbers, weak set of numbers there. PI Industries, Torrent Power, all these are falling after they missed in terms of the estimates coming in for their earnings. So yes, that's what we're focusing on in terms of the markets today. That is what we'll be keeping an eye out on as well. Okay, on that note, we're actually going to sip into a very short break. We have a whole host of conversations lined up for you all through the show. Stay tuned in for that. Welcome back to Halftime Report on CNBC-TV18. Now let's put the spotlight on Emami. That's the first management on the show that we have for you all today. They reported a weak set of numbers in Q2 FY26. Revenues down by 10.3%, impacted by heavy monsoon, GST transition, all that playing out in Q2 FY26. To talk to us more about the outlook, we have NH Bhansali, CEO Finance, Strategy and Business Development and CFO at Emami, to talk to us about the outlook going forward. Thank you so much, Mr. Bhansali. I want to just start by talking about in terms of overall the volumes that one could expect going on from here. This time, obviously, we had seen that impact coming in of monsoons on your portfolio, summer portfolio specifically. So now going forward, what is the outlook in terms of volumes? What is the outlook in terms of revenue growth as well? Given that Q2, you've managed to see there's a decline in terms of revenue growth. So where do we see that headed?
Yeah, you rightly said. The Q2 witnessed so many challenges, right? The GST disruption, though it is a good step and is expected to boost the consumption and would definitely help the Emami as well. And the summer had been very bad, and so it has impacted. And on the top of it, the winter products uploading, which generally happens in the September end, was also got disrupted because of the GST. Because 88% of our turnover is impacted because of this GST rate reduction, and that's good going forward. But that in the interim, the people used to correct their inventories, and the high cost inventories they wanted to knock out first, and so this has impacted. But going forward, and from October and currently also we are witnessing a good spurt, and we expect near double-digit kind of a growth to come in going forward. Second half, we expect a good growth on the top of a good winter and also the favorable conditions which we are witnessing. We expect a good growth.
Right, favorable conditions. You are expecting good growth. Winter accounts for nearly 60% of your overall portfolio, and post El Nino, La Nina will come in, and there will be a strong winter. So hopefully things will look good. So on a full year basis, what is the kind of revenue that you can report? I ask you because the first half your revenues are down by about 5%. Will you end the year positive, maybe mid-single digit or low single digit?
We expect it to be positive, and maybe it could be. It may go up to the mid single digit. But having what has gone past, I think the second half we expect a double-digit growth.
Okay, and what about your margins? Because the second quarter they were impacted. Obviously, you maintain your margins between 26 to 28% for the full year. Where does that number stand at?
Yeah, what has happened is mainly because the gross margins had been intact. In fact, there has been still a good the margin expansion at the gross level. But Q2 had been dent because, and so advertisement and other expenses and the other fixed expenses. And so there had been a decline on the EBITDA margin by almost 500 plus basis points.
Okay.
We expect the same kind of a margin quarter year on year as was there in the second half, as it was this year.
Okay. Well, Mr. Bhansali, just wanted to ask you about your e-commerce segment. How much did that contribute this quarter? How much did it grow? And you do have, certain products such as Smart and Handsome, which was launched on one e-commerce platform as well. What kind of traction are you seeing within that category?
Yeah, so overall, this new age channels, modern trade, e-commerce, and also the institution sales, all have they contribute almost in the last quarter has contributed almost 30% of our turnover, and Fair and this Smart and Handsome with its relaunch, and also the casting which has also been relaunched now. We are expecting they also to turn around and contribute into the growth story of our company.
So when you say turnaround, Mr. Bhansali, can you just narrow down in terms of numbers for us? Say, for example, in your key categories or your key brands, what is the growth anticipated in the second half of FY26? And how much can you possibly scale up in FY27?
So as I said, on the rather than the brand wise, on an overall basis, it would be for the second half at 10% or a double-digit kind of a growth can be expected, and this will be done by the winter and also the ensuing summer. So second half comprises of both the seasons. And that would, going forward also, we expect this to continue because the base has been corrected in the current first half itself.
All right, Mr. Bansali, thank you so much for joining in. Short but effective conversation. We'll obviously continue this conversation at a later date in the middle of winter when you have better sense on how the winter portfolio of the company has done. But we'll take a short break. On the other side, we have another management from the consumer space. Bajaj Consumer Care joins in to discuss their extremely strong operational performance coming in from the quarter that went by. Welcome back. After many quarters of weakness, one of the better performers this year in the consumer space has been Bajaj Consumer. The management joins us on the show. A strong set of second quarter numbers boosted further by Vishal Personal Care's acquisition, cross margins expanding. Naveen Pandey, the managing director of the company who took over in July 2025 itself, joins in for his first ever conversation post taking over at Bajaj Consumer. Remember, before this, he was at Unibic, and for that, for 5 years at Marico as well. Naveen, thank you so much for joining in and taking some questions. It was a good performance that came in, and this despite, the transition issues that we saw around GST, etc. Now that it's been a little around 2 quarters of you joining the company, the first obvious question is what was, given to you as your key targets, and what is your strategy to achieve those targets?
So, Nandalam, I think we've been a strong company historically, but we've gone through a longish bout of underperformance and weakness. And the key task which I have is to really kind of, take this forward to back to the glory days. And what that means is to get back into strong double-digit growths consistently quarter after quarter, and to get to, respectable industry standard of EBITDA margins, where again, we had slipped back significantly. And that's what we're going to focus on and, try and deliver. So from that lens, while the quarter which we have just concluded was a good quarter from a trend perspective, but we're still short of where we want to be, and our endeavor would be to consistently work towards that.
Could you give us some more quantifiable details? Double-digit revenue growth, you're speaking about historical levels of margins, respectable level of margins. Could you give us a sense? And also, to get this growth, your underlying category is not which is flying off the shelves, right? The category itself is stagnant. So are you looking at other categories? Are you looking at acquisitions? If you could detail your strategy a little more.
Sure. So first of all, quantifying what it means is, so what I mean is that over the next 4 to 5 year period, we would attempt to get into a double-digit kind of growth CAGR. And when I'm saying margins, basically, if you look at our CPG industry, we work in operating margins or EBITDA margins, which are in the 20s, low to mid 20s, and that's the zone where people operate. And when I started the journey, we were in the teens and low teens, low to mid teens. So I think there's a journey on both margin and there is a journey on growth, which we are attempting. That's more from a quantification of where we aspire to be. Now, how we are going to get there is not very complex. It is 3 or 4 key bets for us. The first and the most important is our key brand, the name on the door, Almond Drop Hair Oil. We need to invest, reinvigorate that brand into growth. We have a give or take 8% market share in the overall category, and there is a lot of headroom available. It is the most premium oil for over 2 decades, and I guess in the interim, we had not done as much investment behind the brand as we need. We've started doing that, and we are seeing very good early results, and I believe that itself will be a first leg of our transformation. The second leg would be identifying new pillars of growth in terms of the new categories which can become salient for us in the time to come. They would include things like coconut, which we've already done. They would include our acquisition of Banjaras and a few more, products and categories which will come in to add that. And third pillar would be around margin expansion, creating a sustainable, healthy operating margin, which we deliver quarter on quarter. And, then the right foundation around people, processes, capabilities which are required to deliver the 1, 2, and 3. So I guess that's a simple playbook which, I'll be working on.
Sure. Naveen, you said 20% margins in the next 4 to 5 years, but you're already at 18% Q2. But FY26, FY27, where do we see that headed? At least 18% is what you could maintain maybe in FY26.
See, we don't give guidances as a principle, so I would avoid calling out the next quarter or the balance of the year. But yes, our movement from around 14 to where we are today has been rapid, and that is because some of the lower lying fruits are easy to achieve. And going forward, it's going to be a slower build in terms of another 300 to 400 basis points, which we would attempt to achieve, and that will happen slowly, gradually over a period of several quarters. It won't happen very, very quickly, in a very short term.
But that investment also you said, right? You are increasing in terms of ADHO. So then do we have to factor that in as well in terms of margins?
No, I think we will deliver the margins after those investments. Investments is also a question of how we are choosing to spend money. We've always been a high A2S organization. However, not every advertising spend really gives you great ROI. We are choosing our spends wisely, and that allows us to deliver disproportionate results. So what we've declared in the past quarter is our spends on ADHO is more than 50% up, while the overall advertising has gone up by around close to 200 basis points. But the spends on the main brand is very, very significantly up.
All right. One of the ways you can also increase your growth is by increasing distribution and penetration. You've spoken about Project Aarohan. If you could give us a sense on the metrics that you are tracking out here and what could the additional scalability in your business be because of Project Aarohan and the Vishal acquisition itself. Banjaras, what kind of scale are you looking at here?
First part on Aarohan, what we're doing, Mangalam, is very simply we are adding to our quality and quantity of reach. We are focusing on direct reach addition, both in the urban and in the rural areas. We started with a few priority states and we are expanding it now to cover more than 80 to 90% of our business over a period of time. Urban results have already started flowing in. We expect to add roughly 8 to 10% of our direct reach every year for the next successive 3 to 4 years. As part of this exercise. Rural would be a similar task, but rural we have started a bit later, and I think it will take a couple of quarters for us to stabilize and then get back into the positive cycle on delta addition. When it comes to Banjaras, we acquired the company, which was give or take around 50 crores last year in terms of revenue. I think we can look at not a CAGR, but a multitude of X factor of growth of this brand. This brand operates only in certain markets. It does not operate into modern trade and e-commerce, does not operate into our core markets of the Hindi-speaking belt, and hence there's a lot of scalability of this business. Our immediate effort is to really consolidate and assimilate the brand and really get the teams to work together. And as and when that happens, we will subsequently scale it up across channels and geographies.
But any further acquisitions that you would be looking at, and what would the what would your kitty be right now in order to explore that?
So we have a sizable war chest. We are also a debt-free company, which allows us to really raise debt as and when needed, and hence that gives us a fairly good acquisition to kind and go ahead and acquire brands in the market. What's going to be a more constraint than money is finding brands which have a great fit to us. And hence, in the medium term, we'll be look out for more acquisition opportunities as and when they come to really bolster up our basic growth.
Would it be a similar size to what you've already acquired, around 120 odd crores?
This is being towards the smaller size. We are very happy to look at larger size acquisitions as well. But I think it's more about the quality and the fit rather than the size which will dictate our decision.
And do you have any target on how much should come in from ADHO and how much should come in from the others? This one quickly. And also, will you stay in this category or are you exploring other categories as well?
So, Mangi, our belief is that we can get ADHO to grow mid to high single digit revenue on a consistent medium term period. And the other portion of the portfolio should grow a healthy double digit to push up the overall numbers into double digit. And that is the core algorithm. And we would really look at acquisition being a top up.
Okay. All right. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Bajaj Consumer targeting double-digit revenue CAGR going forward and looking at possible acquisitions. Will be investing in their famous Almond Drops brand going forward, which they have 8% share in currently. We'll take a short break, but up next, we're going to be connecting with UBS's Chief India Economist, Tanvi Gupta Jain, and we also will be talking to Rohit Arora, Head of Asia Forex and Rate Strategy. Stay tuned for that. Welcome back. Still tuned into halftime report on CNBC TV18. Well, it's turning out to be a session where we're higher by around 0.8% currently for the Nifty, so good going, and the Bank Nifty up around 0.4%. So overall, the barometers or the statistics look good for the markets in today's trading session. So let's talk a little bit about the macros. In fact, we have UBS's Chief India Economist Tanvi Gupta Jain, and we also have Rohit Arora, who's the head of Asia Forex and Rate Strategy, joining in from the UBS India Summit 2025. Tanvi as well as Rohit, thank you very much for taking the time out. Well, Tanvi, I'm going to start with you. The big question is that maybe we could now be, mending ways with the US when it comes to a tariff deal. There could be something on the cards which could be a little more conducive to both nations at this point in time. What is your sense in terms of where things stand when it comes to a possible trade deal?
Sure. Thank you for having me in the show. I would say that's the most discussed topic, even during our UBS India conference. When can India and US trade deal get negotiated and we see some respite from the announced 50% tariff? If you look at, we just launched our 2026-27 outlook, and our base case is that the reciprocal tariff in India, including penalty, which is right now at 50%, gradually comes down to 15% by end of December 2025. I would definitely think about the penalty getting withdrawn earlier by end of November, and gradually we also see some kind of negotiation on the reciprocal tariff. That is something that we are working on when we are looking at India's growth outlook, because that one uncertainty was one of the biggest, I would say, the hindrance for the investors to look at India right now.
Okay. So what are you targeting in terms of GDP growth, and what would that be predicated on based on what you're assuming when it comes to a tariff deal?
So let me talk about both about this year outlook as well as the FY27 outlook. For this year, we are at 6.8% GDP growth, and whatever data we have tracked for the first half of this year, that is April to September quarter, I would say the growth has been holding up very well because of resilient domestic demand and a very, very supportive policy. We have seen both fiscal as well as a monetary policy easing, and including a GST cut which got effective from 22nd of September, and that is kind of holding up India's momentum pretty well. So for the full year, we are at 6.8% GDP growth for FY26. Now going into FY27, we are expecting growth to stabilize around 6.4%. We are slightly below consensus. I think consensus is somewhere around 6.5% of GDP, 6.5% for next year. But we think the growth is going to stabilize around trend. We need to realize that FY26 GDP growth also had a tailwind of a low GDP deflator, which is now going to become unfavorable. But putting a little bit more thoughts on how the outlook is going to shape up in 2026. The first most important assumption is, which our global team is making, that the growth, especially on the global economy, which is going to see a soft patch in the next 4 to 5 months because of higher tariffs leading to slow export growth, will actually accelerate from the first quarter of next year. So we are actually expecting a very decent global GDP growth of 3.1% for 2026. So I would say from a global perspective, I think India remains supportive. Now coming back on the domestic factors, I think the biggest driver of growth that we are expecting in 2026 is going to be the household consumption. There has been a stimulus, I would say, or a policy support almost to the tune of $60 billion in FY26, which is going to sustain in FY27 as well. Okay. And on top of that, rural consumption has been looking very good. Yeah.
Okay. So 6.4 is your base case. I'm assuming that's your base case for GDP in FY26?
FY27.
FY27. So what would your bullish scenario be, for example? Would it be 6.5%, which is in line with consensus, or better than that?
So there are two bullish scenarios that can play out for India. One, the global economy turns out to be better than what we are estimating. India is a low beta economy, but for every 100 basis points upswing in the global GDP, we could see a 60 basis point delta on India's growth. So that's one big upside. The second is the AI boom. I know we are talking about the AI boom in US and China, and it is inherently less labor intensive, but what we are expecting that in the initial phase, it will help lead to technology innovation, improvement in productivity, and can really boost India's growth back by around 20 to 30 basis points in FY27, depending upon the extent of AI implementation that we see in India. And a third upside that can come from is structural reforms, right? I mean, there's a long list of structural reforms that India needs to deliver on land, labor, capital. If we do continue to see more reforms bit on the part of the government, I think the growth can definitely go in between 6.5% and 7%.
Okay. Rohit, you know what I also want to know in terms of the move that we've seen coming in on the dollar index side, how does that place India in this whole story, and what is your outlook, especially coming in from the rupee front?
Yeah, sure. So see, there is a dollar and there is a rupee. The global dollar, we went through a small patch of this de-dollarization, dollar weakness narrative in Q2. And from second half of this year, that narrative has already started to taper because the global investor base has started to acknowledge that AI exceptionalism will start to make a comeback of the dollar against major currencies. So that narrative is very much visible in the markets. We have seen some upside pressure on dollar on that particular factor. But going from here until end of next year, I would say likelihood is dollar will be mildly stronger. We have DXY about a couple of percentage points higher from current levels. Euro dollar about 2% lower. And likewise, most EM currencies about 2 to 3% lower. The only catch is the point which Tanvi made. We are looking at next 12 to 15 months as a year of two halves, or if I could specify, a year of 1 quarter and 3 quarters. The next 3 to 4 months is where we think there's a soft patch coming in US economy, that is higher inflation, lower growth, which is a payback from tariffs. And that is where this possibility dollar first goes through a pullback before it rebounds on AI exceptionalism. So that is the dollar part of the story, which is mildly stronger dollar, but after a small decline in next couple of months. When it comes to rupee, rupee has, of course, been one of the worst performing currencies this year against the dollar. Going into 2026, if the domestic demand starts improving, there could be prospects for rupee to strengthen. But as things stand, we are working with an assumption that dollar rupee may hover around 88, 89 in the next 3 to 6 months and eventually move towards 90 by end of next year. That's partly because of dollar, but also because of the historical track record of rupee being actively managed in the direction of creating higher highs and higher lows.
My God, so 90 is your target on the rupee by the end of next year. But Rohit, just quickly wanted your target on the yield as well, which has been largely flat, for the entire year if you look at it. But there has been strong amount of hardening which has taken place, say, from Q2 to Q3.
Yeah, sure. So it is indeed quite ironical that we have gone through a very aggressive monetary easing this year on top of the bond purchases that RBI did early in the year, and 10-year yields are basically unchanged from where it started the year. The factors that have been playing around here is, one is a very organic evolution of the yield curve, which is whenever the monetary policy is excessively tight, curves tend to flat, and as monetary policy starts to ease, the yield differential between long end and front end starts to widen. So that was a phenomenon which played out. But the bigger undercurrents in the bond markets have been the elongation of duration or elongation of longer maturity bonds issued by central government and state governments.
Sure.
That has been keeping an upside pressure on the very long end of the curve. And as things stand, we think even if RBI cuts the policy rate by another 25 basis points, which is our baseline, we think the next 20 to 30 basis points by end of next year would be higher.
All right, Rohit, as well as Tanvi, always a pleasure hearing your views. Thank you very much for joining in and speaking with us. So that's the UBS macro team talking to CNBC TV18. But let's get back to numbers. Biocon is the next management on the show. Numbers were better than estimates. Growth was driven by generics and biosimilars. In fact, I did catch up with the MD and CEO of Biocon, Siddharth Mittal. Began by asking him about the quarter gone by and how they see the performance of the biosimilar segment. Listen in.
Continue to garner a very strong market share for biosimilar trastuzumab and pegfilgrastim in the US, with both these drugs contributing almost to 25% of or greater of the market share in the US. And I think it's been something which we were very confident of, something where we have really invested a lot of energy. And I see a similar trend coming in for other products as well. So today, if you look at a biosimilar ustekinumab, our product, Sensex, is the leading biosimilar player listed on all major formularies in the US. And I think as the market ramps up for the biosimilar companies, we definitely see a leading market share continue to build up over this year and, of course, continuing into the next year. And even in other markets in Europe, we continue to see a very robust market share in certain countries for our biosimilar adalimumab, biosimilar pegfilgrastim, and trastuzumab.
Okay. Well, just, now talking about the generics business, the generics business did well as well. It was around a 20% plus growth there. Just give us a sense in terms of how drugs such as liraglutide has performed for Biocon this quarter. What's the contribution been?
The liraglutide did contribute majorly to the 24% growth that we have seen this quarter, and primarily the launch was in Europe. We continue to launch in many markets in Europe. Recently, we received an approval from the German regulator, and we'll be soon launching that drug in Germany, which is the largest market for liraglutide in Europe. But thus far, we have seen a very strong traction across geographies. Our partner Zentiva is also seeing a very strong demand. And we have supplied the drug in Q2. We will continue to supply the drug in Q3. And there are many other markets where we are seeing opportunity opening up within this fiscal. But the growth of 24%, which I mentioned, has come, of course, Lira was a major contributor, but we have also had growth in other OSDs in the US, like products such as sacubitril valsartan, products such as dasatinib contributed to the growth. Apart from increased volumes that we have seen on our base business and also some uptick in demand in the API business. So a combination of all these growth levers led to a very strong 24% growth in Q2.
So when it comes to semaglutide, where are you placed? Which are the countries that you have, possibly given an application in? And would you be a first mover in countries such as Canada?
I mean, I definitely hope that we are amongst the early movers. We were not the first to file in Canada. But what we mentioned is we have commenced our filing in many emerging markets for generic Ozempic. So we have filed in Canada, we have filed in Brazil, and few other large emerging markets. And we'll continue this filing trend as we move into the second half. And of course, we think we have a very robust data which the regulators will be comfortable with. We are vertically integrated in terms of drug substance, drug product, and devices. And we are very confident that, in the coming fiscal, which is FY27, we should start receiving positive feedback and approvals from some of these regulators. But of course, let me remind you that some of the regulators, such as Health Canada, has not approved a single GLP-1 till now. So it's been challenging for the industry, and we think we are very well placed given our strong focus on scientific science and the whole vertical integration that I mentioned.
Okay. Insulins as a whole, how much of an opportunity do you see from the insulin market, considering that a lot of the concentration is now towards GLP from pharma majors?
I think there is a huge demand for insulin, even if there is a strong growth for innovators on the GLP-1s. The demand for insulin is not going away. I think, especially in the emerging markets, We still see a lot of markets and patients who do not get the drug at the right cost. And I think we are very well placed. There's now a limited number of companies who manufacture insulin. We are one of the largest generic company in the world to manufacture insulin. And I think we definitely think there are strong headwinds. There are a lot of markets where we were not able to supply insulin in the past because of capacity constraints. And now we have expanded our capacities in Malaysia that will enable us to supply insulin in these markets. And I think we are also well placed post the acquisition of business from Viatris and our direct presence in many markets to capture on this opportunity.
Okay. The debt on the books, that stands at around $1 billion for Biocon Biologics.
Yeah, it's roughly $1.2 billion of debt, of which 800 million is the bond and remaining 350 to 400 million is the term loan plus some of the working capital loan.
Okay. What is the plan to reduce that $1.2 billion in terms of debt? Are you looking at options, say, for example, an IPO for Biocon Biologics, possibly a stake sale, PE funding?
I think what we had mentioned a couple of quarters back, that the board has constituted a special committee to look at various options. And one of the options which we had mentioned is a merger between Biocon and Biocon Biologics. And I think we right now focuses, of course, on strengthening the balance sheet by giving exit to all the structured equity or structured debt players. So we have already given an exit to Goldman Sachs and Kotak, and we announced that we have also entered into an agreement with Edelweiss to buy over the CCD and give an exit to Edelweiss very soon. So I think that portion of structured debt has been addressed. And I think as far as the bank debt on the bond is concerned, I think we still are very well placed. We have the debt repayment starting next year in a bullet form, and the bond, which is the large part of 1.2 billion, comes up for repayment in 2029. So I think as of now, the focus, of course, was on cleanup of the balance sheet, to look at corporate options, and then focus on generating cash flows to take care of the bank debt.
When can we hear something more tangible about the merger between the two companies?
Hopefully very soon. I think we are just at the fag end of this whole exercise, so we will let everyone
by the end
know.
of this calendar year, or by the end of say next or this fiscal?
We are hoping by end of this calendar year or before the calendar year.
Welcome back. Joining us now is Dilip Narayanan from Malabar Group. Dilip, hi, thank you so much for joining in. First of all, your sense on the Indian demand, really, because this looks like, and not just for India, this looks like the first year on record that we're looking at investment demand stronger than jewelry demand.
Hi, Manisha. Thank you so much for inviting me to this forum. And yeah, once again, we've spoken about this a couple of times now during the last 2 months. And Indian demand, paradigm shift of at least 20 to 30% of investment demand coming in now is a big move, which I have seen, which we have seen, quite of late. The Diwali season, especially. So a great move towards the investment demands, mainly the coins and the bars. Several factors are driving this: global economic volatility, I would say, geopolitical reasons, tensions, expectations. But apart from that, above that, I would say, is the people's trust towards gold is increasing as we see. The participation is increasing through various forums like ETF, the digital goals and various forums are there through which people can avail these facilities. Interesting is that traditionally price-sensitive buyers who are now chasing quality and long-term value rather than just price dips. That shows a structural maturity in Indian demand, which I've been talking to various people. I can see a real, I repeat this again, the fact that, the belief on gold as a safe haven is increasingly, adding this demand.
Dilip, how would you talk about the prices from here on? Do you have a forecast to put forth? Because we've seen prices gain up by 53% in this year till time, and the global banks do believe that this is even a gradual increase, but it was going to be an increase from here on too.
Well, if you ask me, my personal view on the same is that with what I speak to the global banks and the refiners and the mining companies, and also the few investors who deal with gold, and also with the market study, I feel that the gold, yes, is still on a bull run. Yes, we did see a part of dip coming in at certain levels. It went up to 3,800 levels, but then it's still moving. It's gone back to the bull run again. I think that this time, what I feel is that it will gradually increase, but but definitely if you ask me, with what I can read and what I can understand from the market, it looks gold will definitely go up in future.
Are you putting up a price there? Do you think 5,000 is achievable by next year?
I'm not very sure about that, Manisha, but don't. As I mentioned, it's completely my personal view on this, because the markets, various markets speak on various prices. I was recently in LBMA in Kyoto in Japan, and met with a lot of foreign banks and suppliers and refiners. They had different views, different structures about the gold price. If you talk about 5,000, if you talk about 4,800 levels as an average for next year, and if you are also talking about 6,000 levels, so to get into one
All right, those are big numbers. Even 4,800 for that matter is an all-time high when you look at the gold prices there. You mentioned you've been to LBMA recently, and that perhaps is the biggest confluence that we see in sense of gold, people meeting from miners to analysts to jewelry companies, etc. What is the kind of conversation that has been happening there? Prices you've already talked about, but when it comes to demand, will investment continue to be top of the rank there? Also the global central bank buying, because that clearly has been a big change in the last 2 or 3 years.
It was an absolute honor for to represent Malabar Gold and Diamonds Limited, and the Indian bullion industry at LBMA Annual Precious Metal Conference in Kyoto this time. LBMA platform brings normally together the global leaders across the value chain, refiners, bankers, central banks, traders. This year, I had the privilege of being a part of a panel which is called Asian Gold Demand Outlook, where I co-panelists were from China and from Japan, and
Okay.
moderated by the Metal Focus. We had various discussions. Well, India, I spoke about India and, where India continues to remain the heartbeat of global gold demand. And discussions were focused on how policy reforms in India are improving, like CPA digital transparencies, like IIBX and gradual formalization of bullion ecosystem and things like that.
Okay.
It's very encouraging to see that India is being viewed, not just as a major consumer, but also as an emerging country in bullion, platform. So that was a great opportunity. Well, met with various bullion refiners, met with the overseas banks, the foreign banks, which participate as a suppliers. Yeah, and the trading houses, reinforce the growing trust in India's journey.
In India, okay.
Had this trust towards India's journey in bullion ecosystem.
Absolutely. Thank you so much, Dilip, for joining in. So as said, that the gold prices seem bullish from here on. Global central bank is another thing, but policy reforms, especially India's space within global markets as a buyer, is something that we seem to be really looking strong.
All right, with that, we'll wrap up on this edition of Halftime Report. Thank you so much, Manisha, for taking us through that conversation. The market's doing well. Business Lunch takes all the market action forward.
Hopes of easing tariff tensions lift stocks amid steady domestic inflows into mutual funds. IT, auto notch gains while realty and FMCG are soft. The stock of Grow owner Billion Brains Garage Venture scales to 120 rupees post-listing, which is a 20% premium to its offer price of 100 rupees in a promising debut. BSE's strong second quarter show also helps fire up capital market names. Tata Motors relists at a hefty premium to its implied price after the demerger of the passenger vehicles business. Tata Motors now only houses the commercial vehicles business of the Tata Group. Sir Dorabji Tata Trust inducts Noel Tata's son Neville Tata on the board along with group veteran Bhaskar Bhatt. Noel Tata will be the only permanent trustee, while Vice Chair Venu Srinivasan shall have a 3-year term in keeping with revised regulations. And a CNBC-TV18 poll sees CPI inflation for October at a record low of 0.25%. Food CPI is also seen at a negative 4%, marking the 5th straight month of deflation. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. Well, if you are a bull, this is the screen that you should be very happy looking at. It's a double 100 for the Nifty, well above the mark of 25,900 now, and in the last 3 sessions the Nifty is now up exactly 420 points. So good going for the benchmark index, and what has been leading the charge over the last 3 sessions has been the IT names. The Nifty IT index was up 1% in yesterday's session as well. It has extended those gains in today's session, is now up 2%, and that is after Donald Trump's remarks on the H-1B visa regulations, and whether it be large cap IT or mid cap IT, both of those segments are seeing very healthy gains in today's session. Be it Tech Mahindra, TCS, Emphasis, LTI, Mindtree, all of them are seeing very, very healthy gains in today's session. Tech Mahindra at the highest point of the day, as is LTI, Mindtree, both of them trading with gains of 3.25%, and TCS too among the top contributors to the Nifty gains. And of course, there are a lot of other reactions that you need to watch out for when it comes to earnings, with Asian Paints and Tata Steel also reporting results later in the day. But the other big story of the morning was the listing of the shares of the demerged commercial vehicles business of Tata Motors, and they listed on the bourses today. The demerged entity began trading as Tata Motors as 335 rupees a share, which is a 28% premium to its pre-open discovery price, which was at 260 rupees. And the stock has come off slightly from those levels. Earlier, we spoke to Girish Wagh, the executive director of the company, to understand their plans after the listing.
Listing as a separate entity gives us now sharper strategic focus, freedom to look at opportunities which are tailor-made for the commercial vehicle business, and looking ahead, we will keep on exploring opportunities which are close to the commercial vehicle and the logistics business. If I may also add, in the past few years, we have driven some strategic shifts in the company which have led to good results in terms of strong margin growth, robust free cash flows, and high return on capital employed.
And the other stock that listed on the bourses today was Billion Brains Garage Ventures, the parent company of the stock market trading platform Grow, and it was a strong debut on the bourses today. The stock now 22% higher compared to its issue price of 100 rupees. The IPO saw overall subscription of 17.5 times, with investors placing bids for 641 crore shares in comparison to the 36.5 crore shares on offer. The stock listed at a 12% premium to its issue price of 100 rupees on the NSE. And the big story, of course, taking forward that point from Grow's listing, and that has had a bit of a rub-off effect on the other capital market names as well, be it NSDL, be it CDSL, and of course, the other big factor has been the results from BSE. So Sudarshan is here to break that down for us with regards to the capital market names. Sudarshan.
So all the capital market names are high in today's trade, and one reason you have talked about is the Grow's listing. It had listed with a premium of 12% against the issue price, and now it's up almost 20 to 21%. Now, what's going forward? So currently, company's brokerage part forms almost 83% of its total revenue, and MTF forms just 2 to 3% of total revenue. Now, going forward, company is saying that brokerage part contribution will come down and MTF part contribution will increase, and in near to medium term that part will increase in the range of 12 to 13%. So that's about growth. Second catalyst for today's capital marketplace move is BSE's Q2 results. But before I talk about the Q2 results, in the last 2 to 3 months, two topics that have been the focus points for BSE. One was about the change in the expiry day, which was changed from Tuesday to Thursday. And there was an expectation that once the day changes, there would be a downtick in the turnover. But fortunately or surprisingly, on the very first day when the day had changed, it had recorded the highest ever single-day turnover on the expiry day, and that turnover was around ₹50,000 crore. Regarding the weekly expiry, there has been a question, will the weekly expiry stay or go? Now, recently we had comment from both Finance Minister and SEBI Chairman that anything that related to weekly expiry comes out will happen only after detailed consultation, and that day also we had seen stock moving almost 10% higher. And today, there is another reason, that's the earnings for Q2 FY26 were result, and operationally those earnings looked very strong. On the operating part, revenue has increased almost 11% on a sequential basis, and transactional charges, which forms the major part of BSE, that also saw a healthy increase. Margins saw a minor contraction, but mainly it was because of increased regulatory charges. As far as earnings are concerned, it was a healthy set.
Healthy set indeed. Sudarshan, thank you for that update. Now on to the latest in the Jayaprakash Associates matter. Voting is currently underway on all 5 resolution plans submitted for the debt-laden company, with proposals from Vedanta Group, Adani Group, Dalmia Bharat Group, among a lot of others. Ritu brings us more details on this. Ritu.
Well, voting is officially underway on 5 competing resolution plans to acquire Jayaprakash Associates, and in the fray, as we've been reporting, are some of India's biggest corporates: Vedanta Group, Adani Group, Dalmia Bharat, Jindal Power and PNC Infratech. This voting window, we understand, stays open until the 20th of November, although sources indicate the Committee of Creditors, which is led by the National Asset Reconstruction Company, could extend the window if they need more time to weigh the offers. Now, in terms of what is on the table finally, Vedanta Group has made the highest offer in absolute terms, pegged at around 16,000 crores as we had reported previously, and that includes about 3,770 crore rupees as upfront payment, 13,000 crores to be payable in 5 years' time. Adani Group, on the other hand, has submitted a proposal of about 13,500 crores, but with a much larger upfront payment of 6,005 crore rupees and another 6,700 odd crores payable after 2 years. In net present value terms, Vedanta's offer works out around 12,505 crores, just a notch above Adani's 12,050 crore rupees. Now, while Vedanta's offer is the highest on paper, Adani's larger upfront payment could make it more appealing to lenders. Now, before voting began, there was even a challenger round where only Vedanta and Adani had participated. Nonetheless, all the remaining bids, which are smaller, are also being considered. Dalmia Bharat has offered about 11,600 crores, PNC Infratech around 11,500 crores, and Jindal Power close to 6,700 crore rupees. Remember, JP Associates is before the insolvency court with admitted claims of more than 57,000 crore rupees, and it has been a high-stakes contest largely between two corporate heavyweights, Vedanta and Adani Group, and hopefully by the end of the month we'll have some clarity on who emerges as the winner.
Ritu, thank you for that update. The other big event later this evening is the October CPI number, and the CNBC-TV18 poll sees it at 0.25% compared to 1.54 in September and well over 6% in the same month last year. This is the lowest reading after the new series of the CPI was created in 2013. Lata has more on what to expect and why. Lata.
Well, actually, ridiculous number, isn't it? Who would believe inflation is 0.25%? It is as low as that, and food CPI is actually minus 4% compared to last year. That's our poll saying. And if it does come at minus 4 or whatever, it would be the 5th consecutive month when food prices in year-on-year terms as a whole are lower than what they were last year. Actually, this whole 0.25 headline inflation, minus 4 food inflation is all because of a very high base. Last year, same time, potatoes, onions, tomatoes, not same time, more in October, all these were, ruling at 100 rupees. You're getting tomatoes at over 100 rupees and stuff like that. So it's the base effect that's making things ridiculously low at this point in time. But regardless, food inflation is going to remain negative for the next 2 months also. Again, because of the high base. And economists are now veering around to the view that for the full year, the average inflation will be 2% or maybe 2.1. That's the number I got in the poll. RBI is still standing at 2.6. So all these numbers are going to confront the RBI in the next monetary policy meeting on December 6th. They're going to have behind them a 0.25% inflation and the fact that the whole street is standing at 2% for the full year. What is their mandate? To keep inflation between 2 and 6%. So if the average is going to be 2, then, the Reserve Bank is almost going to be forced to cut. Can you be so sure of the cut? No. Because on November 28th, we are getting the GDP number. GDP number for the July, August, September quarter may well come at 7.5% or thereabouts. Then even if there is space for a cut, is there a need for a cut? And better still, if the trade deal is signed, then the economy takes, a kind of a sentimental step up. So no one's of the view that there is a guaranteed rate cut in December.
To cut or not to cut, the question always on the street, isn't it, Lata? Thank you for that update. By the way, the Nifty Midcap Index is now at a record high. It was supposed to be 60925. It has crossed that level on an intraday basis. So while the Nifty is nearing towards 26,000, the Midcap Index has hit a record high of its own. Well, some of the top gainers on a year-to-date basis, L&T Finance is the top gainer on the Midcap Index this time around on a year-to-date basis, up 120% this year. Aditya Birla Capital, Godfrey Phillips, Indian Bank, all of them have had a very good year so far among the Midcap Index. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, India is waiting for a response from the Trump administration on the trade deal. Sources have told CNBC-TV18 that a fresh round of talks between the two nations is not needed at this stage. Abhimanyu is here with more details on this.
Government sources have indicated that India is awaiting the American response on the BTA talks which have already taken place between both the sides, and there is no need for a fresh round of negotiations. Sources further added that several issues across various sectors have already been discussed threadbare between both the sides as part of discussions for a bilateral trade agreement, for which they had earlier indicated plans to conclude the first tranche by October or November of this year. Sources indicated that discussions between both the sides so far have been the most detailed and WTO compliant compared to many other countries. Earlier, it was indicated by sources that both the sides had converged on most of the issues, on most of the trade issues, and were very close to a deal. So it remains to be seen how early both the sides are going to conclude all pending issues, even as last month CNBC-TV18 had reported that technical discussions were underway on issues like non-tariff barriers, which were being discussed between India and the United States. Several issues have already been threshed out as per sources, and all eyes, of course, would be on what is going to be the US response on the negotiations which have taken place so far.
Abhimanyu, thank you for that update. Moving to the poll-bound state of Bihar, where the pollsters have given the ruling NDA the edge over the Mahagathbandhan, while Metrais gives NDA 147 to 167 seats. JVC and People's Insights pegs NDA's seat tally to be between 133 to 150. The RJD-led Mahagathbandhan is expected to win between 70 to 102 seats, well short of the 122 majority mark in the 243-member assembly. Other pollsters such as Chanakya Strategies, Dainik Bhaskar and People's Pulse gives the NDA a clear majority while limiting the Mahagathbandhan to less than 100 seats. Only Chanakya Strategies gives the opposition about 100 to 108 seats in the assembly. The counting of votes in Bihar will take place on Friday, the 14th of November. On to the latest in the Delhi car blast case now. The NIA has set up a special 10-member team which will coordinate with the Jammu and Kashmir, Delhi and Haryana police to review case files connected to the Jaish-e-Mohammed. This comes after the Home Ministry transferred the Red Fort car blast case to the NIA. Meanwhile, a high-level meeting between the NIA Director General and the IB Chief is currently underway. Prime Minister Narendra Modi will also hold the meeting with the Cabinet Committee of Security at about 5 p.m. later this evening. At least 12 people were killed and several injured after a powerful car explosion ripped through Delhi's Red Fort area on Monday. CNBC-TV18 learns from sources that the suspect may have acted out of panic and desperation due to the raids carried out by the security agencies. Sources say that the bomb was premature and not fully developed, thus limiting the impact. We'll take a short break. More news and updates on the other side. Welcome back, bringing you the latest now from the ongoing drama within the Tata Trust. Has named Neville Tata and Bhaskar Bhatt as the new trustees. They have been inducted to the board of the trustees of Sir Dorabji Tata Trust for a period of 3 years. Meanwhile, Venu Srinivasan has also been appointed as trustee and vice chairman for 3 years. Srinivasan's lifetime tenure has been revised following a new Maharashtra government rule limiting the number of lifetime trustees. Mangalam is now here to tell us more about the 32-year-old Neville Tata.
The Tata legacy has turned a page. The new generation has stepped onto one of the most powerful boardrooms of India, the Tata Trust. 32-year-old Neville Tata, who's the son of Tata Trust chairman Noel Tata and Alu Misri, has been appointed as the trustee of the Sir Dorabji Tata Trust, effective November 12th. His appointment marks a generational shift in the trust that controls 28% of Tata Sons, the holding company of the Tata Group. Born into one of India's most respected business families, Neville represents the next wave of Tata leadership. He's the grandson of Simon Tata and the grandnephew of Ratan Tata. Educated at the Bayes Business School in London, Neville holds a degree in business management, bringing with him an international perspective and a modern retail sensibility. He began his career with Trent Limited, the Tata Group's retail arm, in 2016. Over the years, he's worked across Trent's businesses, from packaged food and beverages to leading Star Bazaar, the group's grocery retail venture. He's also played a key role in the success of Zudio, which is the fast-growing value retail chain that has become one of India's most talked about retail stores and added a lot of value to Trent as well. Joining Neville as a new trustee is Bhaskar Bhatt, the former managing director of Titan, who steered the company through a golden era of retail expansion between 2002 and 2019. The trust has also reappointed TVS Motor Company chairman Venu Srinivasan as vice chairman for a 3-year term, after revising its structure to comply with the new regulatory norms that cap the number of permanent trustees at 1/4 of a public charity's board strength. Following this change, Noel Tata now remains the only permanent trustee of the Sir Dorabji Tata Trust. The other trustees include Vijay Singh, Pramit Javeri and Darius Khambata. Together with the Sir Ratan Tata Trust and the Sir Dorabji Tata Trust, they hold a combined 66% stake in Tata Sons, giving it a commanding influence over the Tata Group's holding company. With Neville Tata's induction, the trust signals continuity with change, strengthening governance while bringing in the next generation of Tata leadership, from Jamshedji to JRD, from Ratan to Noel, and now Neville Tata. The Tata story enters its next chapter.
And watchers of this could only hope that the story is as glorious as the previous chapters have been. Mangalam, thank you for that update. We take your leave on this edition of Business Lunch. We leave you with the markets at the highest point of the day. Midcap radar on the other side. Stay tuned.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. And what a stellar rally today. We are above the 25,900 mark. Third consecutive day of uptick on the markets. Midcaps doing well. Banks, in fact, as a matter of fact, are underperforming the markets today.
That's right. Good afternoon, Sonal. And like you mentioned, 25,900 has been scaled by the Nifty, so that's a good part. And when you're looking at the mid-cap index, up almost 0.9%, so a lot of rally seen within the broad end of the markets. Well, a lot lined up on the show, so let's start off with the top headlines. It's a strong Wednesday trade as the market rallies. Sensex sees gains of 700 points. Mid-cap index hits a record high. IT, along with oil and gas, are among the top sectoral performers.
The stock of Grow owner Billion Brains Garage Ventures scales 120 post its listing, a 20% premium to its offer price of 100 in a promising debut.
Earnings boost seen for multiple stocks. Companies like Parag Milk, IOL Chem, BLS International and Kirloskar Oil Engine surge on the back of strong Q2 numbers.
Max Financial Services gains after reporting its Q2 numbers. Company sees AP growth of 16% and management tells CNBC-TV18 that they expect VNB margins to sustain between 24 to 25% in FY26 and they expect GST impact to be nullified over the next 1 to 2 quarters.
BSE's strong Q2 show helps fire up capital market stocks. The exchange's turnover data remains strong despite a change in the expiry date.
Okay, those are the top headlines, but the bigger headline is that the Nifty has scaled the 25,900 mark. It's a 220-point rally that we are seeing right now. Midcaps in line with the exchanges currently. The Bank Nifty, though, is underperforming in a market like this. Just imagine 0.4% of a rally, and we're calling it an underperformance. That's the kind of markets that we are seeing right now. Info Edge has reported numbers. So those numbers, the analysis will also be up for you on the screen in just a bit. A wee bit of come off from the high, and that's led by the Bank Nifty in the markets as well right now. So revenues are 14% for Info Edge. We do have profit before tax and one-time gain at 350 crore rupees versus 331 crore rupees. So we'll understand the breakup in different segments as well, what has happened in terms of segmental performance and what the outlook of the company is going forward as well. But mid-caps, they take all the action away.
That's right. Sonal, in the last 15 minutes, I think there have been around 7 to 8 earnings that have hit the screens. IRB, Infra, Info Edge, quite a few numbers. Insecticides India too. So a lot lined up. But this is our special segment, Midcap Movers. Hormaz is standing by the wall to take us through the midcaps that are moving around in the session.
Well, earnings aside, the midcap index has hit a record high just a few minutes earlier, surpassing the previous ones, and it is continuing to move higher. No breaks on the midcap index right now, 520 points higher. So we'll start off with the stocks that are taking the market higher today predominantly, and that is IT. And you take a look at large cap IT, take a look at midcap IT, all of them contributing to those gains. LTI, Mindtree, Emphasis, Persistent, even the larger names are doing well for themselves. Well, in terms of positive earnings reactions, there are a lot of names that are seeing double-digit gains in today's session. You look at Pearl Global, look at Kirloskar Oil, Parag Milk, all of them trading with gains of as much as 15% in today's session in response to their results. What has not had a very pleasant reaction to their results is Office Space Solutions, was down almost 10% at one point. Thermax continues to move lower, and PI Industries, after the subdued management commentary on the road ahead, has resulted in the stock taking a bit of a nosedive just a few minutes earlier. Stocks doing well on the volumes front. Tejas Networks, a major underperformer this year, but today trading with gains of around 7%. BLS International reported earnings a few days ago. I've seen a big spike in the last few minutes, 10% higher on that stock now. And Sirma SGS continuing to build on to yesterday's gains, 6.5% higher here as well. And lastly, stocks that are at a 52-week high in today's session. Yatra, the 4-day winning streak has taken the stock above its IPO price of 142. Carousel continues to move higher as well. And Cartrade Tech now nearing its record high levels of 3180, 5.5% higher on that stock as well.
Take that point. Thank you so much for joining us. So with all those names, Hormuz, some interesting moves on individual names. Let's welcome Siddharth Rai Mangla from Stockbox Technologies for a technical check on the markets. Siddharth, good afternoon. What's happening? What are the charts suggesting now? Will we see higher levels from here, or is it due time? It could be the time where we could see some profit booking from the highs.
Hi, Sonal. Good afternoon, and thank you for having me, first of all. See,
So this momentum which started building up in the second half yesterday, it has only become stronger with time because one, Nifty has very easily managed to take on these big levels of 25,700, 25,800. These were big resistances for the past few days. Nifty very easily managed to go past them because of some very good breakouts in heavyweights like Reliance and even in IT space. And secondly, even after a very good opening today, Sonal, Nifty was very comfortably trading around 25,900 for the most part of it, and then we moved on towards the day's high and breaking out above even 25,900. So I do think that this momentum is here to stay, and even we can see it extending towards 26,000, 2650 levels, probably even by the closing today, and that is not being too optimistic because I do think that this momentum is very strong, Sonal.
Okay, and Siddharth, and what are your individual picks for the day?
Yeah, sure, Vivek. I see two stock picks. Both of this we have to buy. The first one is Emphasis from the IT space. There is a very good breakout in this counter. In fact, even if we look at the past few months, this stock has shown a lot of resilience compared to the other stocks in IT space. So I do think there is a lot of space for an up move in this counter. Emphasis can be bought. Right now, the spot is trading around 2852. You can buy it here. The stop loss will be 2825. And our targets being the first target 2905, the second target 2925. The second stock is Sona BLW, Sona Comstar. See, again, there was a very sharp up move in this stock from its lows for the past probably 1 month. Even now, the stock was trading very independently from the whole of market. It is around a very good breakout. Sona BLW is very close to a fresh momentum. So Sona BLW can also be bought. Right now, the spot is trading around 497, 498-ish. We can buy it here. The stop loss will be 489, and our targets being the first target 515, second target 520.
Okay, so those are individual names, Siddharth. Any trade on Bank Nifty? What do you think would be an important level to watch? What kind of moves do you expect?
Definitely, Sonal. If we, straight away look at Bank Nifty, it might be looking like an underperformance. But after all that up move which we saw in Bank Nifty in October, this was kind of a breather. And I was waiting for this breakout above 58,200 in spot for Bank Nifty for the past few days, and now finally in today's session this breakout has come. So I do think Bank Nifty is heading towards 59,000 and 59,300 in the next few days, and Bank Nifty will be an outperformer compared to Nifty. I do think so because the kind of we'll be making the new fresh high probably in the next couple of days too. So Bank Nifty looks even more stronger compared to Nifty when we look at the structure.
Okay, Siddharth, thank you so much for joining us, giving us a view on the markets, individual trading picks as well. Well, we'll move on and we'll slip into a short break. We'll put the spotlight on IOL chemicals and advanced enzymes on the other side. Welcome back to Midcap Radar. Well, as promised, a lot of midcap companies that delivered results are moving very sharply in the session. IOL Chemicals and Advanced Enzymes are buzzing in trade after reporting their Q2 numbers. Ekta joins us with more details.
Thanks for that. Well, I'll start with IOL Chemicals, where the revenue growth has been quite steady. It's up around 8%. And the growth was primarily driven by the pharma segment, which was up around 14.5%. Now, margins have improved year on year as well, which is basically which was again led by the pharma segment. So, for example, the EBITDA is up around 37% this quarter. Margins are at around 10% this quarter versus 8% on a year on year basis. And the profit is up around 56%. Now, for the pharma segment in particular, the EBIT has grown 44% on a year-on-year basis, and the EBIT has risen for the chemical segment as well, though it's been quite subdued in terms of revenue. So overall, steady growth coming in for IOL Chemicals, which has primarily been led by the pharmaceutical segment. Now, in terms of advanced enzymes, if you look at it, the revenue has been steady, so it's up above 25% in terms of growth this quarter. The EBITDA has grown to around 42%. Has grown 42% to around 60 odd crores, with the margins expanding to 32.5%, which is an expansion both year on year as well as on a sequential basis. And the profit is up around over 30% on a year on year basis. So overall, good going for both IOL Chemicals as well as Advanced Enzymes in terms of a reaction.
Oh yes, what a stellar move. Thank you so much for joining us with all those details, Ekta. And of course, it's a mid-caps day. We are seeing almost a 1% gain on that index. We do have something like an Indocom that reported numbers yesterday that is up 11% in trade. There's Tejas Networks, which is up 7%. GSFC also reported numbers. So that index is seeing gains of 6.5%. Transformers and rectifiers reported numbers of the weekend, and there's some gain that we are seeing currently here. Greaves Cotton is the other one, 5.5% higher. Sirma SJS is another stock which is seeing gains of around 6.5%. Zia Entertainment is up 4.5%. Wellspun Living is the other stock which is on our radar, up around 5%. Parak Milk Foods on the back of a good set of numbers. We are seeing a gain of 13% there. Gujarat Fluorochemicals is up 5%. Actually, a name is stock. There's some stellar rally that is coming by. But of course, there are declining stocks as well in the mid-cap space. But for now, we'll do one thing. We'll slip into a short break. When we come back, we'll put spotlight on Thermax. That stock is declining. On the other hand, Kirloskar Oil Engines, that stock is doing well in trade. We'll talk about these two names in greater detail. Welcome back. You're still tuned into Midcap Radar, and Thermax is the other stock on our radar. It is lower in trade, reported a weak set of Q2 numbers. There was some commentary coming in from the management as well in conference call. Winnie is joining us with more details and what the management indicated. Winnie?
Hi. So yes, absolutely a weak set of numbers that came in from the company this time, and the stock opened up in the red as well with sharp cuts. Miss on all fronts, execution was a challenge. Obviously, margins was impacted by adverse product mix, project cost overruns that were there, and key segments also the industrial product and industrial infra side. Industrial infra and chemicals specifically saw a sharper decline in terms of the performances on the EBIT front as well. So obviously those were the factors that impacted the earnings. Now in the con call, what the management key highlights that I would like to say is one, they said that the order book, they expect that to grow for more than 20% in FY26. They're confident of getting that 20% growth. Revenue and profitability, they said that yes, there were challenges this time, especially in the first half of the year, FY26, but they expect that to ease off in the second half of the year, and overall they would perform better in FY26 versus FY25. Order backlog is going up in TWES segments for them. That is what the company highlighted. They expect large orders now to start coming in for the second half of the year, especially in the TWES segments. Volume, they said, have started picking up as well in October and November. So they're expecting positive signs in the second half of the year. That is something that we'll be keeping an eye out on. Though for chemical business, they said that they're still below their expectation of or internal target that they have of 250 crores quarterly order book over there. They're still below that level. So that is something. They're at around 200 crores. They want to come up to 250 crores. They're still below that level, but they're working towards that. But I expect second half to be better in terms of all the challenges they think. Seems like a bit in terms of worse is over for them as of now.
Well, Vinny, thank you so much for that. Like you mentioned, a lot of one-offs is what has been holding back the trajectory as far as Thermax is concerned. But hold on, you've also been tracking Kirloskar Oil Engines, that particular stock higher on very strong volumes. How did Q2 look?
So Q2 for this one is a different story, right? Strong set of numbers that came in from the company. Revenue, profits above the BBG estimates. Margins were in line with estimates as well. Strong growth that the company managed to see in its B2B sales. Mainly that was led by the power generation as well as the industrial segment. So 40+% growth on a year-on-year basis in Q2 of FY26. Even the international market, when you look at that, that continued to see a strong performance in Middle East and North Africa as well. So MENA region, that is what they saw strong growth coming in. And overall, 34% growth in Q2 this time. Margins at 13.38%, stable, largely stable on a year-on-year basis. Profit seeing a growth of 27% as well. And exports that also saw a growth of 35%, and domestic side of the business also saw a good growth of more than 30%. So yes, a good growth that is coming in there for the company, and that is why the stock is passing it through.
Oh yes, big surge in the stock price as well. Thank you so much, Vinny, for joining in and giving us a sense of these two names. Let's move on. The demerged commercial vehicles business of Tata Motors has listed on the bourses at around 340 rupees a share. The listing, which comes a month after the listing of the passenger vehicles business, was in line with the brokerage's expectations. Rashna spoke to Girish Wagh, who is the MD and CEO at Tata Motors, to understand the outlook for the commercial vehicles entity of Tata Motors going ahead. Listen in.
Let me give a historic context. I think Tata Motors listed as Tata Engineering and Locomotive Company Limited way back in 1955. Since then, the commercial vehicle business of Tata Motors has been contributing to the country's economy, country's progress, especially in road transportation, infrastructure building. And today marks a very important historic milestone that we are getting listed as a separate entity. Listing as a separate entity gives us now sharper strategic focus, freedom to look at opportunities which are tailor-made for the commercial vehicle business. And looking ahead, we will keep on exploring opportunities which are close to the commercial vehicle and the logistics business. If I may also add, in the past few years, we have driven some strategic shifts in the company which have led to good results in terms of strong margin growth, robust free cash flows, and high return on capital employed, while we also pivoted towards digital and sustainability. Going ahead, profitable growth with all other financial metrics that I mentioned, and looking at the global platform will continue to be our agenda.
So what's your immediate priority?
Immediate priority is, of course, continue to deliver the financial results that we have been doing over the past few quarters and years. I think that's what continues to be the priority.
And your outlook on the industry?
I think post GST rate rationalization, there has been good demand which has been seen on two fronts. Primary demand mostly in smaller commercial vehicles due to reduction in the prices, and due to increase in consumption, one is also seeing an increase in freight, which will therefore lead to secondary demand, especially for long haul, medium and heavy duty trucks. And therefore, we are quite optimistic about second half of this financial year.
About the regulations, a lot of norms coming in when it comes to emission and also towards electrification. How do you see that?
So decarbonization, circularity will continue to be the most important agenda for us. As far as regulatory roadmap is concerned, there has been a very good close coordination with the government, and whether it is on safety, emissions, CO2, I think there is a close working which is happening, and there is a fair bit of clarity on how the regulatory roadmap will evolve. And as a company, I think we are not only working towards compliance, but actually leading some of the important transitions, especially decarbonization and circularity.
All right, that is Tata Motors CV Business. The commentary coming in from the management. Markets as strong as they were when we started the show. Midcaps firing away. But with that, we'll take your leave on this edition of Midcap Radar. Stay tuned. Your stocks will come when we return.
Hello, good afternoon. You're tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. In terms of the markets, a good day coming in there, and Nifty trading almost near the day's highest point, about the 25,900 levels, 25,920 approximately. There is where the Nifty is trading at. 200 points up today in today's trading session, 0.8% of gain there. Broader end of the market, that's doing well. Look at the Nifty Midcap. Slight outperformance coming in there. 1% gain almost for the Nifty Midcap as of now. That's almost near the day's highest point as well as a small cap also is trading with gains of 0.8%. So yes, in tandem with the benchmark indices is what the broader end of the market is doing. All the sectors are trading in the green. Mainly, obviously, we're seeing good performance coming in from the IT side, keeping out of that. Pharma, that's doing well. So most of the sectors managing to hold on to gains. Realty was the only one which was flip-flopping between the red and the green in today's trading session. Advance decline ratio today clearly in the favor of advances versus declines, and the advances ratio has furthermore increased as well. So the number of stocks in the advance side have just moved up higher through the day as well. And look at the gap between the advance and the decline ratio in the lines as well. So yes, 1,900 stocks on the advance side, but that's how the market setup is looking like. Nothing to complain today on that front. But to solve all your stock-related queries, we have our experts joining in with us. Asta Jain, research analyst at Hem Securities, as well as Somil Mehta, head of alternate research capital market strategy at Mirae Asset Share Khan, to answer all the stock-related queries. Asta as well as Somil, good afternoon, and thank you so much as always for joining us on the show. Let's get started with these queries for today. We have S. Jaykumar, who's writing to us from Tamil Nadu. He is holding 100 shares of Force Motors. This is at a price of 18,240 rupees per share. So he's making a loss on this one. The other one is Orkla, which is obviously the recently listed company, and 715 rupees is what his price is. Now he wants to know whether he should continue to hold both the stocks, or what is the outlook in terms of the story for both these plays. Asta, your view, Force Motors as well as Orkla.
Hi, good afternoon to everyone. Talking about Force Motors, the results which they declared in the Friday gone by, I think that was absolutely very strong set of numbers, because what we have seen that the operational performance was equally strong. Their EBITDA, it show a rise of around 28%. And in fact, the sales have also grown, I suppose, 7% on Y-on-Y basis. So bottom line, top line, operating performance, all were in line and they were good. I suppose that these results definitely make a case for more upside from here, because in fact they have registered a good sales volume which they have released in their October figures also. So all in all, I think one should remain invested in this counter with a price target of somewhere around more than, I should say, 20,000. So 22,000 is what the price target which we would like to assign to this counter at the current juncture. Now talking about Orkla, Orkla is a recently listed company, and what we have seen that the listing was a muted one. The main reason behind the listing, although valuation which they have done were not very high, because they have bought the issue at a PE multiple of 32. But what we have seen, because it was a more than 700 issue price, which the company has bought the IPO. But what we have seen that the kind of business they are into, the ready to eat was also contributing to the major part of the revenue. In such a segment, I think the growth, we really need to see how this company going to perform, because in fact, their past figures were also not very encouraging, only on the growth parameter. And that was also the main reason that they have bought the valuation at the lower level. And in fact, on 13th of the November, we are expecting this counter to post the numbers. So idea here is to stay invested in this counter. Let's see how the numbers pan out to be, and then make any decision on this counter. So for both the counters, I believe a hold is a better strategy, which can be recommended from our side at this point of time.
Hold is a strategy that you would recommend from your point of view. But Somil, your view on Force Motors, Orkla, I know there is not much in terms of a chart, but for Force Motors, what is the indication there?
Force Motors definitely positive. Long-term trend is already positive. Medium-term trend is also positive. In the very short term, there's a small consolidation going on at the moment. But I think 17,000, 16,500, that's a support zone for this stock. And I think this stock should continue the uptrend for a target of 20,000, and then the next target would be 21,900. So these are the two targets I have, and positive on the stock.
Okay. Positive on the stock over there for Force Motors. We have Ashok Leyland that has reported their numbers as well. Revenue growth of 9.3% on a year-on-year basis. We have it at 9,588 crores. There was a one-time loss. This time was a one-time gain in Q2 FY25. So keep an eye out on that. The net profit is slightly above what we were expecting in CNBC-TV18. 771 crores is what the net profit has come in at versus a poll of 705 crores. EBITDA overall performance 12% versus 11.6% is the EBITDA margins over there. Seeing a bit of an improvement in terms of the EBITDA growth as well versus the poll is what we'll be keeping an eye out on. As of now, Ashok Leyland, the stock is down 0.3%. We'll wait out for more details on this one. But yes, those were the numbers there for Ashok Leyland for y'all. Q2 number is what we're keeping an eye out on. Profits and revenue almost slightly just above what we were expecting. Largely in line is what I would say coming in for Ashok Leyland. Next query, let's move on to that then. We have this query coming in from Soma Shekhar, who's writing to us from Bangalore. He's holding 300 shares of RBL Bank at a price of 261 rupees per share. He wants to know the long-term prospects of RBL Bank. What's your view on this one, Asta? There's a lot that happened in Q2. There were a lot of announcements that came in as well in the recent time. Now, where is RBL Bank headed?
So we believe that this counter is well poised to move to the level of 360, 370 at present moment of the time. So recommending a hold on this counter with these targets of 365 to 370. Now talking about the fundamentals, what I believe that fundamentals are looking to be intact for this counter, because what we can say that ROE and ROAs are looking now good. In fact, balance sheet has also now started showing some sort of a strength. So we believe that definitely this counter has the a potential to move more from here, and hence recommending a hold with the price target of 365 to 370.
Okay, surely keeping an eye out on this one. But in terms of charts and technicals, Amil, the viewer is bought it at 261 rupees now. Where do you see this headed in the long term?
Have the same targets, 265, 260 levels. For the stock, uptrend is definitely very strong, long-term, medium-term, and short-term as well. In the very short-term, there is a small triangle formation, but I think that triangle will break on the upside. The next target in the short to medium-term would be 360, 370 levels for the stock. Very, very crucial support at 40 daily exponential moving average, which is very close to 300. So keep an eye out on that support level.
Okay, keeping an eye out on that support level over there. Keep an eye out on the stock as well going forward. As of now, 319 is what the stock is trading at. Next query for today is come from Ramesh, who's writing to us from Coimbatore. And he's holding 1,000 shares of IIFL Finance. And this is at a price of 438 rupees per share, making a profit on this one. Wants to know if he should continue to hold IIFL Finance for the long term. Asta, your view?
Long-term view is a positive for this counter, and hence we are recommending a hold on this counter with a price target of 605, that is 605. Now talking about the fundamentals of this company, what we have seen that the quarter was a mixed quarter one, but they're definitely with the rise in the gold prices, we have seen a strong momentum in their gold loan segment, and that was the major reason that we have seen a growth across that segment with the higher gold prices. But going ahead also, we believe that this counter will start showing some sort of improvement in their other segments as well, and hence we are positive on this counter. With the rise in the gold prices, we believe definitely this will gonna help the company in posting a decent set of numbers going ahead as well. So recommending a hold with a price target of 605.
Okay, recommending a hold with a price target of 605. That's a view from Asta. Somil, what's your view for the stock as well? Last 6 months, when you see in terms of IIFL Finance, done decent, not bad, not good. But what is the outlook now that you have coming in for IIFL Finance? Decent returns. Where is it headed from here on? More upside?
Absolutely. In the last couple of months back, the stock has taken support at 200 daily moving average. A small ending diagonal pattern was broken out a couple of months back. Very good signs. The previous month's high has already broken on the upside. Positive for the stock. In the medium term outlook, I think the next target would be 610, and the next target on the upside would be 680. So yes, medium term, absolutely positive. In the short term, there could be a pause, there could be a small correction, but I think the support is at 520 and 510.
Okay, support is at 520 and 510. Keep an eye out on those support levels over there. Short term maybe could take a pause given that it's gone up already 30% plus in 6 months. Long term, medium term, positive outlook there on the technicals as well. But on that note, we're going to sift into a very short break, viewers. But here is a quick note for our viewers. You must have noticed that there is a money control stock score just above the line graph, and this is a score that is assigned to each stock based on money control's multi-factor algorithm. It is calculated by analyzing 40 parameters including both current and financial statements, price charts and technical indicators for each stock. Each of the individual parameters considered for calculation of 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score and a V factor and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered advisor for the investment decision. Welcome back to your stocks on CNBC-TV18. We have the market still at 25,892, just below 25,000 right now. 196 points uptick is what the Nifty is trading at right now. So slight bit of a fall from the day size point, but still strong green coming in for the Nifty. Let's keep it going with those stock-related queries then, and we still have Asta as well as Somil with us to answer those doubts. The next query for today is come from Tanya, who's writing to us from New Delhi. She's holding 150 shares of REC at a price of 491 rupees. Wants to know if she should continue to hold or look to sell at the current levels. Buy price is 491. Stock is at 362 rupees, making a loss. Asta, your view for REC?
So I would like to recommend a hold on this counter, although what we have seen that the results were not very strong because the loan growth was very, muted sort of. But what we are liking about this counter is that despite that, management has kept their loan growth guidance of around 11 to 12% for FY26. And there was a major reason behind, soft results, and that were due to some strong repayments which this company has done. So my idea here is to stay invested in this counter because if we look after the valuations also, now they are quoting at a decent valuation. So in the hope that what management has guided, they will deliver on the loan growth front of 11 to 12% along with the decent valuation. We recommend a hold on this counter with a price target of 410 to 420 at the initial level, although I know the cost price is at around 490, but I would like to recommend a hold. Just hold for these levels and then again review the query after these levels get achieved.
Okay, surely keeping an eye out on those levels over there. On the technical front, what are the levels that we're keeping an eye out on, Somil? Last 6 months, obviously, the stock has not done anything. Last 1 year also, it's down almost 30%. What should we do now?
REC is in a downtrend, low top, low bottom formation, struggling to go above 20, 40, even 200 daily moving average. So overall downtrend, negative on the stock in the short term, in the medium term, both. The next target on the downside would be 348. That is a very, very strong support for the stock. But if it does not sustain on that level around 248, then the next level would be around 305, 310 levels.
Okay, keeping an eye out on those levels over there. The next query we have is come from Gurbinder Singh Bedi, who's writing to us from Noida. He's holding 25 shares of Maruti Suzuki. Price is 10,229 rupees per share. Making a profit on this one. Wants to know if he should stay invested or maybe even add more shares is what he's watching out for now at these levels for the long term. Asta, Maruti Suzuki, what's your view?
View is positive, but add on every dips is recommended rather than adding at current level. So yes, view is positive. One should remain invested in this counter and accumulate this counter at the lower level with a price target of around 16,500 to 16,800. Now, talking about the fundamentals of this counter, we believe that the company it has a strong domestic market share. It has shown a decent set of numbers. So what we have seen that there was a resilient revenue growth which we have seen, and that is mainly due to better export which we have seen in this counter. But idea here is that they will going to see continuously a strong demand, and that makes a case to hold this counter in the coming days. It can reach till the level of 16,600 to 16,800. So a hold is recommended for this counter.
Okay. Surely a hold recommended there. But on the technical front, what are the levels that maybe they can look to buy or add more of Maruti Suzuki?
Absolutely. Every dip is a buying opportunity for the stock. A great momentum in the medium term outlook. In the short term, yes, there has been a little bit of correction and it is trading below 20 daily moving average. But I think on the weekly charts, on the monthly charts, very strong. The next level on the downside would be 14,600 levels, which is a very, very strong support. And I don't think that the stock will go below this level. Buy on dip should be the strategy, and on the upside 17,000 would be the next target in the medium term outlook.
Okay. Surely we'll be keeping an eye out on that. Let's move on then to the next query. We have a query coming from Muthu Lakshmi from Bangalore. She's holding 400 shares of Samvardhana Motherson at a price of 96 rupees per share since August 2025. Long-term investor wants to know what should she be doing with them and should she add at the current levels. What's your view, Asta?
View is positive because I think that they have shown in their numbers the revenue was up. So view is mostly positive, although what we have seen that the profit after tax was a bit down. But what we have seen that going ahead, we believe that whatever cost they have incurred, that will definitely going to help the company in posting a good set of numbers going ahead. And we are believing that this company will going to see some sort of a strong demand in the Q3 and Q4 of FY26. So on all that basis, we are recommending a hold for this counter. And our view is just to hold this counter. Price target can be set at around 130 to 140.
Okay, keep an eye out on those levels over there. Next query is on ABB India. We have Rakesh Gupta who's writing to us from New Delhi, holding 200 shares of ABB India. Price is to 5,200 rupees per share. Making a loss on this one right now. He wants to know if he should continue to hold or sell or cut his losses right now. What should he do now? Somil, your view.
ABB India, I think it's a sell from my side. It's in a downtrend, trading below 20-40 daily moving average, just closed below 200 daily moving average last month. So clearly in a downtrend. I think the next level on the downside is around 4,800, 4,850. So if it does not sustain around those levels, I think the next level on the downside would be around 4,500. So exit would be my strategy.
Okay, exit would be your strategy there for ABB India. That's what we'll be keeping an eye on. Astha, your view for ABB?
My view is like one can remain invested in this counter, although yes, I do agree that the results were not good, and on that basis we have seen a strong fall in the stock prices also, because what we have seen was that the bottom line number were weak. And the valuations are also looking quite high. Keeping in mind when the growth is not delivered, then definitely valuation always looks expensive. But I think coming quarters can be a better quarter for this counter. So if anyone has a long-term horizon, only for the long-term horizon, I'm recommending a hold. Yes, in the short term, it may see some more pain. So if the horizon is long-term, then definitely a hold from my side.
Okay. Long term, then hold. Short term, you could see some bit of a pain coming in. That's the word on the fundamentals as well. But that was the last query for today. So Astha as well as Somil, thank you so much for joining us on the show. And viewers, remember, you can always email us your queries at the email address that's at the top of the screens for you all, and we'll get them solved with our experts. Last hour of trade is still left, so closing bell is going to be up next to take you all through all the market action in the last hour.
market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng currently trading 0.6% higher. The Taiwanese index trading with gains.
It's 160 points higher. This is the market saluting the exit poll numbers, and of course a little bit of enthusiasm around India, US as well.
The sense was overwhelmingly clear to us that the NDA has an edge.
25,828 is about 0.5% higher.
The markets which are actually doing far superior are the tech markets like Taiwan, Korea, China.
We now got an order for an underwater system that goes down to a depth of 1,000 meters.
The suit and ties on the one side, and then you have the new disruptors on the other.
Earnings looked very strong. Operating revenue has increased almost 11% on a sequential basis.
Liraglutide did contribute majorly to the 24% growth that we have seen this quarter. And
several issues across various sectors have already been discussed threadbare between both the sides as part of discussions.
The new generation has stepped onto one of the most powerful boardrooms of India, the Tata Trust.
And what a stellar rally today. We are above the 25,900 mark, third consecutive day of uptick on the markets. Midcaps doing well.
Well, that is the day so far. Markets are holding with a 200+ point pop. It's a good-looking day. It's on the back of the exit poll results. Maybe at the margin there was some anxiety, but I think that has been done away with. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom floor. Guys, hi. Good afternoon.
Hi. So the exit poll results, and plus global markets are fairly upbeat. Even Europe, as we speak, is up close to about 1%. So third day of gains, guys, for our markets now, and it's 25,900.
It's a feel-good day, right? Because you've got all the secondary market action. The Nifty is galloping along, and then the A-listers from the primary space, we've had good listings both grow, and even Tata Motors in its new avatar, there's been a fair amount of green. Quite a few of the earnings have actually hit the mark as well. Let's pull up Billionaire Brains Garage, 31%. So the market's really lapping it up now. And that's Tata Motors CV, 22% up on that one. So it's been good going. And then a slew of positive earnings. BSC would be a case in point. Something like a Biocon is up after numbers. So, it's not bad at all. Nigel?
Well, that's right. The day has been good. Headline index is good. And normally I quibble about, portfolios are not feeling too good. Today, the breadth of the market is good as well. You have two stocks that are advancing, but one stock that's declining. So that's good. And as you said, the new listings as well. However, just take note of the numbers that are at the bottom of your screen. HAL, we'll try to get a further analysis going. But in comparison to our poll, that it appears as a bit of a miss on the EBITDA number. Even the margin number is a few hundred basis points lower than what we're working with. So we'll try to get you further analysis. The day is good on the whole. HAL, I wonder whether there is any one-off in that operational performance. We'll get you further analysis, guys.
Absolutely. Just one more name, right? And this Bihar is done, hopefully. Exit polls, let's say, they hold. Or on Friday when the numbers come. The other, of course, next trigger in that sense is the India-US trade deal. And many have been of the view that, I guess for the lack of better guidance, that maybe this is, that deal is pending the Bihar elections, and maybe after the Bihar elections, we will see something moving on that front. Look at something like a Gokuldas. It's up 5%. So it's slowly creeped up back above the 900 rupee level, which is where it's kind of sold off. It's basically been in a 100 rupee band, 800 to 900, and it's done this round trip a few times. It's kind of sort of taking that out as we speak. So here's what's coming up here in the last 60 minutes of trade. Earnings, of course, listings, markets doing well. View what we'll try and get you a view on IT as well. The index is up 2%, the biggest contributor to what's happening on the Nifty. Grow will get you a valuation comparison more than anything else. I mean, how does it stack up against names like Angel, etc.? Zerodha, of course, which is the closest in terms of number of users, is unlisted, but against the listed ones, how does it now fare with the bump that it's got? We'll talk about the moves on Thermax, Kirloskar Oil, etc. These are all at the back of earnings. and more. I mean, as we go forward, we'll of course also get you a view from the UBS conference where our colleague Nimesh is there and he picks up the chatter from there. How should you position yourself in the last hour of trade? Mitesh Thakkar is with us. Mitesh, good afternoon. Good to have you here. So, you know, the gap up holds and maybe even has built on it. What would you do now?
Good afternoon, Prashant. You know, we were looking at 25,800. We opened above that, and there was hardly any decline below that. And the low we got was 25, I think 780 was thereabouts. And as long as we were about this 25,800, 750 zones, now I think a retest of the recent highs, which is around 26,100, should happen. And then beyond that, I think, you know, one can look at a test of 26,270, which is the all-time high. So this is the way we are looking at. So the bias is on the positive side. The recent swing high of 26,100 is what I'm targeting to begin with. On the stock side, I have a buy on Tech Mahindra with a stop at 1439 for targets of 1490. And Nestle is a buy with a stop at 1259 for targets of 1315.
All right. In fact, this week, tech has been the biggest outperforming sector. It's a 5% rally on the Nifty IT index so far this week. And the other one is defense. The Nifty defense index is up almost 4%. It was holding up in the green, but now as we speak intraday, you can see that fall in the defense index, courtesy the decline in HAL, where there appears to be a bit of a miss compared to the margins. H1 margins are 25% lower than the company's own guidance of 31%. But the top stock today is Grow, and that continues to move up, 31% up. We have with us Sudarshan now joining in with some details about the numbers and how the valuations stack up compared to the rest of the brokerages.
So it was a good listing. Company has listed a premium of 12%. Issue price was rupees 100 per share, listed at rupees 112 per share. And at this point, stock is up more than 32%. So I've tried to find out like what are the valuations against peers and what's the market share of the company. So just for example, Grow's market share is nearly 27%. And if you take a look at the peers market share, Motilal Oswal's market share is 2%, 361 almost nil, Nuvama 0.3%, Angel One is around 16%, and also Zerodha, which is an unlisted player, its market share is around 20%. So Grow is even bigger than Zerodha. Look at the valuations. Grow's valuation is around its FY25 P, that is 33.6 times. Motilal Oswal around 25 times, 361 around 45 times, Nuvama around 27, and Angel One is around 20 times. Now, what's going forward? So currently, 83% of its revenue comes from the broking business, and MTF forms just 1 to 2%. Now, going forward, company is saying that broking business contribution will come down, and MTF's contribution, which is currently in the range of 1 to 2%, will increase up to 13% in near to medium term, and MTF is going to be the biggest growth driver for the company. But for now, after a good or healthy listing, stock is only moving higher.
Thank you very much for that. And they're also very bullish on the wealth business, which the company has recently launched, the wealth platform. So that's going to be the new focus area for the company. Sudarshan, thank you very much for that. Gurmeet Chadha of Complete Circle is now joining in. Gurmeet, the issue price was closer to 100, now up 30%. How does it look to you?
No, it's a very high growth business. Rima, if you see FY23, they were hardly doing 1,200 crores revenue. I think in 2 years, it's jumped to 4,000 crore, and they're growing much faster than the industry. And I think you will see even the broking revenue getting, the concentration reducing. They've got into the AMC business. And I think it's not just a simple discount broker. I think the tech team is very good. A lot of content-based selling is what is driving a lot of volume. So it's a new age business which you can't really compare with Angel One or Motilal or some of the other ones which have also done well. So I think it's something which should be added over the long run on the new age side. If you want to add 3-4 names, I think this should figure there.
Even at this price, Gurmeet, comfortable buying?
We actually got a little lucky. We did buy some unlisted shares about 6 months back at in 3 digits, slightly sub 3 digits in some cases. We will look at adding more as and when we get better price opportunity. Market is pretty volatile, so maybe listing day is not a good day in terms of perfect price discovery. But it is something, as I said, in capital market play in new age business we should like to add it over a long term profitable business. Except for the year where they shifted operations from US to India, they had a tax payment where they reported loss. And I think the AMC business and other revenue streams will start reducing the dependence on broking as well.
No, I mean, it's interesting. Does this provide, does this lift the valuations for some other players or not really? I mean, that always that relative angel at 17, 18 times trailing, as you heard Sud say, or I mean, much larger, right? Just in terms of share. And this is a network effect business. So, yeah,
I think Prashant, Motilal is something I think which in my view is a little undervalued. I think because if you see maybe a year from now, maybe the AMC business will contribute as much as the broking business. They are already at, I think, 1.5 lakh crores AUM, and the performance has been pretty good across mutual funds, AIF, and other categories of funds they have been doing. And AMC business will give more stability versus broking business, which is subject to market sentiment, a lot of regulations and all. So I think that's something we like, and I think there's valuation comfort there. They had a bit of a issue in their housing finance NBFC, which is now largely behind. So I think that is something we would like to look at. We also have it in our portfolio.
Okay, all right. So that is the broking companies and how the market is looking at them. Hi, Gurmeet, just stay on. We want to discuss financials as well, particularly insurance, because Max Financial is the stock on the radar. Even now, Max is up 5%. Last time I checked. Clearly, the market has liked the second quarter performance as well as the commentary. Let's bring in Yash to understand what's worked for Max this time around. Yash?
Well, first of all, of course, strong trade as far as Max Financial stock is concerned today. And the story was largely told by the second quarter numbers which the company presented post-markets yesterday. On almost all the fronts, except for one, the numbers were ahead of what the street was anticipating, were ahead of CNBC-TV18 poll. And one count where they weren't, they were in line with what the street was anticipating. So your total AP, your retail AP was ahead of street estimates. VNB came with a strong beat to CNBC-TV18 poll. Margins also came with a strong beat. In terms of absolute numbers also on a year-on-year comparison, there was a strong growth which was showcased by the company. AP growing by 16%, retail AP growing by 9%, VNB growing by 25%, and the margins growing by about 189 basis points, coming in at about 23.6%. This was largely told yesterday itself. What was left to be told, the management pitched in for that one. Maintaining the guidance for the full year FY26, which is quite ambitious in terms of guidance. Continue to say that they will grow 300 to 500 basis points ahead of the industry growth rate. The margins would remain on a superior track. And of course, some idea was also given by the management in terms of the reverse merger between Max Life and Max Financial Services. The management said that they are working on it. And if that does not work out in a situation where approvals don't come in, there's a plan B, which is already in place. So strong numbers. The stock hadn't done much before today, of course, flat on a 1 month and 3 month basis. And all of that working for the stock today, the management guiding for a strong financial year going ahead. Here's what they said to CNBC-TV18 in an interview today.
Across channels, there is a very good growth. We've always maintained that when it comes to industry, and yes, H2 is always far more stronger. When it comes to industry, we are maintaining our margin estimates. And even in terms of growth, we should come better than the industry by almost around 300 to 500 bips when we end H2 as well. In Q2, the VNB came at 25%. But when you look at the entire H1, the VNB is at 27%. This number, yes, is very much sustainable. There've been a lot of work which has happened post the GST 2.0 changes.
Okay, so that is Max Financial. Gurmeet, what did you think of the numbers? I mean, and if you're looking at taking some insurance exposure, then where does Max fit into the order?
No, I think the numbers are very impressive. And Sumit is my ex-boss. He hired me in Citibank. So, he was also instrumental in turning around IDFC First Bank when he was the retail banking head. So they have a good leader. And I think with Axis coming in, I think, hopefully should augment well. We will look at, we are reviewing it. We don't have it currently, as I said, this will be in the portfolio. We do have ICICI Lombard, where we are seeing incrementally the total ratio coming below 100, which means your underwriting income exceeds and takes care of everything and not just the investment income which contributes to the profit. And I think at some point of time, insurance has been a little out of favor for both life and non-life. So this is something we have in the portfolio. Max, we are reviewing in case we we do add, we definitely let you know.
All right. Hi, Gurmeet. Good to see you, Ben. What about these capital market plays, namely exchanges? MCX has had a beautiful run, and BSE, just when everyone was throwing in the towel, the stock fell from 3,100 to 2,100. Guess what? Numbers are in. Volumes are pretty okay as well. The stock is back around 2,700 plus. What's your view on the exchanges? And between them, I mean, what do you like? The unlisted NSE as well is there.
So Nigel, I think I like NSE more at current price, although it's on the unlisted side. If you see at about 3,500 quarterly number, they would do 15,000 crore PAT this year. At current price of about slightly sub 1,900, it's 4.5 lakh crore, little 4.5 lakh crore. That's like 32 times, almost half, less than half of what BSE is. And I think with this change in expiry, they have lost market share in options. It stands at around 77%. But now with they getting Tuesday expiry and SEBI for now not doing much on weekly, I think some of it may get gained back. So valuation wise there. But as I said, I think we like AMCs more, the CAMS and the CDSL more. Broking, I mentioned Motilal Oswal. So we have a fairly, for financials is like 30% of the portfolio. About 10 to 12% is capital market play, which is CDSL, CAMS, a couple of broking names and AMCs.
Okay, that's on the capital market side. Finally, Gurmeet, before we let you go, Tata Motors, for the longest time, people had a problem that, hey, what is this? It's too complicated. And what if you don't want to play the global global PV side with JLR, and maybe you only want to take a play on CV? So now you have segregated portfolios. What do you think of it? And from an investment point of view, do either parts of the business make sense now?
No, I think we'll have to wait for globally things to stabilize more. I think obviously there is value on the table in terms of it's corrected more than 50% from where it was. I think any pickup in Range Rover numbers, any mix improvement, once we have probably a proper deal with EU as well and US, I think that's probably will be a time to look at it. We like M&M, continue to like M&M. Their market share is now almost 27%. Tractors, they are 43%. Light commercial vehicles, they are more than 50%. Very good capital allocation. At some point of time, even M&M will, restructure the business like Tata Motors has done. May not happen in near future, but over long term. They made some good money on the RBL investment. They made, I think, more than a year back. The stock got hammered, and it finally proved to be a good business. So I like, because of the fact, I think the offtake of vehicles, the overall market share is improving. So we'll continue to stick with that. We are looking at more auto ancillaries to add. We have Uno, Minda. We are looking at even car trade with the acquisition they are doing now. KPIT, I think, reported very good numbers. It's done well in a tough environment. I think when auto overall picks up. So we like the value chain, and for now we are sticking with M&M.
Okay, all right, Gurmeet, we'll leave it there. Good speaking with you. Thanks very much for joining us. Appreciate it very much here on CNBC. Well, the market, I think, is 120 points high, which means it's given up about 25, 30 points from the high. We take a break. Ajay Tyagi is going to be speaking with us on the other side. He's, of course, from UTI Asset Management Company. So more market conversation and more opinion from that UBS conference coming your way as well. Stay tuned. Okay, welcome back. Ajay Tyagi is head of equity, UTI Asset Management Company. Ajay, great to have you with us here on the program. Thanks very much. By the way, do you guys have a digital fund, Ajay? Digital India Fund?
Not quite, but we do have what we call as the Innovation Fund.
Same thing. I mean, not exactly same thing, but I'm just, but yeah, I mean, so it's made up of all tech and new age and platform companies?
Absolutely.
Yeah. So one more edition today, I'm assuming.
Yes.
Yeah, but it's doing extremely well, that entire space. Just a quick word, Ajay, in terms of, are you willing to give, I mean, take today's listing as an example, not about talking, buying or selling Grow, but are you willing to, it's a digital native company as opposed to many other companies in its space which are now turning digital, which have turned digital in that sense, right? Rates of growth have been far higher, I guess, because it started in 2016, right place, right time, UPI, Aadhaar, then digitization, demonetization, pretty much everything working for it. Are you willing to pay higher in terms of price to earnings multiples for these kind of businesses than what you would do for comparable businesses, older legacy, which are now turning around?
So we'll keep the recent listing out of the picture and out of the discussion. But Prashant, you have a very valid question. Let me give you the broad thought process that we have here. See, there are certain businesses and certain platforms which are absolutely redefining the way the consumers are actually conducting their transactions. Now, if you do have, and this could be spread across multiple different, subsectors. Now, if you have a business which is truly differentiated, where you don't have any substitutes, where, truly that platform has redefined the way consumers are now, buying and selling, then I would say we are ready to give a higher multiple because we know that there hardly are any substitutes, A. B, more often than not, many of these platforms, if not all of them, can turn out to be a winner-take-all model. And if it's not winner-take-all, they certainly could be one very large player in that domain, with the second person having not even half the market share. So therefore, there is massive pricing power and monetization once it kicks in. So with those principles, we keep hunting out for business models which are differentiated, for which there aren't many substitutes. So, within fintech, I would say that there are business models which have been innovative. Unfortunately, they still haven't been rewarded for their innovation. Digital payments in India are still not easily monetizable, and therefore, more often than not, these players end up playing the game which the existing large financial services players are playing already. So, I hope I've just laid out our thought process.
Talking about financials, Ajay, hi, afternoon, Rima here. Bajaj Finance used to be a fairly big overweight in your FlexiCap fund. Is that correct? True. So it's had a very strong track record in terms of growth, outperformance, even stock price. But the Q2 numbers throwed up some chinks in the armor. There's deterioration to some extent in the asset quality. AUM growth expectations have been scaled down. Now, what is the advice for someone? Should they buy Bajaj Finance? Are you comfortable at this level? Or, wait it out to see how this plays out over the next few quarters?
I'm afraid we cannot speak about stocks.
But just the broad thought process, when you have a company, say Bajaj Finance or Trend, but they've got a few rough quarters, what do you do then?
So here's what we do. We go back and check our hypothesis. Every stock ought to be having a hypothesis, and we go back and check whether the reasons for which we were excited in the first place, are they still holding true? Is this going to be a hypothesis which will remain valid? Forget the next couple of quarters, but at least for the next couple of years. If yes, then like you mentioned, any disappointment in any 1 or 2 quarters to our mind is always an opportunity to buy. So, the base case always ought to be that the reasons for which we were excited are still holding to be true. They are still going to be, valid reasons for value creation in the medium to long term. And if because of near-term disappointment, stock prices are down, we actually try to take advantage of it. Yeah.
Ajay, hi. Good to have you in. Now, what about all the new age businesses? Either the recently listed new age businesses, that includes the likes of, your urban company, and we're talking about obviously Lenskart and Grow, all these exciting consumer-facing businesses. And of course, the ones that are now kind of maturing a little bit. And I'm talking about the quick commerce companies and the food delivery companies. How are you in general finding valuations in this whole basket?
So, see, new age businesses started getting listed from 2021. Eternal was the one which basically laid down the path for a lot of these companies to keep getting listed, eventually as they gained sight towards profitability. Now, what we've observed is that there is obviously a lot of excitement around the IPO and in the couple of months post the IPO. But there's always a moment of truth. Investors who are, longer term in nature, who are more cold and calculating, obviously want to also see how these businesses behave in the few quarters after listing. And, that's the point of time when we've seen, even for the best of companies, by the way, excitement die down, valuations climbing down. And to our mind, that's the best point to actually take a very cold and calculating view, whether it makes sense to build positions in them or not. So, there are two reasons for not swinging the bat too viciously right at the IPO stage. As for us, one, there is a bit of an information asymmetry. You don't understand the business as well at the IPO process as you do a few quarters after the IPO. Plus, like I mentioned, if you look at the track record of pretty much all of these companies starting 2021, starting from Eternal itself, they have witnessed post the initial excitement a phase of valuation correction. Yeah.
Yeah, no, absolutely. Point taken. By the way, just want to quickly highlight, some other names maybe which we've not looked at. BLS, that is Bombay, London, Singapore. That's a visa processing company, is up about 10%. Rima was telling me that they're starting centers in China.
So they've got a 3-year contract from the Ministry of External Affairs in India to establish and operate visa centers in China. And plus, they came out with numbers, and very strong numbers. The top line went up by nearly 50%.
I see.
So
China, India, China, when flights just resumed. It's interesting. Did we speak with the management? No, we've not spoken post results. We'll try and get them on. Yatra, of course, another travel company, 11.5% higher on Yatra. So, looking good. Biocon is shooting up about 5.5-6%. Stocks at about 400, 410 as we speak. So that's another one of those. Yesterday we had Tejas Networks. We were talking to Aditya of Incred on Tejas. He's liked it for a while. Of course, numbers once again for the quarter largely disappointing, but it's coming up. One of those moves, 8% in the green. Transformers, rectifiers crashed. From 450 levels to about recent low was about 280. It's coming up a little bit today. Global Spirits, the alcohol company, 6.5% higher.
Globus came out with numbers.
So Car Trade, it was that deal which we reported, buying the second, closest, largest competitor, which is Car Dekho. So it's a big move on Car Trade today on the back of it. So there is enough and more. E-Cost Mobility. There's a sharp move higher, 16.5% up. I think they're basically into EV charging infrastructure. So not that old in terms of the listed universe, but it's doing well. There is Advanced Enzymes, Intellect Design, lots and lots of names with volumes which are coming up with strong price action. Ajay, if you were a betting man, what would you say? This India-US deal, November, December?
Looks to be post the election results and government formation in Bihar to us. Look, you guys are better tuned into these things, but if I were to really, get into a bet on this, I would say probably the end of November.
Probably the end of November. Okay, got that. Hopefully so. And are there any obvious places to focus on the back of it, or you think it's a general broad lift to markets whenever that happens?
See, certainly it's a general broad lift because if you look at the behavior of a lot of these global investors post July and August of this year, they did actually start coming out of India, or at least they stopped making incremental investments into India basis the fact that, look, India was always supposed to be a close ally of the US. Therefore, India was always expected to get a very sweet deal from the US. But the commentary from the US government was completely against this thought process. So that obviously led to a lot of these FII losing interest in India from a near-term perspective. They went into a wait-and-watch mode. I guess the announcement of the deal, and if the tariff rates that we are hearing about, which could be sub 20%, is anything to go by, that should bring in the excitement back into the market at a very generic level. Of course, there would be those sectors which were thought to be more impacted because of these tariffs. Think of sectors like textiles, gems and jewelry, and so on. Those obviously come back into action, but at a more general level, it also lifts a bit of a cloud of worry on the entire IT sector, because people were extrapolating that there could be something punitive that could come on the IT industry, which is not getting covered by the tariffs as yet. So yeah, in general, I would consider it to be a big positive, not only from a sentimental perspective, also from a more fundamental perspective. Remember, we were all talking about the damage it does toward GDP growth. Hopefully, GDP growth estimates would get perked up because of the announcement of any such thing. Yeah.
Got that. Ajay, we'll leave it there. Good talking to you. Thank you very much, and appreciate you joining us here on CNBC. We'll take a quick break. We're back. Some short-term trading ideas with our technical experts on the other side. Stay tuned.
Welcome back. Still holding around 25,600. Lots of big winners today. Parag Milk is reacting to numbers, 13% up. Kirloskar Oil also 12.5%. We spoke about Max Financial. Rate gain is moving up. Yesterday, decline post numbers. Today, it's bounced back with an up move of close to about 4.5%. Century Ply, Wellspun Living, Info Edge, all these companies came up. Okay, by the way, before that, Asian Paints bottom line is up for you on your screen. It looks like a big beat. 1,018 crore on the bottom line versus the CNBC-TV18 poll of 870 crore. So it's a very strong beat coming in on the bottom line. Let's see if it's accompanied by an improvement in revenue and a margin expansion. The top line too, yeah, it's a beat of close to about 5% compared to estimates. So Asian Paints top line has come in at about 8,500 crore. We were anticipating a revenue growth of about 8,100. Margins were, let's just get the margins were seen around 16.3%, an expansion of 90 basis points. But the top line, we were anticipating about a flat revenue growth, 1%. But I think going by this top line, it should be a mid to high single digits kind of a revenue growth. Bottom line is a beat at more than 1,000 crore, awaiting the margin number.
Mangalam should be able to help us with more details, volume growth, etc. in a bit. 17.6% is the margin.
That compares with 15.4 year on year.
And 16 something, which was the expectation.
So year on year, there's an expansion of 200 basis points of margins.
Yeah. So yeah, I mean, stock's moving and on the move as we speak. 60 rupees now, 2.25% higher on Asian Paints. EBITDA number is all looking good across the board and good to see. I mean, the grand old daddy of pain sector performing well, doing well. So margin 17.6. It's a full 130 basis point beat as far as the
no exceptional is
concerned.
what we are told.
Okay, no exceptional as well. So these are good numbers, big result, and okay, there is one data point. FY25 Q2 same period last year had a one-time.
There was an exceptional loss.
Yeah.
Which is not the case this time around, and therefore that bottom line number looks fairly robust. But even at the top line level, I mean, it's a handsome beat compared to the poll, and the stock is reacting to that. Remember, Asian Paints has anyway had a good run. In fact, if we look at Asian Paints,
that's coming out, decorative business registered a volume growth of 10.9% with a top line growth of 6%. Improved consumer sentiment with supportive policy actions aided by early festive season. We overcame the impact of extended monsoon even in September. Broad-based growth seen across urban and rural. Even industrial segment has seen a double-digit revenue growth. International business up 9.9%. So looking good.
This is looks like a clean beat. And yeah, I mean, the point that you made, right? It was the monsoon season. And despite that, the numbers seem to be much better than what the street actually anticipated.
Also, if you just look at Asian Paints from a level of about 2,300, exactly a month back, I think it was the first, second week of October. From 2,300, the stock has moved very rapidly to 2,700. The anticipation is obviously that the second half is going to be stronger. And the fact that, or the hope that competitive intensity is reducing. Okay, decorative business volume growth, that's scorching hot. Almost 11% growth. I mean, okay, I think Mangalam will help us understand where that could have come in from. But wow, talk about a beat. That's probably the beat of the season. I mean, in terms of just volumes. I haven't seen that kind of volume growth from Asian Paints or any paint company for that matter in a really long time. So this is looking very, very good. It's very clear that there was that competitive intensity phase as Birla Opus was making its big splash and JSW Paints was making its big splash. But Asian Paints has persevered. They're perhaps the oldest or among the oldest in the game. And they seem to be sort of getting things really back on track just looking at this. And this is in an otherwise dull quarter, a monsoon quarter. But these numbers are looking very, very good.
So just to put the volume
52-week high, by the way, on the stock, at 2,700 plus.
So just to put this double-digit volume growth in context, 10.9% in Q2. In Q1, it was 3.9. The quarter before, 1.8. The quarter before that, that's Q3 FY25, 1.6. The quarter before that, it was negative. The volumes had actually declined by close to about 0.5%. So it's been struggling on the volumes, and now you've got a return to double-digit.
We've had a 6-month monsoon period in the entire country.
Has it ended?
I wonder who managed to paint their houses. Yeah, I think we've got Mangalam with us. Mangalam, 11% volumes. Where is this coming from?
Well, it's an incredible set of numbers that have come in from Asian Paints. The only thing that you can say is that the giant is back, and how. 11% volume growth. The street was working with a number of 4 to 5%. In fact, the management themselves had guided for high single-digit sort of volume growth coming in and double-digit in the second half of this year. In the second quarter itself, the company has gone ahead and reported a double-digit volume growth. My sense is a large part of that volume growth would have come from the lower end products as well, because it's an 11% volume growth. The revenue hasn't grown as much, though it's above street expectations, but it's not grown in line with volumes, which tells you that a lot of the lower priced products are doing a lot better. And typically in monsoons, what happens is that the exterior paints don't sell as much, interior paints sell a little more, and that exactly is not as value accretive as, say, some of the exterior paints as well. The EBITDA as well as the net profit, all of them above street expectations. So just 3 words: top-down beat for Asian Paints. And add to all of this, the belief that competitive intensity is now going to be coming down, or if anything, Birla Opus is not a disruptor anymore, more like an incumbent. So going forward, things are seeming a lot more comfortable. The stock itself, versus a 5-year average of 60 times, trading at close to around 51 times. Street likes it, and the stock has spiked.
Absolutely. Mangalam is a master of wordplay. So here's one for you, Mangalam. Wall-to-wall beat.
Wall-to-wall beat, or the shareholders would be saying "Mera wala green."
I think Mayuresh is with us. Mangalam, stay with us. Mayuresh, let's get a quick reaction. Stock actually is now up 4.6%. Almost all of the reaction coming in after the numbers have come through. Mayuresh, what do you make of the numbers? You heard Mangalam as well.
Afternoon, Prashant. No, I think it is a top-down beat, and Mangalam rightly pointed out, I think the volume growth much better than what the estimates on the street were. At the same time, if you're probably looking at the product mix itself, the expectations with rationalization happening on the GST front will bring about better volume growth as we head into the second half, including festivities, which are probably spilled over in Q3. And therefore, I think the large expectations from the market is reasonable volume growth going ahead, a better product mix. Input costs remain very, very stable as we speak, and competition intensity has probably plateaued off. So I think very good set of numbers by Asian Paints.
Mayuresh, the stock is still a long way away from the all-time high. Now, I don't want to jump the gun, but I think the record highs for the stock were closer to 3,500. Now, I don't want to say that is it time to look at those levels, or, will long-term Asian Paints believers come back or not? But beyond this quarter, would you be inclined to expect some of that aggression to come back from Asian Paints? And maybe I can toss that to Mangalam as well. So just very quickly, Mayuresh, your first thoughts?
Oh, absolutely. And in fact, I think the new entrant which had come in the form of Birla Opus, I think the numbers there seem to be plateauing as well. And that gives us to the thesis that if you look at the market share of organized players and the unorganized market share for the paint industry as a whole, there is still a long way to go. And therefore, I think better organized leadership stocks like Asian Paints might actually benefit, because they've got a diverse product mix to begin with. They've got a huge dealer distribution network. They're adding on value-added products as well. And they're innovating as we speak. Therefore, these attributes should probably aid earnings growth going forward.
I think these are exactly the kind of things that you'll find in management textbooks, right, Mangalam? Because you have an incumbent, a giant of an entity, and then you have two hugely deep-pocketed groups coming in, the Birlas and JSW. And if Asian Paints manages to pull this off, come back on its, in its own, it'll be quite something. But your quick thoughts on whether this can be seen as a bit of a turnaround, or it's too early?
So 2 points that tell me that this could perhaps be a bit of a turnaround. The first point is that after many, many quarters, in fact, if I remember correctly, around 6-8 quarters, since Asian Paints has actually reported an industry-leading volume growth. Up until the last, 6 to 8 quarters, you had most of the companies reporting higher volume growth than Asian. And Asian was under the garb of, its huge base that, okay, it cannot probably report a higher percentage volume growth than the industry. So that seems to have turned around. We got Berger as well. They were also about 1-2% in terms of volume growth. So a lot of the other players are reporting a lot slower volume growth than Asian Paints. So on that base, Asian Paints reporting 11% volume growth tells you things have turned. And the second part that I'm looking at is, Asian Paints had constantly said that in paint industry, it is easy to get top line, not so much bottom line. So if Birlas are looking to get operational profits, then their aggression when it comes to prices, when their further investments coming in may reduce. So that's something we'll be watching out for. And thirdly, they are no, stranger to competition. The world's biggest paint company, Sherwin-Williams, has come to India and they've had to go back. Nippon hasn't done much, and they've constantly maintained that, wherever there is competition, Asian Paints will go ahead and do a lot better over a longer period of time. Yes, there was a fair amount of disruption in the past, but now is where the game starts. So let's see how it goes.
By the way, Mangalam, thanks very much for that. Look at Berger as well. I think you briefly mentioned it, but look at the intraday on Berger. It looks much smaller in terms of percentage absolute gains, but something similar. It's a sharp spike, and I think it started around the same time that Asian Paints reported numbers as well. So 2.25%. Kansai and some of the others, I can't really spot, big moves. But, you've got Berger, which is up, and the smaller name Shalimar is up 3%. Asian, of course, is the one which has done the trick. So that is Asian Paints.
Even Indigo Paints, by the way. Indigo's also.
It's not a spike. Indigo's been moving.
I'm very interested to see what Grasim is doing. Okay, so Asian Paints doing extremely well, and Grasim at the low point of trade after Rakshit Hargave has left, and also the street believing that maybe the disruption isn't as much, and that's reflecting. So if you pull up both the Asian Paints chart and the Grasim chart side by side, that will definitely tell you the story of the day.
Indigo, Surbhi, as you point out, what's happened? I mean, I think we missed this last 3 days, 1,000 to 1,200.
So 23% gain on Indigo Paints.
Also, over the last few quarters, if I remember, around 6 to 8 quarters, Indigo also has been reporting industry-leading volume growth. In fact, they were one of the bidders for Akzo Nobel as well. Eventually, JSW pipped them to go ahead and take that stake. But Indigo also has been on a very low base, been doing a lot better in terms of volume. So you have Indigo Paints doing well, Asian Paints doing well, but pull up alongside that the chart of Grasim, and there you have it. That's the story of the day.
Yeah, absolutely.
The red and the green. Yeah. Well, you got both on the screen. Mangalam, thank you very much for that. Very, very interesting. It really kind of made our afternoon very colourful, to say the least. Big story of the afternoon. Big story of this earnings season, actually. I mean, is it the big comeback of Asian Paints? We'll see. It's definitely a quarter to remember. Okay, with that, let's hop across to Nigel. Nigel, what's happening within the F&O space?
Well, the market's looking up today, and just looking at the screen, I think we'll see some shorts being covered out by the FIs. Last few trading sessions, there's big shorts that have been added. So either the FIs are going to sell less today, or in fact, we're going to see some shorts covering. I think looking at the screen, both on the Nifty and the Nifty Bank, both of them are up and the open is slower. So it appears it's definitely a short covering bounce at play. The PCR, though, has moved up to around 1.3. It's moving gradually to the upper end of the range because the put writing, well, that's become very aggressive. 25,800 put, 25,900 put, both of them fairly active. The premiums on both those two strikes have crashed big time. And in terms of levels that you're looking at, we'll have to say now the Nifty's 20 DMA becomes a trailing stop loss. And the bulls will believe that we're on our way to fresh all-time highs, which is at around that 26,300 odd mark. So we'll have to keep an eye out on that particular level. Moving to a couple of other points then, the Nifty Bank is doing well, but it's still relatively underperforming. I think it needs to find its form, and maybe in the next few trading sessions we get to those all-time highs, which is just around 450 points away for the Nifty itself. Stocks in focus, well, you are seeing some fresh shorting on PI Industries, an otherwise good market. Stock has moved lower, open interest has surged up. Couple of other names, Bandhan Bank has come in for a bit of a short covering bounce, and that stock has been a rank underperformer, but today it's up. Open interest is down. Tata Tech as well, another stock that's been a big underperformer. Today there are signs that the shorts suddenly are scampering for cover on both these two names. And from the banking pack, Union Bank, there's good long addition that we're seeing on this counter. So the day looks quite good. By the end of today, I think we'll have to get the data points post market close, and I think it'll indicate a big short covering bounce has played out today. Back to you.
Okay, all right, Nigel, thank you very much for that. Well, with that, let's go back to Mayuresh with some more ideas. Mayuresh, we're going to talk about the overall market, but clearly Asian Paints just stole the thunder. Otherwise, if you talk about some of the other major, results of the day, anything stood out? Last 24 hours, I mean, there's been a whole host of earnings. In terms of reactions, as we're in the final leg of trade, I'm just going to quickly look at what's looking the brightest. Obviously, BSE, Max Financial, most of these stocks, Kirloskar Oil, all of them holding up with gains. Anything else that makes the cut for you on earnings?
Specifically, Surbhi, if you ask me over the last 24 hours, I think BSE obviously, I think, had a very good set of numbers. And the expectation largely is that even if you're now moving to weekly expiries, the expectation of whether there was a significant dent in terms of the dates that moved against BSE, I think whether that creates a huge amount of volume and value dent, that probably didn't play out. So if you probably compare NSE numbers and BSE numbers are a tad bit better. And therefore, capital market participants over a medium-term play, including platforms like BSE, should continue doing well in our opinion. The other two numbers which stood out, which you mentioned, even Prashant, I think Kirloskar Oil Engine and Parag Milk. Kirloskar Oil specifically, if you probably look at the standalone numbers, the kind of growth that you've probably seen in industrial gensets, the expectations in terms of the power gensets expected to do well, the replacement market holding up in terms of margins and value, and the overall standalone EBITDA margins with working capital maintained at 30-35 odd days. I think the B2B numbers for Kirloskar Oil are priming up quite nicely. And therefore, I think if you look at the consolidated performance, including its subsidiaries, holding up very well. Even for Parag Milk as an example, I think the core categories which account for 59%, including the likes of cheese, paneer, ghee, have actually done well. Standard liquid milk, the procurement has been decent at 14 lakh litres a day, 38 rupees was the average cost. And therefore, I think the expectation largely is that with rationalization happening even on this front, volume and value growth should drive numbers even in Q3, Q4. In fact, even its peer, Hudson Agro, had a very decent set in the recent few weeks.
Mayuresh, stay on. Need to slip into a very short break. We've got about 9 minutes left to wrap up trade. It's going to close up in the green, but not quite at the day's high. We were up 200 points in the Nifty when we started trade, now up about 165. Get into a break. We'll come back.
पड़े।
Welcome back. Markets actually getting a little bit nervous towards the end. The Nifty bank, as I was pointing out earlier, that's seen a bit of a come off from the top. Its asset has been underperforming. It's on the verge of moving into the red, actually. The Nifty bank has seen a sharp downtick. That said, we're still in conversation with Mayuresh Joshi. Mayuresh, one of the disappointments of the last hour has been HAL. Yes, Asian Paints numbers are good and we've got various other numbers beats. But HAL, the street is pinning its hopes on bigger and better things coming. And since defense is one of those, points of prime importance for our government as well as a nation, this one's disappointing actually on margins and profitability.
Afternoon, Nigel. So I think it's impossible for defense companies to probably have a consistent execution plan every passing quarter. And therefore, I think in the quarter gone by, it was a monsoon-ridden quarter, and there would have been some execution challenges thereof. Having said that, I think the kind of order book that HAL is sitting on, I think it's more than 1.9 lakh crores, if I'm not mistaken, and it is almost 6 times the trailing 12-month revenue, which gives a very, very healthy revenue visibility. That's point one. The second point, obviously, is that the kind of projects and contracts that are coming their way, LCA aircrafts, 12 Su-30 MKA fighters, light combat helicopters, naval utility helicopters. And therefore, I think this entire aspect in terms of not just the existing pipeline, the kind of capex that HAL is probably expanding upon, more than 14,000 odd crores in terms of capex for expanding capacities, will mean that the margins will get maintained around 30-31 odd %. ROE should get sustained with reasonable execution over a longer period of time at 21-22 odd %, with ROCs at 28-29%. So execution for a quarter or two might be off, but generally I think over a longer period of time, it's a damn good play as far as defense is concerned. So anybody holding should continue.
Okay, that's HAL coming down to the final leg. Very quickly, Mayuresh, before we wind up for the day, Bajaj Finance. Yesterday was a day of disappointment. Now, what did you make of things, and whether you'd still be a buyer?
So we continue to remain optimistic on leadership stocks like Bajaj Finance within the NBFC space. I think yesterday's numbers and the commentary specifically in terms of the AUM degrowth that the management probably gave out for FY26 is something that probably took the sheen off and the stock rightfully corrected. But if you look forward, I think if you probably look into FY27, the expectations of reasonable and strong advances growth coming through, specifically in core categories of consumer durables and consumer discretionary as well, I think that should start picking up steam as we head into Q3. The second aspect, obviously, is that for bigger rated and better rated NBFCs like Bajaj Finance, the cost of borrowing obviously becomes a lot more cheaper with interest rates going down. And therefore, I think with stronger capital adequacies and a strong control in terms of costs, the asset quality pressure should start waning off, automatically leading to better leverage and return ratios as well. So yes, I think a disappointing set in Q2, but expectation largely is that it should start recovering. And therefore, I think within NBFCs, we focus and remain optimistic on stocks like Bajaj Finance.
Okay. All right, Mayuresh, thank you very much for that. Well, with that, let's quickly start recapping a day that's been fairly positive for the market. 160 points up, not quite closing at the highest level, but nonetheless, it's been a day of solid gains. And the Nifty now at 25,850. So let's see what worked. Obviously, Asian Paints became the story of the day, 6.5% as we're finally closing out after that huge beat coming in the second quarter. Other winners included names like Adani Enterprises. Tech has had a great week so far, and that continued today as well. So Tech Mahindra, TCS, names like Wipro, even Infosys, HCL Tech, and I'm talking gains between 1 to 2, in some cases, 3.5%. Tech Mahindra is up 3.5%, so very solid going for technology. Other winners included the likes of HDFC Life, Bajaj Finserv, Bharti Airtel, Jio Financial. We had Reddy's and Sun Pharma from the pharma space had a good day as well. On the downside, Tata Steel came in for some profit taking, 1.5% lower. Tata Motors, the PV stock, as the CV and PVs get demerged. PV is ending at 402. Let's take a look at Tata Motors CV as well. CV is ending at 330. That's a 26% gain. And speaking of new entrants on the street, Grow had a fantastic first session. Over a 30% gain coming in on Grow as well. Well, final settlement would be around closer to 30%. So that's been the story on the large cap screen. But even on the broader market side, Prashant, I guess not too many disappointments. A lot of earnings getting a big thumbs up from the market today.
It's a really long list of and I can spot about 15 names with humongous volumes, right? On the upside, as you say, and we'll highlight some of the gainers on markets forward, right? I mean, so it's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thanks very much for staying with us. But Mayuresh is going to be with you, and we'll take you through markets forward in just a bit.
Markets gain for the third straight day, making all-round gains. Broader markets improve in line with the benchmark. Market breadth favors advances.
Asian Paints makes a big comeback, reports volume growth of nearly 11%, net profit surges 46% to over 1,000 crores, delivering an all-round beat in the second quarter.
Online trading firm Grow lists at a 12% premium on Dalal Street. The market capitalization hit 82,000 crore on the very first day. Tata Motors commercial vehicle arm lists at a 28% premium.
Weeks after Melly Mysteries ouster, Noel Tata's son Neville is inducted into the board of the flagship Sir Dorabji Tata Trust. Former Titan MD Bhaskar Bhatt also appointed as a trustee. Venu Srinivasan's tenure revised from life term to 3 years in light of a new Maharashtra law. Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is Reema Tendulkar. Well, Reema, what a great day for us. We're building on gains, 3 straight days of gains for our markets and the Nifty up around 180 odd points. We also had the Bank Nifty and the Midcaps gain in today's trading session.
I think the exit poll results and the resounding majority for NDA perhaps provided that support to the investor sentiment. Global markets were also upbeat, and IT has been the big winner this week. The Nifty IT index was up 2% for the week so far. It's gained nearly about 5% on hopes of Fed rate cuts, the US government shutdown coming to an end, perhaps India-US trade deal getting signed. So that provided support on the way up. And then you had so much positive momentum coming in from the primary markets too. Look at the kind of ending for Grow. It opened at 12%, but by the close of it, it was a handsome 25% plus premium on Grow. Tata Motors CV had a very strong debut. So all that contributed to the overall exuberance in the market, positive advance declared ratio too.
Yes, absolutely. And we had Asian Paints, which really came back in terms of its numbers in today's trading session, adding to that momentum towards the end of the earnings season as well as for the trading session today. But let's tell you a lineup of what we have in store for you. We'll start with the top movers and shakers of the day with Vivek Iyer. A couple of listings drove the action in today's trade. Tata Motors commercial vehicles business made a strong debut on Dalal Street, while Grow also saw positive momentum, listing at a 12% premium. We'll also put the spotlight on the top mid-cap earnings that made headlines. Last but not least, we'll delve into the key market events to watch out for in tomorrow's trading session.
All right, let's get to our first segment of the day. Vivek is now joining in at the big wall with the top movers and shakers. Vivek.
Well, thank you so much for that. What a session. Stellar rally, advances far outpacing declines across the entire universe, meet the large cap, mid cap, as well as the small cap space. Individual stocks, well, the one sector you can't look past is actually the IT pack. The entire IT pack did very well in the session. Tech Mahindra, TCS, Infosys amongst the top Nifty gainers in the broad end of markets. Mid-cap IT names, LTI, Emphasis did very well in the session. A lot of results and strong reactions to that. Kirloskar Oil Engine, in line with its peer Cummins, delivered a very strong Q2. Kirloskar ended higher by over 12%. Naukri, this particular stock, Info Edge, actually managed to gain post Q2. The vertical, especially when you're talking about the Naukri vertical itself, did quite well, and the back of that stock ended higher by over 2.5%. Aavas Financials, very strong disbursement growth in Q2, stock higher by over 5%. And Biocon, while the results were largely in line, the street is expecting a corporate action as far as the Biocon Biologics is concerned. Stock ended higher by over 5% after the interaction the management had with us. On the other hand, quite a few negative reactions as well. PI Industries, a muted conference call in terms of the guidance that the management gave for H2, expecting a recovery only in the second half of FY27. Post that, it saw a very sharp sell-off. Thermax, a very muted Q2, a lot of one-offs, and the stock ended low by over 3%. Hindustan Copper was the top mid-cap laggard in the session. And lastly, Hindustan Aeronautics, that particular stock, the results came towards the end of the session. Stock ended low by over 2%, higher provisioning denting this particular P&L.
Okay, all right, Vivek, thanks very much for that. Well, the big story towards the close of trade was Asian Paints making a big comeback, reporting a whopping volume growth of nearly 11%. Net profit surged 46% to over 1,000 crores, delivering an all-round beat in the second quarter. Mangalam is here to tell us more about the numbers. Mangalam.
Well, it's an incredible set of numbers that have come in from Asian Paints. The only thing that you can say is that the giant is back, and how. 11% volume growth. The street was working with a number of 4 to 5%. In fact, the management themselves had guided for high single-digit sort of volume growth coming in and double-digit in the second half of this year. In the second quarter itself, the company has gone ahead and reported a double-digit volume growth. My sense is a large part of that volume growth would have come from the lower-end products as well, because, it's an 11% volume growth. The revenue hasn't grown as much, though it's above street expectations, but it's not grown in line with volumes, which tells you that a lot of the lower priced products are doing a lot better. And typically in monsoons, what happens is that the exterior paints don't sell as much, interior paints sell a little more, and that exactly is not as value accretive as, say, some of the exterior paints as well. The EBITDA as well as the net profit, all of them above street expectations. So just 3 words: top-down beat for Asian Paints. And add to all of this, the belief that competitive intensity is now going to be coming down, or if anything, Birla Opus is not a disruptor anymore, more like an incumbent. So going forward, things are seeming a lot more comfortable. The stock itself, versus a 5-year average of 60 times, trading at close to around 51 times. Street likes it, and the stock has spiked.
Okay, all right, Mangalam, thanks very much for that. Well, Tata Motors demerged commercial vehicles business debuted on the bourses. The stock listed at 335 rupees per share, reflecting a 28% premium over its discovered price of 260 rupees. We did speak to Girish Wagh, who is the Executive Director, Tata Motors, who shared insights on how this listing could make a strategic shift for the company.
Listing as a separate entity gives us now sharper strategic focus, freedom to look at opportunities which are tailor-made for the commercial vehicle business. And looking ahead, we will keep on exploring opportunities which are close to the commercial vehicle and the logistics business. If I may also add, in the past few years, we have driven some strategic shifts in the company which have led to good results in terms of strong margin growth, robust free cash flows, and high return on capital employed.
Speaking of Tata, the trusts have named Neville Tata and Bhaskar Bhatt as the new trustees. They've joined the board of Sir Dorabji Tata Trust for a term of 3 years. Meanwhile, Venu Srinivasan's lifetime tenure as a trustee and vice chairman has been revised to a 3-year term. This is in compliance with a new Maharashtra government rule that limits the number of lifetime trustees. Mangalam is back with us to tell us more about Neville Tata, the youngest member on Tata Trust board.
The Tata legacy has just turned a page. A new generation has stepped into one of the most powerful boardrooms of India, the Tata Trusts. 32-year-old Neville Tata, son of Tata Trust chairman Noel Tata and Alu Mistry, has been appointed as the trustee of the Sir Dorabji Tata Trust, effective November 12th. His appointment marks a generational shift in the trust that controls 28% of Tata Sons, which is the holding company of the Tata Group. Born into one of India's most respected business families, Neville represents the next wave of Tata leadership. He is the grandson of Simon Tata and the grandnephew of Ratan Tata. Educated at Bayes Business School in London, Neville holds a degree in business management, bringing with him an international perspective and a modern retail sensibility. He began his career with Trent Limited, the Tata Group's retail arm, in 2016. Over the years, he has worked across Trent's businesses, from packaged food and beverages to leading Star Bazaar, which is the group's grocery retail venture. In fact, he's also played a key role in the success of Zudio, which is the fast-growing value fashion chain that has become one of India's most talked about retail stories and added a lot of value to Trent, which eventually took the stock into Nifty as well. Joining Neville as a new trustee is Bhaskar Bhatt, the former managing director of Titan, who steered the company through a golden era of retail expansion between 2000 and 2020. The trust has also reappointed TVS Motors chairman Venu Srinivasan as the vice chairman for a 3-year term after revising its structure to comply with the new regulatory norms that cap the number of permanent trustees at 1/4 of a public charity board's strength. Following this change, Noel Tata now remains the only permanent trustee of the Sir Dorabji Tata Trust. The other trustees include Vijay Singh, Pramit Jhaveri and Darius Khambata. Together with the Sir Ratan Tata Trust and the Sir Dorabji Tata Trust. Both of them hold a combined 66% stake in Tata Sons, giving it commanding influence over the Tata Group's holding company. With Neville Tata's induction, the trust signals continuity with change, strengthening governance while bringing in the next generation of Tata leadership. From Jamsetji to JRD, from Ratan to Noel, and now Neville, the Tata story enters its next chapter.
Okay, absolutely, Mangalam. Thanks very much for that. So the next gen at Tata. Well, those were the top stock movers and news for today. Let's go across to our guests. We have Mayuresh Joshi, who's joining in, and Shrikant Chauhan also to give us their perspective. Mayuresh as well as Shrikant, welcome to the show. Well, Mayuresh, a lot of changes taking place in the Tata Group. What is your sense in terms of how you would approach stocks within the Tata space?
Afternoon, Ekta. I think this group has always been a beacon of corporate governance, a beacon of industry-leading positioning as far as India Inc. is concerned. And therefore, I think what piece Mangalam has put out was very, very interesting. Having said that, I think Tata Motors itself, I think both the PV and the CV arms, over a longer period of time, with all the issues and hurdles that they intermittently faced, specifically over the last few months and challenges thereof, should largely start plateauing out. Therefore, this remains one solid story, both in terms of domestic growth as well as expectations of how JLR is expected to perform. I think across segments, Tata Steel, as an example, I think the expectation largely is that the green steel in Europe is expected to pick up quite meaningfully. And therefore, I think the operations both in the UK and the Netherlands, which are probably veering towards green steel, I think that should have significance as we head over the next few years. Similarly, I think within FMCG, I think Tata Consumer has a presence across multiple product categories. And therefore, I think expectations of volume and value growth to sustain over a longer period of time should probably continue. So I think, as I said, a beacon of representation of India Inc., not just in India, but on the global platforms.
Shrikant, Asian Paints, quite the comeback story now for Asian Paints. Very strong fundamentally with the volume growth at 10.9%. But stock is at a fresh high. It's recovered 30% from the recent lows. Technically, what are the levels that you have in mind?
Yeah, see, the stock has crossed all its important level in one go. It was around 2600, 2650 for a considerable time. But after crossing this level decisively with huge volumes, clearly indicates that the stock is heading for at least 3000, 3050 in the near term, which is approximately 80% retracement of the entire fall. So close to those levels, we are expecting stock to move in the near term.
Okay, all right. So that's on Asian Paints. But shares of Billion Brains Garage Ventures, which is basically the parent company of Grow, had a strong debut on the exchanges. The stock opened at a 12% premium to its issue price of 100 rupees per share. Other key capital market players like BSE, Angel One and CDSL also saw significant gains during today's trade. Sudarshan is here with details on this story. Sudarshan.
So it was a good day for capital market names. All the stocks were higher somewhere in the range of 3 to 6%. There are two reasons to it. First, Grow's healthy listing, and second, BSE's strong quarterly earnings. So first, talking about Grow. So it listed with a premium of 12%. Its issue price was rupees 100 per share. It listed at around rupees 112 per share. And at the end, it closed with a gain of almost 30%. Now, what's going forward? So currently, its broking business forms almost 83% of its total revenue, while MTF forms just in the range of 1 to 2%. Now, companies saying that MTF going forward is going to be the biggest growth driver, and its contribution is going to rise to 13% in the near to medium term, while broking business contribution will come down. Now, coming to BSE. In the last 2 to 3 months, two headlines for the BSE have been going on. One was the change in the expiry day, and second, will the weekly expiry stay or go? So expiry day, when the day was changed, ahead of that, there were expectations that turnover will fall because of the change in expiry day from Tuesday to Thursday. But Surprisingly, turnover on the very first day of the change in the expiry day has risen to highest ever, that was of rupees 50,000 crore in a single day. On the weekly expiry, there have been positive comments from both SEBI chairman and finance minister. The day the comment was made, stock had gained as much as 10%, and today also stock has gained almost 6%. Now talk about the earnings. Its operating revenue has increased almost 11% on a sequential basis, and biggest contributor, transaction charges, also have seen a healthy rise. But margin has seen a minor contraction of around 64 to 65 basis points, mainly because of increased regulatory charges, which increased by 26% to 126 crore. That was the main reason. But overall, it was a good set of earnings. So on the back of growth, healthy listing and strong Q2 from BSE, all the capital market names were higher.
Mayuresh, Sudarshan, thank you. Do stay on. One more question for you. But before that, Mayuresh, if you had to recommend one capital market play, whether it's CDSL, BSE, or even any of these brokerages like an Angel One, Nuvama, Motilal, or Grow, which one would it be?
Absolutely. I think capital market participants as a play, I think should continue doing well over a long period of time. And therefore, I think the platforms itself, both BSE and MCX, as we see it at Markets with India, the rating, ranking, institution holding seem fine. As Sudarshan mentioned, I think the expectations for both the exchanges in terms of turnover should hold up. For BSE, I think more or less in line with all the expected regulatory changes did not create a big dent. And therefore, I think the expectations of stable turnover growth, along with stable annuity income and revenue expected to continue, and plateauing of transaction charges would largely mean margins stabilizing and coming back. And similarly is the story with MCX as well. A lot of optionalities, both in terms of forward and option contracts expected to get introduced, more participation expected to come their way, crude, natural gas, gold, silver. I think the volatility is expected to continue, and therefore the average daily turnover is expected to remain stable and probably on the higher side in select months as well. So I think both the platforms probably looking good.
Okay, all right, Mayuresh as well as Shrikant, thanks very much for joining in and giving us all of your perspective this evening. Well, let's get in Sudarshan. He's still with us. There's a slew of mid-cap earnings which really drove stock movements in today's trade. Sudarshan, tell us more.
So it was a good day for earnings with few exceptions, and in the list of exception was Thermex, which closed with a cut of almost 4%, and the reason was company has reported a weak set of earnings, mainly because of the execution challenges that company has been facing over the last few quarters. Revenue has slipped 5% and it was down 13% against the estimate. Margin too has slipped to 7% versus 10.6% year-on-year and against the estimate of 9.6%. The stock was down despite the positive commentary. Company is saying that will grow order books at more than 20% in FY26, and revenue and profit growth in FY26 will be higher than FY25, but it failed to boost the sentiment. Two stocks, Parag Milk and Kirloskar Oil, have seen healthy gains, and the reason, very strong set of earnings. So first talking about Parag Milk, revenue and EBITDA have seen double-digit growth. It was up somewhere in the range of 15 to 20%. Volume growth also was at 10% year-on-year, and its main products, ghee, cheese, paneer, have seen 23% growth in value terms and 14% in volume terms. Lastly, Kirloskar Oil, both revenue and profit were higher than Bloomberg estimates, and margin was largely in line. And B2B segment has seen a healthy growth led by both power generation and industrial segment, and B2B has seen a growth of 40%. Exports too was healthy, up 35%. Two more stocks that reported earnings at the last round of the trade, HL and Ashok Leyland. Both the stocks have closed lower. First, HL's margin has come around 23% in Q2. In H1 FY26, margin is 24% against company's FY26 target of 31%. So there is an expectation that company is going to miss the guidance on margin front. That's the reason stock was down. Ashok Leyland has reported a very strong set of earnings, but you'll ask the question why the stock has fallen. Remember, in November and going forward, base of the volumes will increase significantly, and there is an expectation that company may disappoint on the volume front going forward. That's the reason stock is down. Also, in 2025 so far, stock has outperformed and it was up 31%.
Thank you, Sudarshan, for explaining that so well. Get into a break. On the other side, we'll get you the top corporate voices that we spoke with on the show, on the channel today, and the key market events to watch out for. Stay tuned.
Welcome back. Well, let's bring you all of the key events to watch out for in trade tomorrow. Upasana standing by with more details.
Well, first up, let us look at the key important results for tomorrow that we'll be closely tracking. Well, companies like Eicher Motors, Hero MotoCorp, Bharat Dynamics, Voltas, Page Industries, Jubilant Foodworks, Apollo Tyres, NBCC, LG Electronics India, all these counters will be reporting their Q2 FY26 numbers tomorrow. Now, on the IPO front, the IPO Fujiyama Power Systems opens for subscription tomorrow, while PhysicsWallah IPO closes for subscription tomorrow. Now, let us look at the global economic cues. UK will be reporting its Q3 GDP data. Europe, ECB economic bulletin will be out tomorrow. And lastly, coming to US, inflation data for the month of October will be out. So we'll be closely watching out for that as well. So all in all, looks like quite a power-packed day tomorrow.
Thank you very much for that. And that brings us to a close in this edition of Markets Forward. Thank you for watching.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The explosion in Delhi's Red Fort area was premature as the bomb was not fully developed, say investigating authorities. More than 200 raids conducted across Jammu and Kashmir. A woman doctor has been arrested. This is the 8th arrest of a suspected terror module believed to be behind the blast which killed 13 people. All-round gains helped Dalal Street close higher for the third straight day. Nifty and Sensex gained nearly 1%. Midcap index hits a record high. Online trading platform Grow lists at a 12% premium on the Dalal Street. Market capitalization hits 80,000 crores on the very first day. Tata Motors commercial vehicle arm lists at a 28% premium. Asian Paints reports a stellar second quarter, beating estimates on all parameters. Volume growth of nearly 11% is well above expectations. Profit rise 47%. IT stocks gain after US President Trump appears to defend the H-1B visa program, says America needs to bring in talent from around the world as it doesn't have certain talents in the country. This comes nearly 2 months after the US added a $100,000 fee on H-1B visas. Weeks after Meli Mistri's ouster, Noel Tata's son Neville inducted into the board of the flagship Sir Dorabji Tata Trust. Former Titan MD Bhaskar Bhatt also appointed as a trustee. Tata Trust has also revised Venu Srinivasan's tenure from life term to 3 years in light of a new Maharashtra law. The law restricts perpetual trustees to 1/4 of a trust total board strength. Lenders are voting on 5 resolution plans to revive debt-ridden JP Associates. Sources say Vedanta, Adani Group, Dalmia Bharat, Jindal Power and PNC Infratech are in the fray. Voting will remain open till the 20th of November. New Delhi remains the most polluted city in the world as air quality hovers between hazardous and severe. Primary schools go hybrid, construction and demolition activities banned. Residents advised to remain indoors during early mornings and late evenings. A group of indigenous people stormed the COP30 climate summit in Brazil, sparking a clash with security officials. Indigenous leaders are seeking more influence in decisions concerning forest management. All right, let's start with the day's market action. The Dalal Street was up for the third straight day amid all-round gains. Nifty and Sensex rose nearly 1%. Reliance was the top contributor, rising to 5-month highs. The Midcap index hit record highs, but banks underperformed the blue chips. Prashant Nair is here with the details. Prashant, what sparked this rally?
Well, a strong open on the back of the exit polls out of Bihar, which gave the ruling NDA alliance one more term. The final results, the actual results, of course, are on Friday. But I think the markets took what the exit polls showed with both hands. Markets opening higher and then continuing to build on those gains. So by the end of it, over 0.75% gain on the Nifty Bank, much softer today. The mid and small cap indices both up over 0.75% as well. So it was not just the large caps, but broader markets, which also did very, very well. Just one shout out, of course, to the IT services index, which ended about 2% higher. And at the margin, with Bihar out of the way, all eyes on, of course, what will happen with the US-India trade deal, whether it's closer than before. I think those things influencing the IT index. By the way, the sector has done well over the last 3 or 4 days now. Large caps, right? I mean, Asian Paints became the stock of the day, but it really was the stock of the hour because numbers came in the last 60 minutes of trade. Stock ending about 4-5% higher. Adani Enterprises was up sharply. Tech Mahindra was up quite a bit. HDFC Life, TCS, Bajaj Finserv also participating. Bajaj Finserv, of course, along with Bajaj Finance, was one of the big losers yesterday. Not very much of significance on the way down as far as the Nifty goes.
Right, and as Prashant was mentioning, IT stocks took solace from President Trump's softening stand on the H-1B visa program. So here's what happened. US President Donald Trump appeared to defend the H-1B visa program even as his administration continues a major crackdown, including imposing a $100,000 fee on new applications. In an interview to Fox News, Trump acknowledged the importance of highly trained immigrant workers. He argued that long-term unemployed Americans cannot simply be placed in complex manufacturing and defense roles without extensive training.
H-1B visa thing will not be a big priority for your administration, because if you want to raise wages for American workers, you can't flood the country with tens of thousands or hundreds of thousands of foreign workers.
You also do have to bring in talent. When
we
a
have
country
plenty of talented people
no,
here.
You don't. No, you don't.
We don't have talented people here?
No, you don't have certain talents, and people have to learn. You can't take people off an unemployment line and say, I'm going to put you into a factory where we're going to make missiles.
All right, let's put the spotlight on the big set of numbers. The government has released the retail inflation data for the month of October, and it's come in at a record low. Lata Venkatesh joins us now. Lata, please take us through the numbers.
Well, actually, the inflation number has come in as expected. Our poll threw up a number of 0.25%, which is a ridiculously low number. Of course, after the new CPI number came in, a new CPI index came in 2013, this is the lowest ever. Last month also was the lowest ever. But 0.25%, even perhaps historically, would rank in as one of the lowest numbers we have got. And the big culprit or the big contributor is food inflation, which is a deflation. It's coming in at minus 5.02. As you can see, this is a 5-month consecutive negative number or lower year-on-year food prices that we are getting. The core inflation would be slightly higher. It's a calculated number, but that would perhaps come in at about 4.5% or thereabouts. There again, the base is playing a role, but core inflation is also impacted by gold prices. Gold prices shot up in October, as you remember. That is counted in personal services. And therefore, we have to look at the non-gold core inflation number, which is likely to be highly low. The important point to note is food inflation has come in below our poll. Our poll gave us an average of about minus 4.1. At minus 5.1, it clearly indicates that inflation in coming months is likely to be lower than what the street is prepared for. Items like cereals and pulses have fallen even month on month. And of course, year on year, there has been a massive reduction in these numbers. Cereals inflation stands at 0.9 year on year. Month on month, it has fallen. Likewise, a big fall in vegetables, minus 27% year on year. Remember, a year ago, it was those big potato and tomato inflation, 100 rupees a kilo tomatoes. So all that is leading to a very low number in the current year. The big question, of course, will have to be whether there is a 0.25% inflation will make the Reserve Bank cut. We will discuss that later on in the show. But importantly, inflation in line with expectations, food inflation lower than expectation.
All right, thank you, Lata, for that. Shifting focus now, online trading platform Grow made a blockbuster debut, listing at a 12% premium over the issue price. The company's 6,600 crore rupee IPO received a good response, with the issue being subscribed over 17 times. The subscription was largely led by institutional investors. The stock ended the day with gains of 30%, capturing a market cap of nearly 80,000 crores. Shares of Tata Motors commercial vehicles business listed at a 28% premium to its discovery price. This listing comes after the commercial vehicles business demerged from the auto giant's passenger vehicles business on 1st of October. Speaking to CNBC-TV18, Executive Director of Tata Motors, Girish Wagh, said that listing commercial vehicles as a separate entity gives the company a sharper strategic focus. Right on to the IPO market. The second day of Physicswala's initial public offering saw subscription at 12% as of 4 p.m. Employees and retail investors led the subscription, followed by non-institutional investors. The company plans to raise 3,480 crore rupees via a fresh share sale, along with an offer for sale component. On to the day's earning action now. Asian Paints surged 6% after an all-round beat in the second quarter. Net profits rose 47% on an annual basis to come in at 1,018 crore rupees. Revenues climbed 6.4% to 8,531 crore rupees. Margins at 17.6% also topped estimates. The company's domestic decorative business volume growth beat street expectations to come in at 11%. Remember, Asian Paints had reported a one-time loss of 180 crore rupees in Q2 FY25. Auto giant Ashok Leyland has reported strong set of numbers in Q2, with margins rising to multi-quarter highs. Healthy volume growth during the quarter boost overall revenue. The management has said that the company is well positioned to achieve mid-teen EBITDA goal in the medium term. Now, however, the company has reported a one-time loss of 40 crore rupees versus a gain of 117 crore rupees a year ago. Shares of Hindustan Aeronautics slipped over 2% in trade after reporting an operationally weak set of numbers in Q2. Revenue was in line with estimates, and this was driven by healthy execution of strong order books. EBITDA was sharply below expectations, declining 5% on an annual basis. Profitability was hit by a sharp increase in provisions and material costs. It's a giant leap forward for the Tata Gen Next. 32-year-old Neville Tata, son of Tata Trust Chairman Noel Tata, has been inducted into Sir Dorabji Tata Trust, one of the flagships behind Tata Trust. The decision comes just 2 weeks after Mehli Mistry was voted out from the Tata Trust board. Joining Neville on the board is Bhaskar Bhatt, a Tata veteran and former MD of Titan. Venu Srinivasan has been appointed as trustee for a 3-year term. Srinivasan's lifetime tenure was revised in line with the new Maharashtra law that limits the number of lifetime trustees in public trust. Noel Tata is now the only permanent trustee of Sir Dorabji Tata Trust. Mangalam Malu joins us now to decode what this means for the trust. Mangalam, a generational shift or continuity with change?
The Tata legacy has just turned a page. A new generation has stepped into one of the most powerful boardrooms of India, the Tata Trusts. 32-year-old Neville Tata, son of Tata Trust Chairman Noel Tata and Alu Mistry, has been appointed as the trustee of the Sir Dorabji Tata Trust, effective November 12th. His appointment marks a generational shift in the trust that controls 28% of Tata Sons, which is the holding company of the Tata Group. Born into one of India's most respected business families, Neville represents the next wave of Tata leadership. He is the grandson of Simon Tata and the grandnephew of Ratan Tata. Educated at Bayes Business School in London, Neville holds a degree in business management, bringing with him an international perspective and a modern retail sensibility. He began his career with Trent Limited, the Tata Group's retail arm, in 2016. Over the years, he has worked across Trent's businesses, from packaged food and beverages to leading Star Bazaar, which is the group's grocery retail venture. In fact, he's also played a key role in the success of Zudio, which is the fast-growing value fashion chain that has become one of India's most talked about retail stories and added a lot of value to Trent, which eventually took the stock into Nifty as well. Joining Neville as a new trustee is Bhaskar Bhatt, the former managing director of Titan, who steered the company through a golden era of retail expansion between 2000 and 2020. The trust has also reappointed TVS Motors chairman Venu Srinivasan as the vice chairman for a 3-year term after revising its structure to comply with the new regulatory norms that cap the number of permanent trustees at 1/4 of a public charity board's strength. Following this change, Noel Tata now remains the only permanent trustee of the Sir Dorabji Tata Trust. The other trustees include Vijay Singh, Pramit Jhaveri and Darius Khambata. Together with the Sir Ratan Tata Trust and the Sir Dorabji Tata Trust, both of them hold a combined 66% stake in Tata Sons, giving it commanding influence over the Tata Group's holding company. With Neville Tata's induction, the trust signals continuity with change, strengthening governance while bringing in the next generation of Tata leadership. From Jamsetji to JRD, from Ratan to Noel, and now Neville, the Tata story enters its next chapter.
Right, thank you, Mangalam, for that. Shifting focus now, the race to acquire Jaiprakash Associates is heating up. Sources have told CNBC-TV18 that voting is underway on all 5 resolution plans submitted for the debt-ridden company. Proposals from Vedanta, Adani Group, Jindal Power and 2 other companies are under consideration by the Committee of Creditors. Sources have also indicated that voting will remain open till the 20th of November and will be subject to an extension if requested by the COC. Vedanta Group has submitted the highest offer in absolute terms, and this was followed by Adani and Group and the rest. Men's grooming brand, the Bombay Shaving Company, has raised 136 crore rupees in a combination of primary and secondary infusions. The round was led by Sixth Sense Ventures with participation from the firm's founder, Patni family office and others. The Gurugram-based company has raised a total of $51 million to date. The fresh funds will be used to expand its omni-channel presence, invest in capabilities and strengthen its brand. This fundraise marks a strategic step towards consolidation as the brand prepares for a potential IPO. The cabinet is likely to approve the rationalization of royalty rates for graphite, cesium and zirconium, according to CNBC Awaz sources. In addition, it's expected to approve an export promotion package of 25,000 crore rupees and the much talked about initial public offering of India Infrastructure Finance Company. All right, in global earnings now, Taiwanese electronics giant Foxconn's third quarter profits rose 17% on an annual basis. This was driven by growth in its artificial intelligence server business. Revenue was in line with estimates. The company said it expects operations in the second half of the year to maintain continuous quarterly growth. All right, it's time for a short break. Coming up next, the explosion in Delhi's Red Fort area was premature as the bomb was not fully developed, say investigating authorities. More details when we return. Welcome back. The Company Law Tribunal has concluded hearing the Vedanta demerger case. The government is opposed to the demerger. Now, Ashmit Kumar is here with more details. Ashmit, please take us to the court action and when can we expect a verdict?
Well, Vedanta, importantly, as far as the government is concerned, there are three key objections that the government has raised. Number one, the first objection was that Vedanta raised a lot of debt using the oil and gas assets, mortgaging those oil and gas assets. Now, that is something that Vedanta has responded to by essentially saying that, look, we've managed to get an NOC from as many as 8 banks to say that there is no lien. There is no lien as far as the oil and gas assets are concerned. So that's concern number one. But the other two concerns are something that the government has doubled down on. The first is the asset coverage ratio. The government is arguing that the total asset base that Vedanta has is north of 2 lakh crore rupees, and that this fully covers, not just fully covers, but substantially covers the government claims, which is roughly about 16,700 crore rupees. What the government's concern is that after demerger, the oil and gas entity will have an asset base of just a little over 29,000 crore rupees, which reduces the asset coverage ratio. What the government is also arguing is that they are locked in an arbitral dispute with Vedanta, and that arbitral dispute and the amounts involved have not been disclosed. The government say that at the very minimum, Vedanta will have to pay them $222 million, and this could swell to over $1 billion, and that has not been publicly disclosed. Now, Vedanta says that as far as the oil and gas mortgaging those assets are concerned, that's something Vedanta says we've cleared our dues, that as far as the mortgaging is concerned, the NOCs have granted NOC going forward. Further, on the issue of asset coverage ratio, here Vedanta argues that even in case of the demerged entity commanding assets of over 29,000 crore rupees, that's still 1.8x the total government claims. And number three, as far as disclosure of contingent liabilities are concerned, liabilities, claims that are currently locked in litigation, to that Vedanta says that they are not required to disclose till the claims of the government are confirmed in a court of law. So as of right now, the NCLT reserving judgment on government's objections as far as the Vedanta demerger is concerned. The next clarity, of course, will come from the NCLT on the way forward.
All right. Thank you, Ashmit, for that comprehensive update. Shifting focus now, more than 200 raids have been conducted across Jammu and Kashmir as part of the probe into the explosion in Delhi's Red Fort area, which killed 13 people. A woman doctor has been arrested for her alleged links to a suspected terror module believed to be behind the blast. So far, the police have arrested 8 people linked to this module. A CCTV footage has surfaced which captured the moment a Hyundai i20 exploded, leading to chaos among the public. Sources say the explosion was premature as the bomb was not fully developed. Meanwhile, Prime Minister Modi has returned from Bhutan and he visited Delhi's Lok Nayak Hospital to meet those injured. He is also set to chair a high-level meeting of the Cabinet Committee on Security. Timsy Jaipuria joins us with more details. Timsy, what are you picking up from investigating authorities?
The car bomb blast that rocked Delhi's Red Fort area on Monday evening is now being linked to a series of coordinated raids carried out by security agencies across Delhi NCR and Pulwama. According to sources, preliminary intelligence inputs suggest the explosion was premature. Investigating authorities, sources say the impact of the blast was limited, with forensic teams finding no crater or shrapnel, indicating the explosive device was not fully developed. Sources also said that the raids conducted on the November 9th and 10th in Faridabad, Haryana had led to recovery of nearly 3,000 kgs of explosives, along with detonators, timers and other bomb-making materials. These raids were part of a broader crackdown on suspected terror modules, and officials believe the Red Fort blast may have been a desperate, hastily executed act under mounting pressure and panic. The Forensic Science Laboratory has now been tasked with matching the chemical composition of explosive traces from the Red Fort site with the material seized during the Faridabad operation. Security has been ramped up in and around the Red Fort area and key installations across the NCR region. Teams from the National Investigation Agency and Delhi Police are piecing together the sequence of events and probing possible cross-border linkages and local facilitation networks. The Union Home Minister has handed over the case to the NIA and instructed the Forensic Science Laboratory to expedite its report on the samples collected from the blast site and from the car that exploded. All agencies, in coordination with intelligence inputs from multiple states, are working together to break down the entire modus operandi and hunt for the culprits. Security remains tight in the capital and investigations are on at the highest levels.
All right. Thank you, Timsy, for that update. And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV 18. Thank you for watching.
Welcome to Indianomics. I'm Lata Venkatesh. The big breaking news is that retail inflation, or CPI, for the month of October has come in at a record low of 0.25% against 0.44% in the previous month and against 6.21% in the year ago October. The lower inflation of 0.25% is largely on the back of very low food prices. The food inflation is actually a deflation at minus 5.01% if you compare it year on year. Month on month as well, the overall food inflation is down by 0.25%. That is October over September. We are clearly headed for a longish bit of low food inflation because this is the 5th consecutive month that we have got a negative food number. The impact of the GST also has to be taken into account when we look at food and at core inflation. To discuss all this, I'm going to be joined by a group of economists. In a bit, we will be joined by Shamika Ghosh, the Group Chief Economic Advisor of SBI. He joins us a little later. At the moment, I have with me Suvadik Rakshit, the Chief Economist at Kotak Institutional Equities, Kanika Pachita, the Chief Economic Advisor at Union Bank, and also on the show is Devang Shah, the Head of Fixed Income at Axis AMC. Kanika and gentlemen, thank you very much for your time. Suvadeep, let me start with you. As you pour through the numbers, we find that month-on-month food inflation has fallen for cereals by about minus 0.01%. For oils, edible oils, a weighty item again, like cereals, it's fallen month-on-month by 0.4%. Fruit is down about 1.5%. Pulses are down about 0.5%. These are month-on-month numbers. The fall year-on-year is significant for vegetables, 27% fall. Spices as well, there's a fall. Pulses have fallen by 16%. What is your sense of the trajectory? Are we going to continue to see food prices in negative terrain?
Sure. I think the numbers that we have today are at 0.25%. The headline is broadly expected. We were looking at 0.28%. And the numbers that you talked on the food prices, I think that was also expected because this is typically the seasonal period where food prices, especially when you look at the short cycle crops, they start to decline. This will continue roughly till around December or January. And in some sense, that will set the trajectory for the food inflation, which I think for the next 2 to 3 months should continue in the negative territory. Food and beverages.
What does this do to the overall inflation, the headline inflation? Sure. What do you expect the annual average to be and the quarterlies?
So I stick with my annual average of 2.1%. For FY26. I'm not getting into the FY27, but just to complete the FY26 part, if you look at the next few prints, I think we are, for the next print, we should be sub 1%, closer to, let's say, 1%. And then on till March, it gradually keeps on increasing to roughly around 3.5%. So that's the trajectory I'm looking at for the rest of FY26. Of course, the assumption here, and I think it's a fair assumption as of now, given the monsoon, etc., that the food prices are not seeing any kind of sharp pickup over the next few months.
Okay, so Q4 you may get about 3% is what you're saying.
Correct.
Okay, Kanika, what is your annual expectation? And therefore, do you think that, first quarter next year, the Reserve Bank had set 4.5%, brought it down from 4.9%. And that was one reason why we thought the Reserve Bank is not cutting rates, because year ahead is above 4%. Now that also goes down, you think?
So, Lata, thanks a lot for having me. In fact, Lata, for the last 2-3 months, we've been claiming that FY26 average was tracking close to 2 to 2.3. In fact, for us, this print was, the estimate was 0.38. It's come in lower at 0.25. Now, when we are looking at numbers where vegetable deflation is still pending, it's only down 0.28% month on month this time. So, in our view, FY26 tracking 1.8%, current quarter 0.5 versus 1.8 from RBI. Next quarter, we are actually at close to 2.5 versus close to 4% from the RBI. For Q1 next year, while the RBI has revised it lower to close to 4.5, 4.7, we are at 4% with a downward bias.
For the year, quarter, that is for the April, May, June quarter.
Yes.
Okay, so the year ahead. Now, Devang, how will the market receive this? Will you see yields fall, or have we already seen them fall because of an expectation of a rate cut?
Yeah, so Lata, as you rightly pointed out, I think probably market is now expecting a rate cut in December. So our view is that probably we would see a very high probability of a 25 basis cut in December. Government bond deals are actually, I think, somewhere down the line, because we have seen in traditionally also over various cycles in fixed income markets, they don't react to the last rate cut. And in fact, we see sell-off after the last rate cuts. So markets are looking out for, first of all, is the trajectory significantly below 4 for next year? Secondly, how is the tariff deal going to play out and what is the impact on growth? So our view is that bond markets have actually probably started looking at more the futuristic data, which is next year's inflation and growth dynamics. And also the bigger overhang has been on the demand supply dynamics, which has been the imbalance on long bonds, the imbalance because of higher SDL supply. I think that is leading to no significant rally on bond markets. But answering your specific question, yes, our view is that getting into the December policy, bond market yields should see around 5 to 10 basis rally from the current level.
What is the bond market right now penciling in? A cut in December? If you look at OIS?
So not completely. I would say the swap markets are pricing in around 8 to 10 basis of cut. The bond yields are probably pricing in 50% probability of a rate cut. So if the 25 basis rate cut comes through, I think we can see. It will be all dependent on the future trajectory of rate cuts, whether it is a last rate cut or probably we can see one more. If there is one more, definitely bond markets will continue to see a downward trend.
Okay. Well, the important point to note now is that food inflation is minus 5.02. Core inflation has come in at, I think, 4.4, or for some people it is 4.35, depending on what you take. But for everyone, the non-gold core inflation. In core, we tend to take gold because personal services is included in core inflation. There you also have a gold item. If that's taken off, then it falls to about 2.6%. Is that right, Kanika?
So, Lata, for us, that number is around 2.7, 2.75. Yes, there can be a statistically different ways to calculate it.
Fair enough.
Nice significant change there. For September, this number was 3.15, 3.2. It's been revised lower to 2.98.
Yes.
And the reason why the September number has been lowered is because housing inflation has been lowered from 3.98 to 2.98. There's a 100 bips delta shift.
Okay.
So that is leading to core X gold also showing a even more tepid trajectory now, and yes, well below the 3% mark.
Well, between now and the monetary policy, there are no CPI numbers, but there's one big giant GDP number that comes out on November 28 for the months of July, August, September. Rakshit, Suhadip, what is the expectation over there? And if it is 7 plus, does that give the Reserve Bank a reason not to cut?
So I think from a policy perspective, growth is not the concern if you go by the GDP print. If you look at activity indicators, etc., you can have various indicators which could point to a bit of a slowdown. But honestly, if you look at the GDP prints, even in the first quarter, same will be with the second quarter. I don't think there is a problem in terms of growth if you look at it from a real GDP.
What are your numbers?
7% plus is what we are looking
for
at.
the second quarter. Okay.
Correct. But again, if you look at the nominal GDP, I think there lies much of the problem. And I think a nominal GDP growth of, let's say, 8% or a 9% is not something that is signaling a very strong growth per se. So from that perspective, if you go by from a policy perspective, I think the inflation is a clear positive for rate cuts. However, the external sector balance as well as the growth part, I think will put the RBI in a more cautious mode. So I think the policy is a close call in that sense, though we stick with a 25 bips rate cut at a fine margin.
Okay. What are the chances, Kanika, according to you? Wait, before that, Suhadip, are you yes for a rate cut or no?
Yeah. We are for a
you are expecting
rate cut, but yeah, it's a close call.
Okay. Kanika, what's your call?
We have a clear call of a rate cut, 25 bips.
Okay. And Devang, what's your call?
Yeah, we are also of the view that December is a very high probability of a rate cut.
Okay, so here we're going with a 3-0 in this house. After the break, we will have Shomyo and let's see what how he votes. See, it's Kanika is there on a very good probability that the Reserve Bank says we have space to cut, but we don't have to use that space now. There may be times to come. Is that a very good likelihood? Not merely because the GDP number may be well over 7. I mean, who expected the 7.8? I have a dipstick survey showed me that the second quarter could be 7.5 very easily. I mean, at least some people have that point of view. If that's the number, the Reserve Bank is in a very awkward position of cutting rates when the growth in the just completed first half is something like 7.6. Kanika, you think that possibility, that awkwardness will prevent the Reserve Bank?
So let's have 2 points there. First is on growth. We completely acknowledge, in fact, our number for Q2 is showing close to 7.5%. But we also want to await corporate earnings to finalize that. But growth in second half likely to slow. As Shubhadeep mentioned, there is a deflator impact even in this quarter, which may actually very well persist in the third quarter as well. However, second half, base effects fade away. So growth likely to slow down. This was acknowledged by MPC even in October. Second, an inflation targeting MPC has to acknowledge inflation numbers consistently undershooting their projections. And now the number for this quarter tracking 0.5 while they're at 1.8. So such sharp undershooting must lead an inflation targeting central bank to pay some credence to inflation numbers as well, especially when nominal GDP growth is under downward pressure.
Okay.
So
No, I take your point. I take your point entirely. In fact, I'm wondering if we can show the entire inflation chart. It may be difficult. From the month of January, for calendar 2025, there is only 1 month where the CPI headline is above 4% at 4.2 for January. From February onwards, the decimal point is 3 point something, and it's consistently falling now to 0.25%. And without gold, it would have been negative. So clearly, the Reserve Bank will have, the MPC will have a lot of explaining to do. We already saw in the previous MPC some of the members asking for the stance to be changed back to accommodative. Of course, they were in a minority. And of course, the stance is not the external members' responsibility. But there is a heavy moral pressure as well on the Reserve Bank to look at inflation, as Kanika has been saying. It's going to become a very interesting policy indeed. Well, Devang, Kanika and Shubhadeep, thank you very much for joining me. This House votes 3-0 in favour of a rate cut in the coming policy. And they are also looking at a 2% inflation for the full year, 2 to 2.1. The Reserve Bank is still sitting at 2.6. With that, let's go into a break. We will be joined by Shomyo Karthik, who is the Chief Economic Advisor of State Bank and the Finance Commission member, in just a minute after the break. Welcome back. We've got a dramatic inflation number for October at 0.25%, an all-time low as far as the new CPI series is concerned, and pretty much a record low if you look at India's record even before the new CPI index. Joining us to glean how the inflation trajectory will be and what this will do to the upcoming Reserve Bank policy on December 5th, I have with me Soumya Kanti Ghosh, Group Chief Economic Advisor at State Bank of India and a Finance Commission member. Soumya, thank you very much indeed for joining us. Well, actually, you were the only one in my poll who gave me a minus number. Minus 0.1 was your guess for the month of October. By your standard, this is actually higher than expected inflation. What do you make of this? I mean, if it's a minus number, what does it do to policy?
Yeah, actually, Lata, our number is actually lower than the headline CPI without the gold, which is at minus 0.57%.
Oh, without gold, it is minus 0.57.
Minus 0.57%, and next 2 months also the headline CPI could be in the negative territory if we just exclude the gold out. Okay. So having said that, if we leave aside that statistical artifact, even for the next 3 months, the inflation numbers will be less than 1%. Okay. So that means that the second quarter inflation could be well below 1%, well below the RBI number. And the third quarter could be around 3 to 3.2%. As of now, it could go even lower depending on how the food prices pan out. So overall inflation for the full year, as you had just said, could be 2% or lower. And the most important point to note here is next year inflation number also gets bumped down, and it will be much lower than the RBI projection of 4.5% at this 4.2% at this point of time. Mm-hmm. So if I take all these factors into perspective, I think, and this is going to have a period of inflation disinflation now, if I call it, because inflation has been declining consistently now from the central bank projection. The central bank projection in April, if you remember, was 4%. It came down to 3.7, then it 3.1. Now it is at 2.6. It could be even lower by that. And every estimate is now lower by around 50 to 60 basis points. So if I take all these factors into consideration, I think the inflation numbers will surprise on the downside. Now it's a call for the central bank to take in the December policy of what it's going to do.
Okay. No, that point is taken. Actually, in which month do you think inflation goes back above 2%? The Reserve Bank's mandate is to keep it between 2 and 6, right? 4% plus or minus 2%. So already from the month of July, it is under 2%. Okay, August, it goes a little above, but basically July, August, September, October, already it is practically below 2%. When does it climb above? In January, February?
I think maybe very close to 2% in January, but in February and March, it should be over 2%. And in March, whether it crosses 3%, that will be a matter how the food prices trajectory works out. So maybe you can take this February.
Yeah, but I was, just as I was asking the economist before you, between now and the monetary policy, there is this big GDP number which comes out. What is your estimate of the growth numbers? And would that be a good reason for the Reserve Bank to say we have space to cut, but we don't have a need to cut?
Now, of course, Lata, I think the most important dimension of this entire growth story has been what we were discussing at the beginning of the year, that the second half would be actually weaker than the first year. That is not going to happen if you look into purely in the numbers now. So because the second quarter GDP, our estimate is actually not be surprised if the number crosses 7.5%. Currently, we are getting a number in excess of 7.5%. You have to fine tune the number. But I will not be surprised if the number is even higher than 7.5%. And then the third quarter GDP, if you look into the October, whatever I can gather from the October sales, their consumption boost and other things, it was actually significantly just stupendous. So from that perspective, the third quarter will also be not a letdown. But for now, for the December policy, the RBI has the GDP number in front of it, which could be around more than 7.5%. And that actually could be the deciding factor of deciding whether to cut now or later. But the important and on a lighter note, the interesting point is that in the February policy, the RBI will not have the Q3 GDP number, which will be released only in the month of February end, which could be even higher than the second quarter. So from that perspective, I think maybe it's a very close call between December and February. But I would stick my neck out to say that maybe February could be the best bet to cut if the RBI decides to go ahead.
Fair point. The Reserve Bank will have the full year first advance estimate from the MOSPI, which if it has a 7 handle, then, it makes it a little awkward to give a cut at that time. But do you think that the Reserve Bank will be bogged down by its mandate? The mandate is that you cannot have inflation below 2%, and therefore it gives a cut. Also, if it gives a cut, do you think the bond markets will even respond? Because it will be the last cut. So do you think there will be a very big fall in the cost of capital?
No,
it could be a wasted cut, is what I'm asking.
Yes. No, Datta, I think that's a very fair point, because I think the possibility, this is my point, is that the base point to cut possibly could have been in October. August, I may rule it out, because June there was a jumbo rate cut. But I think the base time to cut may have gone. But the inflation and also the fact that if the RBI cuts now, the bond market may not react favorably, because credit growth, if you look at another interesting dimension, is that credit growth is now started to outpace deposit growth, because credit growth is in double digits, deposit growth is single digits. So if that is the case, so basically the RBI may have to now look for some liquidity policy adjustment on other things, rather than purely concentrating on a rate cut at this point of time.
Just one more technical point, which only a person like you will know. The new CPI series comes in February. We are given to understand that rent is going to be differently calculated, and it may be higher because they may take market rents. Also, food will be lower, and that is the one that is depressing the inflation. So do you think that may change the arithmetic going forward, that we may not have such a low inflation?
Exactly. I think even if these points are well known earlier also, that food inflation is going to play a major part. Even if the weight of food inflation goes down, even if it goes down, say, by 3%, 45 to 42%, I think the overall headline inflation at this point of time was getting impacted by 20 to 30 basis points. So I'll not be surprised that if the overall headline inflation gets a further downward bias because of the new CPI series, which will be released in February. So that is another uncertain point at this point of time, which the central bank may have to watch out for. But that will actually happen after the RBI February policy. So there is a lot of moving parts at this point of time. The November GDP print, the January full year CSO number, the February quarterly number, and the new February CPI series, which will be published after the RBI February policy decision.
Fair point.
So with so many moving parts at this point of time, it's difficult to make a guess. But as a mandate for the central bank, if it goes by inflation targeting, it needs to cut it, but that's a call with the central bank. Will take very judiciously.
Fair point. But your December vote is cut or no cut?
Yes, as of now, I am holding out for a pause in December.
Pause. All right. Thank you very much, Soumya Karthik Ghosh, for analyzing so many moving parts. Thank you very much for joining us. You can't envy the Reserve Bank at this point in time, because probably in the December policy, they have to revise up the growth forecast to probably 7%, and they have to bring down the inflation forecast to probably 2%. And at that point, growth doesn't need help, but inflation gives you space to cut. That would be a dilemma they have to, encounter. A second dilemma is everyone knows that the real inflation we face is not 2%, because there is no national indicator for health. There is no national indicator for the price of education. We all know that private school fees are going up, but that's not reflected in the inflation. So inflation is not really 2% or 0.25%. On the other hand, growth is also not as good as 7.8 because of the impact of the WPI inflation being very low, the deflator being low. So the Reserve Bank has also to contend with the fact that growth is not as good as it looks, inflation is not as low as it looks because of statistical problems. So I don't envy the Reserve Bank, but December 5th remains a close call. That's it on this edition of Indianomics. Thanks for watching. More news and updates are lined up after the break.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The explosion in Delhi's Red Fort area was premature as the bomb was not fully developed, say investigating authorities. More than 200 raids conducted across Jammu and Kashmir. A woman doctor has been arrested. This is the 8th arrest of a suspected terror module believed to be behind the blast which killed 13 people. All-round gains helped the Wall Street close higher for the third straight day. Nifty and Sensex gain nearly 1%. Midcap index hits a record high. Online trading platform Grow lists at a 12% premium on the Wall Street. Market capitalization hits 80,000 crores on the very first day. Tata Motors commercial vehicle arm lists at a 28% premium. Asian Paints reports a stellar second quarter, beating estimates on all parameters. Volume growth of nearly 11% is well above expectations. Profit rise 47%. IT stocks gain after US President Trump appears to defend the H-1B visa program, says America needs to bring in talent from around the world as it doesn't have certain talents in the country. This comes nearly 2 months after the US added a $100,000 fee on H-1B visas. Weeks after Meli Mistri's ouster, Noel Tata's son Neville inducted into the board of the flagship Sir Dorabji Tata Trust. Former Titan MD Bhaskar Bhatt also appointed as a trustee. Tata Trust has also revised Venu Srinivasan's tenure from life term to 3 years in light of a new Maharashtra law. The law restricts perpetual trustees to 1/4 of a trust total board strength. Lenders are voting on 5 resolution plans to revive debt-ridden JP Associates. Sources say Vedanta, Adani Group, Dalmia Bharat, Jindal Power and PNC Infratech are in the fray. Voting will remain open till the 20th of November. New Delhi remains the most polluted city in the world as air quality hovers between hazardous and severe. Primary schools go hybrid, construction and demolition activities banned. Residents advised to remain indoors during early mornings and late evenings. A group of indigenous people stormed the COP30 climate summit in Brazil, sparking a clash with security officials. Indigenous leaders are seeking more influence in decisions concerning forest management. All right, let's start to the day's market action. The Wall Street was up for the third straight day amid all-round gains. Nifty and Sensex rose nearly 1%. Reliance was the top contributor, rising to 5-month highs. The Midcap index hit record highs, but banks underperformed the blue chips. Prashant Nair is here with the details. Prashant, what sparked this rally?
Well, a strong open on the back of the exit polls out of Bihar, which gave the ruling NDA alliance one more term. The final results, the actual results, of course, are on Friday. But I think the markets took what the exit polls showed with both hands. Markets opening higher and then continuing to build on those gains. So by the end of it, over 0.75% gain on the Nifty Bank, much softer today. The mid and small cap indices both up over 0.75% as well. So it was not just the large caps, but broader markets which also did very, very well. Just one shout out, of course, to the IT services index, which ended about 2% higher. And at the margin, with Bihar out of the way, all eyes on, of course, what will happen with the US-India trade deal, whether it's closer than before. I think those things influencing the IT index. By the way, the sector has done well over the last 3 or 4 days now. Large caps, right? I mean, Asian Paints became the stock of the day, but it really was the stock of the hour because numbers came in the last 60 minutes of trade. Stock ending about 4-5% higher. Adani Enterprises was up sharply. Tech Mahindra was up quite a bit. HDFC Life, TCS, Bajaj Finserv also participating. Bajaj Finserv, of course, along with Bajaj Finance, was one of the big losers yesterday. Not very much of significance on the way down as far as the Nifty goes.
Right, and as Prashant was mentioning, IT stocks took solace from President Trump's softening stand on the H-1B visa program. So here's what happened. US President Donald Trump appeared to defend the H-1B visa program even as his administration continues a major crackdown, including imposing a $100,000 fee on new applications. In an interview to Fox News, Trump acknowledged the importance of highly trained immigrant workers. He argued that long-term unemployed Americans cannot simply be placed in complex manufacturing and defense roles without extensive training.
H-1B visa thing will not be a big priority for your administration, because if you want to raise wages for American workers, you can't flood the country with tens of thousands or hundreds of thousands of foreign workers.
You also do have to bring in talent. When
we
a
have
country
plenty of talented people
no, you
here.
don't. No, you don't.
We don't have talented people here?
No, you don't have. You don't have certain talents, and people have to learn. You can't take people off an unemployment line and say, "I'm going to put you into a factory where we're going to make missiles."
All right, let's put the spotlight on the big set of numbers. The government has released the retail inflation data for the month of October, and it's come in at a record low. Lata Venkatesh joins us now. Lata, please take us through the numbers.
Well, actually, the inflation number has come in as expected. Our poll threw up a number of 0.25%, which is a ridiculously low number. Of course, after the new CPI number came in, a new CPI index came in 2013, this is the lowest ever. Last month also was the lowest ever. But 0.25%, even perhaps historically, would rank in as one of the lowest numbers we have got. And the big culprit or the big contributor is food inflation, which is a deflation. It's coming in at minus 5.02. As you can see, this is a 5-month consecutive negative number or lower year-on-year food prices that we are getting. The core inflation would be slightly higher. It's a calculated number, but that would perhaps come in at about 4.5% or thereabouts. There again, the base is playing a role, but core inflation is also impacted by gold prices. Gold prices shot up in October, as you remember. That is counted in personal services. And therefore, we have to look at the non-gold core inflation number, which is likely to be highly low. The important point to note is food inflation has come in below our poll. Our poll gave us an average of about minus 4.1. At minus 5.1, it clearly indicates that inflation in coming months is likely to be lower than what the street is prepared for. Items like cereals and pulses have fallen even month on month. And of course, year on year, there has been a massive reduction in these numbers. Cereals inflation stands at 0.9 year on year. Month on month, it has fallen. Likewise, a big fall in vegetables, minus 27% year on year. Remember, a year ago, it was those big potato and tomato inflation, 100 rupees a kilo tomatoes. So all that is leading to a very low number in the current year. The big question, of course, will have to be whether there is a 0.25% inflation will make the Reserve Bank cut. We will discuss that later on in the show. But importantly, inflation in line with expectations, food inflation lower than expectation.
All right, thank you, Lata, for that. Shifting focus now, online trading platform Grow made a blockbuster debut, listing at a 12% premium over the issue price. The company's 6,600 crore rupee IPO received a good response, with the issue being subscribed over 17 times. The subscription was largely led by institutional investors. The stock ended the day with gains of 30%, capturing a market cap of nearly 80,000 crores. Shares of Tata Motors commercial vehicles business listed at a 28% premium to its discovery price. This listing comes after the commercial vehicles business demerged from the auto giant's passenger vehicles business on 1st of October. Speaking to CNBC-TV18, Executive Director of Tata Motors, Girish Wagh, said that listing commercial vehicles as a separate entity gives the company a sharper strategic focus. Right on to the IPO market. The second day of Physics Wala's initial public offering saw subscription at 12% as of 4 p.m. Employees and retail investors led the subscription, followed by non-institutional investors. The company plans to raise 3,480 crore rupees via a fresh share sale, along with an offer for sale component. On to the day's earning action now. Asian Paints surged 6% after an all-round beat in the second quarter. Net profits rose 47% on an annual basis to come in at 1,018 crore rupees. Revenues climbed 6.4% to 8,531 crore rupees. Margins at 17.6% also topped estimates. The company's domestic decorative business volume growth beat street expectations to come in at 11%. Remember, Asian Paints had reported a one-time loss of 180 crore rupees in Q2 FY25. Auto giant Ashok Leyland has reported strong set of numbers in Q2, with margins rising to multi-quarter highs. Healthy volume growth during the quarter boost to overall revenue. The management has said that the company is well positioned to achieve mid-teen EBITDA goal in the medium term. Now, however, the company has reported a one-time loss of 40 crore rupees versus a gain of 117 crore rupees a year ago. Shares of Hindustan Aeronautics slipped over 2% in trade after reporting an operationally weak set of numbers in Q2. Revenue was in line with estimates, and this was driven by healthy execution of strong order books. EBITDA was sharply below expectations, declining 5% on an annual basis. Profitability was hit by a sharp increase in provisions and material costs. It's a giant leap forward for the Tata Gen Next. 32-year-old Neville Tata, son of Tata Trust Chairman Noel Tata, has been inducted into Sir Dorabji Tata Trust, one of the flagships behind Tata Trust. The decision comes just 2 weeks after Maheli Mistry was voted out from the Tata Trust board. Joining Neville on the board is Bhaskar Bhatt, a Tata veteran and former MD of Titan. Venu Srinivasan has been appointed as trustee for a 3-year term. Srinivasan's lifetime tenure was revised in line with the new Maharashtra law that limits the number of lifetime trustees in public trust. Noel Tata is now the only permanent trustee of Sir Dorabji Tata Trust. Mangalam Malu joins us now to decode what this means for the trust. Mangalam, a generational shift or continuity with change?
The Tata legacy has just turned a page. A new generation has stepped into one of the most powerful boardrooms of India, the Tata Trusts. 32-year-old Neville Tata, son of Tata Trust Chairman Noel Tata and Alu Mistry, has been appointed as the trustee of the Sir Dorabji Tata Trust, effective November 12th. His appointment marks a generational shift in the trust that controls 28% of Tata Sons, which is the holding company of the Tata Group. Born into one of India's most respected business families, Neville represents the next wave of Tata leadership. He is the grandson of Simon Tata and the grandnephew of Ratan Tata. Educated at Bayes Business School in London, Neville holds a degree in business management, bringing with him an international perspective and a modern retail sensibility. He began his career with Trent Limited, the Tata Group's retail arm, in 2016. Over the years, he has worked across Trent's businesses, from packaged food and beverages to leading Star Bazaar, which is the group's grocery retail venture. In fact, he's also played a key role in the success of Zudio, which is the fast-growing value fashion chain that has become one of India's most talked about retail stories and added a lot of value to Trent, which eventually took the stock into Nifty as well. Joining Neville as a new trustee is Bhaskar Bhatt, the former managing director of Titan, who steered the company through a golden era of retail expansion between 2000 and 2020. The trust has also reappointed TVS Motors chairman Venu Srinivasan as the vice chairman for a 3-year term after revising its structure to comply with the new regulatory norms that cap the number of permanent trustees at 1/4 of a public charity board's strength. Following this change, Noel Tata now remains the only permanent trustee of the Sir Dorabji Tata Trust. The other trustees include Vijay Singh, Pramit Jhaveri and Darius Khambata. Together with the Sir Ratan Tata Trust and the Sir Dorabji Tata Trust, both of them hold a combined 66% stake in Tata Sons, giving it commanding influence over the Tata Group's holding company. With Neville Tata's induction, the trust signals continuity with change, strengthening governance while bringing in the next generation of Tata leadership. From Jamsetji to JRD, from Ratan to Noel, and now Neville, the Tata story enters its next chapter.
Right, thank you, Mangalam, for that. Shifting focus now, the race to acquire Jaiprakash Associates is heating up. Sources have told CNBC-TV18 that voting is underway on all 5 resolution plans submitted for the debt-ridden company. Proposals from Vedanta, Adani Group, Jindal Power and 2 other companies are under consideration by the Committee of Creditors. Sources have also indicated that voting will remain open till the 20th of November and will be subject to an extension if requested by the COC. Vedanta Group has submitted the highest offer in absolute terms, and this was followed by Adani and Group and the rest. Men's grooming brand, the Bombay Shaving Company, has raised 136 crore rupees in a combination of primary and secondary infusions. The round was led by Sixth Sense Ventures with participation from the firm's founder, Patni family, office and others. The Gurugram-based company has raised a total of $51 million to date. The fresh funds will be used to expand its omni-channel presence, invest in capabilities and strengthen its brand. This fundraise marks a strategic step towards consolidation as the brand prepares for a potential IPO. The cabinet is likely to approve the rationalization of royalty rates for graphite, cesium and zirconium, according to CNBC Awaz sources. In addition, it's expected to approve an export promotion package of 25,000 crore rupees and the much talked about initial public offering of India Infrastructure Finance Company. All right, in global earnings now, Taiwanese electronics giant Foxconn's third quarter profits rose 17% on an annual basis. This was driven by growth in its artificial intelligence server business. Revenue was in line with estimates. The company said it expects operations in the second half of the year to maintain continuous quarterly growth. All right, it's time for a short break. Coming up next, the explosion in Delhi's Red Fort area was premature as the bomb was not fully developed, say investigating authorities. More details when we return. More than 200 raids have been conducted across Jammu and Kashmir as part of the probe into the explosion in Delhi's Red Fort area, which killed 13 people. A woman doctor has been arrested for her alleged links to a suspected terror module believed to be behind the blast. So far, the police have arrested 8 people linked to this module. A CCTV footage has surfaced which captured the moment a Hyundai i20 exploded, leading to chaos among the public. Sources say the explosion was premature as the bomb was not fully developed. Meanwhile, Prime Minister Modi has returned from Bhutan and he visited Delhi's Lok Nayak Hospital to meet those injured. He is also set to chair a high-level meeting of the Cabinet Committee on Security. Timsy Jaipuria joins us with more details. Timsy, what are you picking up from investigating authorities?
The car bomb blast that rocked Delhi's Red Fort area on Monday evening is now being linked to a series of coordinated raids carried out by security agencies across Delhi NCR and Pulwama. According to sources, preliminary intelligence input suggests the explosion was premature. Investigating authorities sources say the impact of the blast was limited, with forensic teams finding no crater or shrapnel, indicating the explosive device was not fully developed. Sources also said that the raids conducted on the November 9th and 10th in Faridabad, Haryana had led to recovery of nearly 3,000 kgs of explosives, along with detonators, timers and other bomb-making materials. These raids were part of a broader crackdown on suspected terror modules, and officials believe the Red Fort blast may have been a desperate, hastily executed act under mounting pressure and panic. The Forensic Science Laboratory has now been tasked with matching the chemical composition of explosive traces from the Red Fort site with the material seized during the Faridabad operation. Security has been ramped up in and around the Red Fort area and key installations across the NCR region. Teams from the National Investigation Agency and Delhi Police are piecing together the sequence of events and probing possible cross-border linkages and local facilitation networks. The Union Home Minister has handed over the case to the NIA and instructed the Forensic Science Laboratory to expedite its report on the samples collected from the blast site and from the car that exploded. All agencies, in coordination with intelligence inputs from multiple states, are working together to break down the entire modus operandi and hunt for the culprits. Security remains tight in the capital and investigations are on at the highest levels.
All right, thank you, Timsy, for that update. And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18. Thank you for watching.
So REITs, simply put, is fractionalization of commercial real estate, rented commercial real estate, right? Because if you directly go to buy a commercial real estate, it costs a lot of money. I mean, it could be in the region of 10, 20, 30 crores, right? Now, this allows, REITs allow retail investors to own units of a large pre-leased commercial property, right? Now, secondly, people should not rush in to buy these REITs just because they've gone up 20, 30% last 1 year. They're not exactly equity shares, right? Yeah. They own income earning assets underlying the structure. So let's understand what are the three components of the income, right? First, all these REITs are supposed to have minimum 80% of income earning assets, right? So they get rent out of these assets, which are basically leased out by software company, GCCs, or any other commercial establishments. That is point number one.
So REITs earn from that rental income, first
That's
of all.
right. That's right. Second, the rules say that 90% of the net distributable cash flow has to be given back. So there's certainty that the money is coming back to you as well, right? So there is a certain income yield on REITs.
Yeah.
That is point number two. Point number three, right? There is an escalation in rentals which happens every 3 years. So it's generally 15%. So to that extent, the capital values of these REITs also get re-rated.
Okay.
So broadly put, I'll just explain the maths. Let's assume a REIT is earning a rental yield of 7%, which means if the REIT is valued at 100 rupees, 7 rupees is the income, right? Now, if the value of the rentals go up by 15% every 3 years, then the capital value of the REIT should also go up from 100 to 115.
15%.
Right?
Yeah.
So essentially 7 plus 5, 12% is the base yield from the asset that you can expect to get.
Okay.
So that is the base yield. But now there is another...
This is over a 3-year period.
This is over a 3 to 5 year period.
3 to 5 year
right?
period. Okay.
Now let's come to the second component of the return. What often happens is, like bonds, right? Depending on where interest rates move, whether it goes up or down, the capital values of REITs also go up or down. Because you can pay more for the same asset if interest rates are lower, or you will end up paying less for that asset if interest rates move up, because your expectation of yield changes basis what the interest rate is at that point in time. Because if you go to an FD, let's say in an FD, if you're getting 8% and in a REIT you're getting 7, REIT is arguably a slightly more risky asset class because it's volatile. The prices are volatile. Right? So you'll go and put money in the fixed deposit.
Okay.
You will expect 9% from a REIT. Right. Similarly, if let's say the FD rates or the interest rates prevailing right now go down to 5 or 6%, you will be willing to buy the REIT at a 7% yield. So the prices move up of the REIT when interest rates go down,
fall. Okay.
And vice versa, right? So that's something in a technical parlance is called cap rate compression.
Okay,
right?
Lots of technicalities, but I think what you've explained is this is really important because that capital appreciation part is not very well understood. Largely speaking, when interest rates are falling, REITs are supposed to do better.
Do better. So 3 components of returns we discussed. One is the income part. Second is growth in the income, which is the reset of the rentals. And third is the capital appreciation. And then there are some minor nuances. Every REIT also keeps adding, inventory and, your returns keep going up. But broadly, these are the 3 components that one has to be very careful. So now in that context, last 1 year, the capital appreciation has been
20%,
extremely
25%.
good.
These REIT units, by the way, if you look at, you can do this, simply go online and look at 1 year returns from these REITs. And there's so many of them, right? There's Brookfield, there's, Mindspace, so many of these REITs, 5 REITs actually, which are now listed in India. If you plot a 1 year chart, then the gains are anywhere between, I think, 15 to, more than 15, 20%, 25% in some cases, right?
Right. So making an entry right now into these REITs, one has to be very careful in terms of what your expectation. Because the more the REITs deliver upfront, the back-ended returns tend to taper off.
That's a very important point, and we can only say this. Of course, investors will do their own thing. It just reminded me of the gold ETF flows. I was looking at the data that came out yesterday, right? In the months when gold was going through the roof, September and October, gold ETFs got the maximum amount of money.
Absolutely.
Because as investors, it's just behavioral sciences. I think we end up chasing returns. But Vishal, come in on this. So, Ashish has explained just the basic structure of how that REIT works. What has the experience of the past been? Because now we have several listed REITs. When we combine all these 3, the rental yield, the capital appreciation, the reset of rentals, how good has the return been from these products, say, over the past
2 3 years?
Yeah, so I think it's important to sort of look at different time frames because clearly the last 1 year has been fantastic for REITs. But the period before that, because REITs first got listed in 2019.
That was the first REIT.
That was the
yes.
first REIT.
Brookfield.
So it's, that was Embassy.
Embassy REIT, yes.
Right.
Yes.
And it's been about 6 years now. So it's been through these cycles. So when Embassy got listed, there was this shortage of REITs. It was the only one there. It suddenly saw a big move up. And then you went through COVID, you saw people work from home. A lot of people believed that, that's the future.
And
no
there's
one's going to go back to
never
commercial
return
space.
to office.
Never going to return to office. So you went through this period where, REIT returns were very subdued.
Yes.
You had interest rate cycles along the way as well. So I think, if you look at investors who've remained invested for long periods of time, their returns are quite normal.
And what does that mean? Define
So they've been
normally?
anywhere between 11 to 13% for long periods of time.
Okay.
Which is pretty much how the combination of rental yield plus the rent increase plus capital appreciation's been. But anyone who's come in the last 12 months has seen an abnormally high rate of return.
Absolutely.
And I think it goes back to the principle saying that, a REIT is also a long-term investment asset. And therefore, when you're buying into a REIT, even though it's income producing, and therefore there is a tendency to believe it's more like fixed income than an equity asset, I think the time frame definition is really important. And therefore, getting into REITs with a 7 to 10 year horizon probably is a good idea for investors because they'll go through these interest rate cycles. Typically, interest rate cycles last for 2 to 3 years on the way up. Then they remain flat for 2 3 years. Then they go down for 2 3 years. So you go through the entire cycle and you'll probably get a normalized rate of return.
Okay, so let's establish reasonable return expectations from this product first. Ashish, like Vishal is saying, that if you just normalize COVID onwards, the slump and the rise, and what history tells us is between maybe 11 to 13%. Now we can't extrapolate past returns into the future. But would it be reasonable to expect 13 to 14% kind of a return from REITs, say over a 5 to 7 year period?
See, I would peg it more at 11 to 13. Right?
11 to 13.
If you get anything higher, I would say it's a bonus. Because look at it this way, right? And I'm just comparing it to stocks because it's easier for your viewers to understand, right? So if you take a stock, right, there is an earnings underlying a business, right? And typically your dividend yields are closer to 1 or 2% in stocks in India right now. So bulk of your returns come as capital appreciation. But in a REIT, what happens is that a large part of your returns come in the form of income, and some part comes in the form of capital appreciation. Right? Capital appreciation comes because of rental reset plus cap rate compression. So just to give you a maths, 1% lower interest rates results in a 10 to 12% gain on the capital front. So part of the return capital gains has lower taxation, as you know, it's 12.5%.
12.5%,
right? Now, the other thing to consider is how are you getting the income from the REIT? So
and how is it going to be taxed? That's really important.
Right.
Let's understand that.
So there are two ways the REIT pays out income. One is dividends. There are some REITs which pay out more dividends. For example, Mindspace pays out more dividends. There are some REITs who pay out more interest income. For example, Embassy. Right? So income return from interest income is taxed at MMR.
Your maximum marginal rate.
Maximum marginal. So for a person who's at the highest slab, it doesn't make sense. For a person who has a lower slab, it probably makes sense. But for a person at a higher slab, it makes more sense to get dividends.
And how are those dividends being
taxed? So dividends in your hands are tax-free. Right? They're taxed at the REIT level, which is lower than interest income at the marginal rate. So for people at the highest tax rate, probably the dividend makes a lot of sense.
And then there is capital appreciation, which is capital gains tax.
Which is capital gains tax. So the blended taxation is much lower than fixed income instruments. So the way to look at a REIT is on one side you have a fixed income instrument, right, which is giving you guaranteed income or certain income. And on the other side you have equities which are obviously uncertain depending on the earnings of the companies. This is a hybrid asset class in between. Because about 60-70% of the income comes from dividends or interest, and about 30 to 40% comes by way of capital appreciation.
Got that. So now we've understood the brass tacks. We need to take a break, but after the break, we boil down to further specifics. There are 5 different listed REITs. They own different kind of assets. Like Ashish explained, some give you more interest income, some give you better dividends. How do you decide which one is right for you? And then we also look at changing regulations. SEBI has turned a far more favorable eye to REITs. What does that mean for us? We'll find out after the break.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we are demystifying the world of REITs, real estate investment trusts. And why are we doing that? Because they seem to be garnering a lot of interest now. Because A, commercial real estate has been booming in India, and B, the actual listed price of these REITs, that price has also been going higher. So therefore, it merits a closer look before you decide whether you want to invest or not. Vishal, let's talk about this, right? 5 listed REITs now in the country. Tell us a little bit, I mean, some nuances, and then how should we decide? Do you invest in all 5? Do you pick 1, 2, 3? You know, how to go about it?
Yeah, so there are clearly 5, and one of them has got listed just very recently. Yeah. So Embassy was where it all started from in 2019. So they are very Bangalore focused as a REIT. So one of the important things around REITs is they are in different geographies in terms of the concentration of assets that they have. So Embassy is very Bangalore focused. You have Brookfield, which typically has built its model around campus style spaces. So if you went to a college campus and you looked at mixed developments inside it, commercial, residential, retail, all together in those campuses, that's the Brookfield model. They're of course in other cities as well. So they are in the north. They've just made a large purchase in Bangalore. So Brookfield's their global player. You have Mindspace, which is very Hyderabad and Mumbai centric.
Okay.
So again, a lot of these REITs have tenants who are similar. A lot of technology, commerce, banking and financial services, global capability centers, especially Brookfield has 60% plus of its assets rented out by GCCs. So you've got that third player. You've then got Nexus, which is different because it has largely malls and retail spaces. Okay. So it's different from the other three simply because it's focused in a different area. Those malls are across the country. They continue to buy more mall assets and sort of create exposure. And then you've got the most recent one, which is Knowledge Realty, which was essentially put together by Blackstone and Satwa.
Yeah.
So those are the 5 players who sit there. So there are going to be 3 sort of key elements that you think about. One is, which geography do you really want to go to? So if you believe that Bangalore, for example, is the hub of where a lot of development and a lot of demand for these assets is going to come, then obviously a more Bangalore-centric REIT may be important. If you believe that you're trying to chase global players, then you'd probably want to look at something which has got Blackstone or Brookfield in it. If you want to look at the retail spaces, then it's Nexus. So I think one of the things that investors need to be very mindful of, besides what Ashish mentioned around how they pay out their income, is what is the kind of exposure that you want to really take as far as the REIT is concerned.
Yeah. Do you want to be in offices? Do you want to be in a certain part of the country? Do you want to be in a narrow market? But that also raises another question. The question of concentration, because from what you describe, clearly technology and GCCs, that's a huge part of the whole REIT story. So from an investor perspective, if I'm looking to take an exposure to, say, a largely Bangalore-centric player where, technology tenants are the large chunk of that rental income, am I taking on too much risk?
So there is definitely risk in it. And I think, the risks come from the fact that those contracts which are there, a lot of them will have lock-ins in place. Okay. So I think it's important to understand how those deals are structured. It's also important to keep in mind when those deals happened, because there is a reset on rentals that happen over a period of time, because you end up doing a contract for, say, 9 years, for example. And when it comes up for a release conversation again, you could see appreciation happen on the price further because the rentals have gone up over a period of time. So I think there is nuances in this, and that's why it's important for investors to try to be diversified when they build their REIT portfolio. It's very tempting to just look at last 1 year returns, say,
hey, oh wow, great asset class, let's buy.
This is the best one to buy into. But I think you need to get into a little bit of detail, and ideally our suggestion is between 2 and 3 REITs is a good way to look at it, until the point where you start getting index solutions come in. You will probably see ETFs get created out of REITs, etc. But you'll be able to buy much more diversified.
Just buy the REIT index, so
exactly.
to speak.
You could buy a REIT index. So the REIT index is already in place. Unfortunately, there are no products based on the index yet.
Which brings me to the next part of the conversation, because maybe we're moving in that direction. So viewers, what has happened recently is that SEBI, in its latest classification norms, is now willing to look at REITs not as a hybrid instrument, but as actually equity, which means when mutual funds need to buy the equity part of their portfolio, along with buying equity stocks, they can also take more exposure to REITs. Now, what does this mean? It sounds great, equity exposure, etc. But Ashish, it also gets a little confusing, because at the end of the day, what is REITs? REITs is taking a bet on commercial real estate in India, right? I can also do that by playing the equity stocks of these developers, if I'm that convinced. So how does one decide, and especially with this new equity classification?
See, the difference is that, as I mentioned earlier, right, REITs have an inbuilt income, which stabilizes the volatility.
Right.
If you look at a stock, the earnings are far more volatile than, let's say, a rental income asset
That's
class.
true, very true. Great point.
So it's a great way for a portfolio manager to reduce the volatility in the portfolio. Plus, the classification on equity is a big advantage, because in hybrid funds, you can buy REITs and still enjoy the equity taxation, right? So the SEBI classifications of, let's say equity hybrid, equity minus hybrid. So these two categories, REITs can now substitute the equity part and bring down the volatility on the portfolio. So I do believe that you will see more exposure from equity funds or hybrid funds into REITs going forwards. I mean, they allow 20%. And overall, as an asset class, right, today REITs, if you look at the market cap, is about 1.5 lakh crores. Okay, the AUM is about 2.5 lakh crores. It's about 0.3% of overall market cap. Globally, it's about 3%. So there is a lot of room for the market caps to increase, for the assets to increase. And I see a lot of more REITs getting listed. So there's another classification that SEBI has allowed REITs to come into, which is called the SM REIT.
Yes,
which
small
is
and
below 500 crores. We've not yet seen a REIT list there, but I do believe that going forward, you will see few more REITs listing in that category. So as an asset class, this is going to become fairly large. And like Vishal mentioned, I think for a retail investor, right, he can enjoy the best of both worlds. He can have REIT stabilize his volatility, plus you can diversify as well, because these are basically fractionalized units. Only thing to keep in mind is that REITs also are a play on the economy of the country.
Absolutely.
Right. So if the economic outlook improves, REITs will move up in terms of price and vice versa.
Yeah.
So from a near-term point of view, like he mentioned, like 5 to 10 years, it doesn't matter. Your returns will normalize to that,
11 to 13%.
10 to let's say 13% bucket. But let's say if you're getting in today, I mean, you've seen a huge run up over the last 1 year, then near-term returns may be lower, and you may get returns slightly. You have to wait longer. So those nuances one has to keep in mind.
Fair enough, and I think these are excellent points that both of you have raised, because it gives us lots of food for thought before deciding to invest. I'm ending with the simple question, right? You go back to your portfolio. Now the question is whether you should take direct exposure yourself, buy 2-3 REITs as Vishal said, or should you let the fund managers do it for you, because now mutual funds can technically buy a lot more REIT, right? And if you're doing it yourself, then as a part of the total portfolio pie, a well-diversified portfolio, at what level will you or would you want to cap that REIT exposure, Vishal?
So we think that till the products actually come in a material manner on the fund side, on REITs, investors may need to build this independently, especially keeping the tax structure in mind because of the way dividends are taxed relative to interest.
And do you have any favorites in that case?
So we think that Brookfield and Knowledge Realty may be good options to consider. It's important to have that time frame right, and it's important to keep looking at what's happening. So I think one of the important things that investors miss very often is there is an NAV that is published every half year by the REIT, and that's done by an independent valuer. So typically you will find that as market prices go up, you would find that there's a discount to NAV which becomes a premium. And normally when you start seeing big premiums to NAV, you need to be very careful about what's happening. So what you're seeing right now is a stage where the NAVs are very close to market prices, very small discounts or some premiums, which typically means that over shorter periods of time, investors may not make a lot of money until the NAVs itself get reset. And that's why it's important to
So watch for the NAV, and they come out half yearly. Got that? Right. Final word with you, Ashish, to buy or not to buy. That's the $0.3 trillion question right now.
Yeah, so given that the exposure of mutual funds to REITs is still very limited, I do believe it makes a lot of sense for investors to build this allocation directly. Now, how much should it be? See, it can, as I said, it's a hybrid between an income generating asset and a capital gain asset. So it can be an in-between equity and debt, and it can still give you income. So for people who, let's say, want income out of their portfolio, this can be a very, very good option. And you could build maybe 10, 15 to 20% depending on what stage of life you're at.
And your need for income,
currently.
steady income.
And your need for income. And like I said, the other nuances to look at is how the income is coming, whether it's coming from dividend, it's coming from interest, and what is your marginal tax rate at that point in time. So I do believe that it makes sense to build exposure directly. But the only caveat is that look at it from a 3 to 5 year point of view, because by then, the volatility evens out.
All right, gentlemen, fantastic conversation. Thank you so much. And we've come such a long way, right? From the time where commercial real estate investment was only for the rich and famous. Now it is for you and me. But there are lots of details and nuances to keep in mind. So make sure you check all of this before you make the investment. Thank you for watching. We'll see you next week, same time, same place with another theme.
Let's talk money.
The state of Andhra Pradesh has attracted investments worth $120 billion. Now, these are firm commitments according to the state government. What next for the state's investment ecosystem? Joining us right now is Nara Lokesh, Andhra Pradesh's Minister for IT, Electronics and Human Resource Development. Nara Lokesh, thank you very much for being with us. The $15 billion investment by Google was like a trophy for the state of Andhra Pradesh. Could you give us a sense of what lies ahead and the kind of companies that you're negotiating with?
Well, I believe Google's investment is just the beginning. Andhra Pradesh is now attracting investments across sectors. And this is ranging from blue-collar jobs all the way up to quantum computing. And that's what I believe that makes Andhra Pradesh very unique. And the reason we're able to do that is clearly three things. One, speed of doing business. Two, leadership with clear track record. And three, only Andhra Pradesh has double-engine bullet train Sarkar.
All right. What I'd like to ask you is that India has a 2047 Viksit Bharat vision. But when it comes to Andhra Pradesh, you have a Swarn Andhra Pradesh 2047 vision. How are you trying to do things faster? You are a man in a hurry. You've yourself said in several interviews that you're hungry. You're hungry for more investments. You want to deliver in the next 4 years. What more do you want to do? What do you want to achieve by 2047?
Well, 2047, we want Andhra Pradesh to be a $2.4 trillion economy. So Andhra currently is about a $180 billion economy. That means we need to grow at 15% CAGR. So if this kind of growth rate has to be delivered, we have to fire across all sectors. And it requires greater alignment. Be energy, education, industries, aqua. So across board, we need greater integration and alignment. So that is what we've been able to achieve. And that is why we are able to push this kind of investments. And as a government, our target is $1 trillion worth of investment coming into the state of Andhra Pradesh.
Right. Now, $120 billion is what you claim has already been happened. In the CI summit, MOUs worth 9.8 lakh crores are being signed. Give us a sense of the thrust areas, and in the next 1 year at least, or 12 to 18 months, what is the kind of quantum of investments that are in the pipeline?
Well, you're asking all my trade secrets. Saying that if you look at, we're getting investments in energy, and especially in clean energy. That's a very important sector for us. The other part is in steel. So traditional industries are also depending on clean energy to sort of support them. That's been another thrust area. The entire ecosystem around IT, AI, data centers, quantum is another big focus. Of course, electronics manufacturing naturally is an important sector because India is one of the largest user of electronics now in the globe. So these are the primary thrust areas, but let's also keep in mind that as important as a Google investment is, for me a mushroom processing unit is equally important. Because Andhra is also predominantly an agrarian economy. So horticulture is a great focus areas. We have very clear mission now ahead of us to deliver even on those specific sectors.
Right. Speaking about the agri sector, India has been impacted by US tariffs. Yes, Donald Trump is saying that a trade deal is coming, but we don't know when. The shrimp industry has been impacted. How are you trying to safeguard the interests of the people in your state? And deal or no deal, what's going to be the long-term impact?
I believe that crisis is an opportunity. So if you look at it, the tariff differential, because India is at 50%, our competitor in this particular space is Ecuador. So that's at 16%. So we have a 34% differential. So I sat with the entire industry, we discussed it threadbare. We said, let's understand, break this 34% down. So of course, they'll have to forego a little bit of the profit. Apart from that, how can we reduce the cost of production? So power tariff reduction is one opportunity. Like that, we've sort of understood, mitigated that 34%. Parallelly, we've opened up new markets like Ukraine, Russia, Australia. Markets that for some reason have shut doors on India. We've again reopened those conversations. And some of them have already started accepting our containers of shrimp. So I believe crisis is an opportunity, and I'm sure at the end of it we'll come out creating a larger market.
In the last 4 to 5 years, we've seen vulnerabilities related to some semiconductors. We've seen vulnerabilities now related to rare earth minerals as well. What are you doing in order to encourage an ecosystem for these in your state?
No, see, beach sand mining is a very important sector. So it carries rare earth minerals. So that's very, very important sector for us. And the way we're working with the entire industry is to actually come up with a policy. So how do we work backward? So yes, you got the mineral, but then how do you sort of go into entire processing? What are the kind of industries that depend on it? Who are the large players? Who are the medium players in this sector? And how do we get them to build the entire ecosystem around it? This is what I call vertical. Then comes horizontal, education, my department. So from offering courses to like skill development, to testing, to certification, we're building the entire ecosystem. So this is what I call clusterization. This is going to be very critical for us to succeed in, even in this particular sector.
Right. You compete a lot with your other state ministers, especially Karnataka. Any message for the Karnataka government, and what's really driving you to continuously try and attract industry, companies who are in Karnataka to come and invest in the Andhra story?
I mean, I'm attracting investments from every entrepreneur in India and across the globe. So I'm just pitching my state. And I believe that when states compete, India wins. So I have a lot of respect to Kannadigas, Tamilians, of course to my brothers and sisters even in Telangana. But I believe that we should compete. This is what makes India, will make India unique. When states compete, India will win. And a healthy competition is always good.
Right. Your father says Hyderabad is the model for what you want to now do in Andhra Pradesh. You had gone to him with the proposal for giving land to TCS for 99 paise. Are we expecting some more reforms in that direction possibly, or on those lines?
Well, it's a clear policy that we have. We call it the lift policy, which offers land at a very competitive price to Fortune 500 companies. Through that, we've been able to give land to TCS, Cognizant, and 2-3 other companies, where announcements will be done soon. And the reason I've taken that such a bold move is because you need to think outside the box. Because to be fair to the IT sector, Andhra is late. Because we were a combined state, all the IT investments went to Hyderabad. Post bifurcation, we couldn't get traction in the IT sector. So I had to take that kind of a bold initiative. And because we took that bold initiative, we are able to land the likes of Google, TCS, Cognizant, and few more that will get announced soon.
Right. What do you think India needs to do in order to win the AI race?
Well, we have to build our own large language models. The Honorable Prime Minister, Shri Narendra Modi ji also alluded to it. When he went to various conferences, there is a slow AI bias towards things. So that's very, very important to build our own models. That's one. Two, we need to build a lot of data capacity within our country. So Andhra can do its part. So 6 gigawatts I can deliver as a state. But all the other states also should now come together and build more and more data capacity, because that is going to also be equally critical. And the third part is to power all this with green energy, clean energy. That is equally important. So while data centers are great, you can't power them with just thermal alone. Well, I understand you need a base load, but then you have to focus on renewables, pump storage projects. So all these three put together, I think, will create a very vibrant ecosystem.
Have you set out a target for your people that I want this much FDI by so-and-so date?
See, our target is to attract $1 trillion worth of investment, both domestic and FDI, to Andhra Pradesh. So I'm sector agnostic, country agnostic, entrepreneur agnostic. As long as you want to invest in Andhra Pradesh and you want a state that can move fast, please come and invest in Andhra Pradesh.
Okay, my final two questions. You focus on speed of doing business. That's how you sell Andhra Pradesh. Under speed of doing business, how much time does it take to open a company, get clearances to begin manufacturing?
See, from the time we shake hands, we agree that you will invest in Andhra Pradesh, to completing all the process, not more than 30 days flat. 30 days we can deliver land, ready to break coconut. And that's how we've worked. And companies that require policy changes at the state level, at the central government level, we are also working with them to do those. So that's how we are able to land ArcelorMittal. That's how we are able to land Google's investment.
All right. And finally, politically, what's your vision for the next election? Are we going to see Nara Lokesh lead the party, play a bigger role, possibly be a chief ministerial candidate?
I'm the National General Secretary of Telugu Desam Party, and I'm a humble minister of Andhra Pradesh. My hands are full.
Right.
I'm here to deliver the targets given by our Honorable Chief Minister.
Okay. How do you and your father balance responsibilities?
That's tough. He's a tough taskmaster, and whatever he says, for us is a mere diktat, and we just focus on it. We just go about delivering his targets. So it's been an exciting 17 months now, and I'm sure next 3.5 years we'll make India proud.
All right, Nara Lokesh, thank you so much for being with us here on CNBC TV.
Thank you for having me.
Welcome back to News Center. I am Ashmit Kumar. Now, retail inflation for the month of October has come in at a record low of 0.25% against a reading of 1.44% in the month of September. This largely on the back of lower food prices and the first full month impact of GST rate cuts. Lata Venkatesh now joins us with more details. Lata, help us through these numbers, help us crunch these numbers.
That's right. The inflation number for October at 0.25% is very much in line with what the CNBC-TV18 poll threw up. The food inflation is even lower than what our poll threw up. We had a minus 4.1 and it's come in at minus 5.02. There are several factors inside the inflation numbers which are indicating really weak numbers. Food inflation is negative or deflationary for the 5th consecutive month and is likely to remain that way at least for the next 2 months. The RBI has a mandate for keeping inflation between 2 and 6%. Throughout this year, the inflation has touched 4% only for the month of January in calendar 2025. And it will be below the 2% mark for probably 4 or 5 months in a row. It's likely to be below 2% in the months of November and December as well, according to experts, and probably climbs up only in calendar 2026. So the Reserve Bank is in a very awkward position. The other details from today's numbers also show the month-on-month. One can understand a year-on-year fall, but month-on-month cereals are down about minus 0.1% for cereals, minus 0.4% for oils, minus 1.5% for fruit, minus 0.4% for pulses. Usually prices start falling in the month of November because the festival season is over. This is one of those years when even in the festival month, we are seeing food prices fall, indicating a very good harvest and, of course, a very high base. So the chances are that the Reserve Bank on the 5th of December will have to bring down the inflation, average inflation for the full year to 2% from its current level of 2.6%. But between now and the policy, there is the second quarter GDP number which will come, and there are many who believe that it is going to be above 7%, probably even above 7.5%. If that happens, it is extremely awkward for the Reserve Bank to cut rates when the growth number is as high as 7.5%. So the inflation number makes the upcoming December 5th policy a very close call. A majority are expecting a cut, but the consensus is not for a cut.
Right, Lata, thanks so much for that. Now, IT stocks took solace from President Trump's softening stance on H-1B visa program. So here's what happened. US President Donald Trump appeared to defend the H-1B visa program, even as his administration continues a major crackdown, including imposing a $100,000 fee on new applications. In an interview with Fox News, Trump acknowledged the importance of highly trained immigrant workers. He argued that long-term unemployed Americans cannot simply be placed in complex manufacturing and defense roles without extensive retraining.
H-1B visa thing will not be a big priority for your administration, because if you want to raise wages for American workers, you can't flood the country with tens of thousands or hundreds of thousands of foreign workers.
You also do have to bring in talent. When
we
a
have
country
plenty of talented people
you
here.
don't. No, you don't.
We don't have talented people here?
No, you don't have certain talents, and people have to learn. You can't take people off an unemployment line and say, I'm going to put you into a factory where we're going to make missiles.
Now, online trading platform Grow made a blockbuster debut, listing at a 12% premium over the issue price. The company's 6,600 crore rupee IPO had received a good response, with the issue being subscribed over 17 times. The subscription was largely led by institutional investors. The stock ended the day with gains of 30%, capturing a market cap of nearly 80,000 crores. And shares of Tata Motors commercial vehicle business listed at a 28% premium in its discovery price. This listing comes after the commercial vehicles business demerged from the auto giant's passenger vehicle business on the 1st of October. Speaking to CNBC-TV18, Executive Director of Tata Motors, Girish Wagh, said that the listing the commercial vehicles department as a separate entity gives the company a sharper strategic focus. Now, it's a giant leap forward for the Tata Gen Next. 32-year-old Neville Tata, son of Tata Trust Chairman Noel Tata, has been inducted into the Dorabji Tata Trust, one of the flagships behind Tata Trusts. The decision comes just 2 weeks after Mehli Mistry was voted out from the Tata Trust's board. Joining Neville on the board is Bhaskar Bhatt, a Tata veteran and a former MD of Titan. Venu Srinivasan has now been appointed as a trustee for a 3-year term. Srinivasan's lifetime tenure was revised in line with new Maharashtra law that limits the number of lifetime trustees in a public trust. Noel Tata is now the only permanent trustee of the Sir Dorabji Trust. Men's grooming brand, the Bombay Shaving Company, has raised 136 crore rupees in a combination of primary and secondary infusions. The round was led by Sixth Sense Ventures with participation from firm's founder, Patni Family Office and others. The Gurugram-based company has raised a total of $51 million to date. The fresh funds will be used towards expansion of its omni-chain presence, investing in capabilities and strengthening its brand. This fundraise marks a strategic step towards consolidation as the brand prepares for a potential IPO. And in news now from Delhi, the cabinet is likely to approve the rationalization of royalty rates for graphite, cesium and zirconium, according to CNBC Awaaz sources. In addition, it is expected to approve an export promotion package of 25,000 crore rupees and the much talked about initial public offering of India's infrastructure finance company. And in global earnings, Taiwanese electronics giant Foxconn's third quarter profits rose 17% on an annual basis. This was driven by growth of its artificial intelligence server business. Revenue was in line with estimates. The company said it expects operations in the second half of the year to maintain continuous quarterly growth. And back home, cash-strapped carrier SpiceJet has reported a weak set of numbers in the second quarter. Losses have widened by 43%. Revenue from operations has slumped nearly 14%. However, the airline leased 12 aircraft in October and November with the overall fleet increasing to 30 planes that are currently in service and 35 planes on the ground. Now, Asian Paints surged 6% after an all-round beat in the second quarter. Net profits rose by 47% on an annual basis to come in at 1,018 crore rupees. Revenues climbed 6.4% to 8,531 crore rupees. Margins, meanwhile, stood at 17.6%, also topping the estimates. The company's domestic decorative business volume growth beat the street's expectations to come in at 11%. Remember, Asian Paints had reported a one-time loss of 180 crore rupees in Q2 of FY25. Now, auto giant Ashok Leyland has reported a strong set of numbers in Q2 with margins rising to multi-quarter highs. Healthy volume growth during this quarter boosted overall revenue. The management has said that the company is well positioned to achieve mid-teen EBITDA goals in the medium term. However, the company has reported a one-time loss of 40 crore rupees versus a gain of 117 crore rupees a year ago. Now, shares of Hindustan Aeronautics slipped over 2% in trade after reporting an operational weak set of numbers in Q2. Revenue was in line with estimates, and this was driven by healthy execution of strong order book. EBITDA was sharply below expectations, declining 5% on an annual basis. Profitability was hit by a sharp increase in provisions and material cost. Now, more than 200 raids have been conducted across Jammu and Kashmir as part of the probe into the explosion in Delhi's Red Fort area, which killed 13 people. A woman doctor has been arrested for the alleged links to a suspected terror module believed to be behind the blast. So far, the police have arrested 8 people linked to the module. A CCTV footage has surfaced which captured the moment a Hyundai i20 exploded, leading to chaos among the public. Sources say that the explosion was premature as the bomb was not fully developed. Meanwhile, Prime Minister Narendra Modi has returned from Bhutan and he visited Delhi's Lok Nayak Hospital to meet those injured. He is chairing a high-level meeting at the Cabinet Committee on Security. Timsy Jaipuria joins us now with more details. Timsy, tell us, what are you picking up? What's the latest from the investigation authorities?
The car bomb blast that rocked Delhi's Red Fort area on Monday evening is now being linked to a series of coordinated raids carried out by security agencies across Delhi NCR and Pulwama. According to sources, preliminary intelligence inputs suggest the explosion was premature. Investigating authorities sources say the impact of the blast was limited, with forensic teams finding no crater or shrapnel, indicating the explosive device was not fully developed. Sources also said that the raids conducted on the November 9th and 10th in Faridabad, Haryana had led to recovery of nearly 3,000 kgs of explosives, along with detonators, timers and other bomb-making materials. These raids were part of a broader crackdown on suspected terror modules, and officials believe the Red Fort blast may have been a desperate, hastily executed act under mounting pressure and panic. The Forensic Science Laboratory has now been tasked with matching the chemical composition of explosive traces from the Red Fort site with the material seized during the Faridabad operation. Security has been ramped up in and around the Red Fort area and key installations across the NCR region. Teams from the National Investigation Agency and Delhi Police are piecing together the sequence of events and probing possible cross-border linkages and local facilitation networks. The Union Home Minister has handed over the case to the NIA and instructed the Forensic Science Laboratory to expedite its report on the samples collected from the blast site and from the car that exploded. All agencies, in coordination with intelligence inputs from multiple states, are working together to break down the entire modus operandi and hunt for the culprits. Security remains tight in the capital and investigations are on at the highest levels.
Right, Timsy, thanks a lot for that. Now, the NCLT today concluded hearing arguments and reserved its judgment on Vedanta's plea seeking nod for the demerger. The brief hearing saw the government renew its opposition to demerger of Vedanta. The government claimed that Vedanta is liable to pay the government 16,700 crore rupees. The government argued that pre-demerger, Vedanta would have assets of over 2 lakh crore rupees, thereby giving ample protection to government's claims. The government submitted that post the demerger, the proposed oil and gas entity would have assets of only a little over 29,000 crores. Now, Vedanta countered the government's position, claiming that 29,000 crore rupee assets, that's an asset base that's 1.8x the government's total claims of 16,700 crores. The government further objected that Vedanta had not disclosed claims that are currently being fought over in arbitration. As per the government, Vedanta could be liable to pay anywhere between $222 million to over $1 billion. Vedanta rebutted this by saying that the Indian law, they are not required to recognize or disclose a claim till it is confirmed by a court of law. The government had also claimed earlier that it was against Vedanta mortgaging oil and gas assets for raising funds. Vedanta today clarified that it has submitted an NOC by as many as 8 banks confirming that the oil and gas assets are free from any mortgage or lien. The NCLT has reserved its judgment. No clarity has been given on when the judgment can be expected. Well, coming back to the national capital now, Delhi's air quality remains in severe category for the second day in a row. The government has imposed the third stage of pollution control measures across the region. Construction and demolition activities have been banned. BS3 petrol and diesel 4 vehicles have been barred as well. In case the AQI levels cross the 450 mark, the government will implement the fourth stage of curbs across Delhi NCR. Ukrainian forces have withdrawn from 5 villages after intense fighting against Russian troops. The country's top military commander has said that the army situation has worsened significantly. Kyiv has also reportedly struck Russia's Saratov oil refinery using drones. Ukraine's Air Force said that Russia launched nearly 120 drones overnight, mostly targeting frontline regions. More than 50 of them were reportedly shot down or disabled. Now, Russian President Vladimir Putin is expected to visit India in December in a bid to boost ties between the two nations. According to Bloomberg, the Russian leader will visit New Delhi on the 5th of December and will participate in the Russia-India Forum. This visit comes at a time when US President has been claiming that India has stopped purchasing oil from Russia. And with that, it's a wrap on this edition of News Center. More news and updates will continue right here on CNBC TV18.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Online trading platform Grow lists at a 12% premium on Dalal Street. Market capitalization hits 80,000 crores on the very first day.
The second day of PhysicsWallah's initial public offering saw subscription at 12%. As of 4 p.m., employees and retail investors led the subscription, followed by non-institutional investors. The company plans to raise 3,480 crore rupees via a fresh share sale, along with an offer for sale component.
Men's grooming brand, the Bombay Shaving Company, has raised 136 crore rupees in a combination of primary and secondary infusions. The round was led by Sixth Sense Ventures with participation from the firm's founder, Patni Family Office and others. The fresh funds will be used to expand its omni-channel presence, invest in capabilities and strengthen its brand.
HRS Navigation, a medtech company, has raised $5 million in a pre-Series A funding round backed by GVFL, Pfizer Capital, Satguru Catalyzers, India Exim Bank and Kitven. Funds raised will be used to accelerate product innovation, global market expansion, enabling HRS to scale manufacturing and advance next-generation navigation.
Nebius Group has signed a deal worth about $3 billion with Meta to provide the Facebook owner with AI infrastructure over a 5-year period. The company said after it reported a more than 4-fold rise in third-quarter revenue. It is Nebius' second contract with a hyperscaler, following its $17.4 billion deal with Microsoft in September.
Those were the headlines that we're tracking for you this evening. But on what's brewing today, online trading platform Grow made a blockbuster debut, listing at a 12% premium over the issue price. The company's 6,600 crore rupee IPO had received a good response, with the issue being subscribed over 17 times. The subscription was largely led by institutional investors. The stock ended the day with gains of 30%, capturing a market cap of nearly 80,000 crore rupees.
The listing of Grow represents much more than a financial milestone. It's a reflection of how far a clear vision, strong governance, and relentless focus on customer first can take a young company in less than a decade. From its inception, Grow has stood for one powerful idea, that investing should be simple, transparent, and accessible for every Indian. This idea resonated deeply with millions across the country, and today Grow stands as a trusted brand in digital investing.
Also on what's brewing, full-stack fulfillment and supply chain tech startup QuickShift has raised 22 crore rupees in a pre-Series A round led by Atomic Capital, with participation from Axelor Ventures and other marquee investors. The company plans to use the fresh funds to strengthen its AI-led fulfillment platform, expand operations across key markets in North and South India, and power the omni-channel ambitions of the new age and enterprise brands. Joining me now to talk about this milestone and QuickShift's next phase of growth is Anshul Goenka, founder and CEO of QuickShift. Anshul, welcome to Startup Street. Now, QuickShift is a plug-and-play, full-stack fulfillment platform. What exactly does that mean for a D2C or SMB brand trying to go omni-channel today? And with multiple sale channels from marketplaces to quick commerce, how are brands really rethinking fulfillment, and how is QuickShift enabling them to stay agile?
For a brand, QuickShift is like having an on-demand fulfillment engine that connects every sales channel. Today, a brand could be selling on various marketplaces, D2C website, or quick commerce. And we sort of enable one integrated platform to be able to manage everything. So in the back end, we sort of manage a range of fulfillment centers that are scattered around the country where a brand can store the inventory. And we manage the order processing till the time it reaches the end customer. So brands can scale instantly without really investing in the infrastructure, network, or the technology, because we sort of give that all under one platform. So in short, we make omni-channel fulfillment frictionless and future-ready.
Okay. I believe, Anshul, the fresh funds will be used to build an AI-first fulfillment platform. What will this next phase of tech evolution look like for QuickShift? How are you using AI to simplify complex operations and decision-making for brands?
So the next phase at QuickShift is built on AI-led intelligence. So for example, brands, first of all, they have to plan a lot of inventory. I mean, for a brand to be really successful, they have to have inventory on shelves, and that goes right from the time they manufacture the product. So how much to manufacture, where it has to be placed, where it has to be stocked. We collect a lot of data, and we sort of are building a platform that really simplifies decision making for brands. So turning fulfillment rather than it is known as a cost center and focusing towards a growth center. And data is going to enable all of that, which we have collected and built over the course of years.
All right. Quick Shift, Anshul, has already clocked 100% ARR growth over the past year. Your core business grew 50%, while newer programs scaled by over 100%. So what are these new programs and what role do they play in the next phase of your growth?
So if you look at, I think from a customer's perspective, everybody's expecting 10 minutes as the demand, right? I mean, you and me, when we order, we expect the products to reach at within 10 minutes. So what we've done is we've moved on from 1 day, same day delivery to about 10 minutes delivery, and faster fulfillment, better fill rates, and ability for the brands to really sell on marketplaces such as Zepto, Blinkit, Swiggy. We've enabled programs post-listing for them. So it becomes absolutely easy for the brands, no matter whichever channels that they're selling on, to be able to, leverage QuickShift as the go-to fulfillment partner. So some of these channels which enables quick commerce and faster deliveries have been the scale-up programs for us. Additionally, we have programs which enables international shipping for some homegrown brands, which make the products globally available. So I think these two products and solutions which we've developed over the course of 1 year has sort of scaled up really well within us.
Sure. You're currently serving over 100 enterprise and D2C brands, handling 3 lakh B2C shipments and 7 lakh marketplace orders a month. You're now expanding into NCR, Bangalore, Kolkata and more. What's driving your expansion strategy, Anshul?
Expansion is driven by demand. Brands want to be closer to the market, reduce delivery times, optimize costs. So by building regional fulfillment centers, we enable same-day delivery, 8-hour delivery. So each new location strengthens our nationwide fulfillment dream and the grid, and keeps the brand competitive across every channel. They've got to be present everywhere on the shelves, wherever the customers need, whenever the customers need. So that's the goal.
Sure, but fulfillment is a crowded space, from logistics majors to newer tech players. How does QuickShift differentiate itself in terms of technology, customer experience or scale?
So through technology, of course, through our AI-led platform that gives, builds a lot of predictability, gives a lot of visibility, helps brand really take some informed decisions. Second is the customer experience with 99% accuracy rates that we've been able to achieve via our fulfillment network. That's been one of the best differentiators for any brand. A few players in the space have been able to really scale up, and we believe that the ability that we give to a brand to be able to scale from 10 orders to doing about 1 lakh orders, that's what sort of sets us apart from other competitors.
Sure. Anshul, you also aim to accelerate global e-commerce shipping for Indian SMBs. How significant is that opportunity, and what infrastructure or partnerships will you need to unlock it?
So it's a massive opportunity. Just imagine a seller based out of Surat, he's able to sell in markets such as US, UK, Canada, Australia. So we are building a cross-border fulfillment capability within QuickShift, and we are partnering with international 3PLs that offer end-to-end visibility and access to markets. And our goal is to be able to make made-in-India products available and globally deliverable within the shortest span of time. So products that, let's say is being ordered by a customer in the US, we have the ability to be able to fulfill it within the next 3-4 days, as opposed to people waiting for 15 odd days.
Okay. One last question before I let you go. What is your vision for QuickShift over the next 2-3 years? Are we going to see a more tech-driven logistics platform or a global fulfillment network emerging from India?
So we are building India's most intelligent fulfillment network, where AI, automation and data, the network, everything works together. The vision is twofold, that we want to become a tech-first platform, and with the domestic and the cross-border pieces emerging from it. Essentially, we are essentially transforming fulfillment from a back-end process to a competitive advantage that every brand could possibly leverage.
All right. On that note, it's time for me to wrap up our conversation. Anshul, many thanks for joining us on Startup Street, and wish you the very best.
Thank you. Thank you so much.
And moving on, AI meets sustainability. That's the vision driving Green Fee,
the Kerala-based startup transforming how banks and enterprises manage ESG risk. The company has raised $2 million in seed funding led by Transition VC with participation from global banking executives. Founded in 2023 by Varun Chandran, Greenfee uses AI-powered tools to automate ESG due diligence, compliance and reporting, helping institutions cut costs and improve transparency. The new funds will help expand global operations, strengthen AI research and scale partnerships as Greenfee positions itself at the forefront of climate tech and sustainable finance. Joining me now to discuss this further is Varun Chandran, the founder of Greenfee. Varun, thank you so much for taking time out and being here with us on Startup Street. You know, you have built a platform at the intersection of AI and sustainability, right? So how exactly does Greenfee use AI to simplify ESG compliance for banks and enterprises? If you could sort of take us through what's on offer.
Sure, happy to be here. Thanks for having me. Imagine when you go to a bank for a credit line or for a loan, you give your KYC, your bank statement, and your business plan. The bank takes all of this and they run a quick credit check on the borrower. Besides that, they also run a series of risk assessments such as your potential exposure to anti-money laundering, fraud, financial crime, CFT, cyber, etc. And in the given scenario of the current environmental, social, and governance-related policies evolving around the world, now the banks are also running the risk assessments on ESG. Now, in doing so, in performing so, it takes about anywhere from 2 weeks to a couple of months to assess the potential risk exposure of a borrower or an investment opportunity on environmental, social, and governance-related matters. Banks retain a number of resources in some cases where our customers have 21, 25 people sitting in each country to assess this risk by navigating through 10 to 15 different systems, different data points. And this takes a lot of time, prone to human error, and also it's expensive. What we built is to automate this whole process so that stakeholders can focus on making decisions faster to invest in sustainable financing opportunities.
Sure, absolutely. And you know, you've raised this $2 million, right? So what does this investment mean for Greenfee's mission to make ESG risk management smarter and more scalable? And where will you be deploying these funds going forward?
Yeah, that's a great question. Thanks for asking. So we're a startup from Kerala. We're building a beautiful product, sustainability product for the world. We have very big ambitions to grow global. Half of the capital will be deployed to set up and grow our sales and marketing team in the US, in Europe, in Middle East and Southeast Asia markets. And about 40% of our investments will be on enhancing our AI capabilities on the product.
You already, sort of work with major global clients, right? From UOB in Singapore to KIIFB in India. What has, their feedback been and how has it shaped your product roadmap? Take us through how you plan to scale your client base and also new products on the anvil.
Yeah, absolutely. So we've actually, last year, we came live in February, and since then we have been working with some of the major clients that you mentioned. In fact, the feedback is very positive. We've backed, long-term contracts from these customers that you mentioned. One signed up for a 6-year contract, another bank signed up for an 8-year contract. It's very inspiring for us because it's sort of co-innovation, joint initiatives that we are driving with our customers. It's not just a contractual obligation or an agreement that we are signing with these customers. We work with them to learn, evolve, and innovate further. So, as you rightly said, we are working with some of the international customers. With a very small team, right? We did not have a sales and marketing team yet. So now we need to take all these case studies and go to the world and tell them these feedbacks from our existing customers and win more clients. That's our plan.
Winning more clients. But, one more thing is, how will this funding sort of help you scale internationally, right? Especially in regions like California, Europe, and the Middle East. What's the plan or roadmap on that front?
Yeah, that's a good question. So first, we'll set up a local, sales offices in all these places. We are in the process of recruiting world-class talent to help us establish partnerships. So we are going to explore partnerships with consulting companies as well as ISVs, software companies that are complementary. So partnership is going to drive a lot of our revenue moving forward. We will also have local foot on the ground to be able to generate more revenue by reaching out through influencers, network, as well as direct GTM approach. So that's a plan for our growth in those countries, yeah.
All right. And can you share where Greenfield's revenue growth currently stands at, and what targets are you aiming for over the next year?
Yeah, so we are on a 100% growth rate right now. We have around 16 customers. All of them are very happy and sharing from multiple industries, like around 8 mainstream industries, be it automotive, manufacturing, textile, fashion apparel, food and beverage, etc. So obviously, we want to take these customers along with us to create those case studies and explain that to similar companies globally.
The ESG software market is growing rapidly. So what sets Greenfield apart from other players in this emerging climate, fintech space?
Yeah, so banks are introducing sustainable financing products such as green bonds, transition funding, green financing, etc. Right? So in order to do the deal origination, obviously they need tools like ours that is AI-enabled, that helps them to do the risk assessment, due diligence, reporting, monitoring, as well as compliance. So that's where we come in, and we help banks to grow their sustainable financing origination pipeline so that they can grow that business. On the other hand, we also work with large international customers, global enterprises who would have a global supply chain where they can focus on getting their supply chain more compliant towards ESG and help their supply chain increase the accessibility towards sustainable financing.
Sure. And, finally, what's next for Greenfield? Are there upcoming partnerships, innovations, or expansion plans we should watch out for in 2026?
So we have exciting plans ahead. We are primarily looking at growing our business. So we're going to go global, recruit more partners, recruit more sales and marketing team, and then work with, our existing customers to take our case studies and best practices to all over the world. And then we help banks and businesses to transition to more sustainable operations, as well as increase the accessibility of sustainable financing.
All right, Barun, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Okay, thanks for having me.
Well, on that note, it's time for us to slip into a short break. But up next, Hyderabad-based Jay Aerospace is set to bring a major shift by cutting aircraft part production timelines from 15 weeks to just 15 days. Co-founder Venkatesh Mudragalla joins us with all the key details on this development. Stay tuned.
Welcome back. You're still with us on Startup Street. India's aerospace ambitions are getting a homegrown push. Hyderabad-based Jet Aerospace is cutting aircraft part production timelines from 15 weeks to just 15 days. The firm recently raised $11 million from Elevation Capital and even caught the attention of Indigo Ventures, which made its maiden investment in J as part of its 450 crore rupee fund. At TiECon Delhi 2025, CNBC-TV18's Aishwarya Anand spoke with co-founder Venkatesh Mudragalla on what this investment means for India's precision manufacturing ecosystem. Take a look.
Venkatesh, the first question that I have for you is that Indigo Ventures has made its maiden investment in J Aerospace from their 450 crore fund. So help me understand that does Indigo's involvement extend to joint product development or vendor tie-ups? And, how does this collaboration with Indigo Ventures today influence your credibility with global OEMs or tier 1 suppliers?
So maybe let me answer the second question first. I think Indigo is one of the largest airlines in the world. They have more than 65% of market share in the country. And they're also one of the largest customers with Airbus, one of the largest OEMs in the aerospace business, right? However, the investment that has come from Indigo is very, very strategic. It is just not only about me. The connection goes very deeper. From our perspective, Indigo is a player who is most acknowledged across the world for the kind of the business that they run, the cost efficiency without reducing, compromising the quality. Those are the things that we also want to bring into our business. Beyond that, joint product development, those are things too early to talk about right now, but I'm sure there'll be something strategic going on in the future.
Okay, all right. And not just Indigo Ventures, you've also raised $11 million in your Series A round from Elevation Capital.
That's
so
right.
help me understand what is the fund deployment plan on that front? And with that round, where does your burn rate stand today? And, what's your runway with the round?
So for us, partnering with Elevation Capital is again something which we are very proud of. The money that we have raised from Elevation Capital and the other investors that we have in the round, we plan to deploy broadly in 3 things. One thing is, of course, we are expanding the facility that we have currently. We operate a 60,000 square feet facility in Hyderabad. We are planning to expand that. We are also planning to get new equipment and new machinery so that we can be ready in terms of both capability and capacity as we move forward into the future. Third and most important thing is reinvest into our digital journey.
Now, J calls itself a software-defined manufacturer.
Yes.
And you're claiming to cut down manufacturing timelines from 15 weeks to 15 days. What's the secret sauce here? And how do you ensure quality control at that speed?
So there are a couple of things how we are doing it. First thing is, all of our Center of Aerospace Resilience is actually run by engineers, even the machines. So the time to change is very, very quick. There is no loop of where we identify an issue and then they go back to an engineer, take a suggestion and come back. So even the equipment are run by engineers. Second thing is, one of the critical components of manufacturing lead times is raw materials. So we stock all the standard raw materials internally, which also helps us reducing the lead time of the raw materials. Third and most important thing is, for example, if you have to do something like an NC program, which is crucial for a component manufacturing, we already have pre-programmed layers that are there. Once we get a component that we need to, we actually bring all of them together and have a almost instant program ready to do the product development. These are some of the initiatives that we have taken to reduce the lead time.
A lot of reports have suggested that J has secured $100 million worth of long-term contracts with international aerospace companies.
Yes.
So could you break down the nature of these contracts? Are they primarily for precision machined parts or full assemblies? And also, which geographies today are the biggest exports markets for you, and what percentage of your revenue today comes from global versus domestic market?
So Aishwarya, from this particular context, so we are a precision machining focused company as of now. While our capabilities expand beyond that, but currently we are very focused on precision machining. So the current orders that you're talking about, the long-term contract of more than $100 million, is very focused on precision machining. Our customers are located in North America, so all of the components that we make currently are exported to North America. And in terms of your last question, 100% of our revenues today come from the export market.
You've spoken about crossing 100,000 components manufactured cumulatively. So what's your current revenue run rate? And tell me, what are some of the targets that you've set for next year in terms of hitting the revenue mark, considering you're already profitable?
We were a team of a single-digit number in about 15 months ago. Today we are more than 100 people. Our current year revenues will be almost 4x the revenues that we have done last year, and we expect to grow at the same rate for the next 2 to 3 years to come.
Well, it's time to take stock of the other startup headlines. Men's grooming brand, the Bombay Shaving Company, has raised 136 crore rupees in a combination of primary and secondary infusions. The round was led by Six Sense Ventures with participation from the firm's founder, Patni Family Office and others. The Gurugram-based company has raised a total of $51 million to date. The fresh funds will be used to expand its omni-channel presence, invest in capabilities and strengthen its brand. Now, this fundraise marks a strategic step towards consolidation as the brand prepares for a potential IPO.
IPO-bound digital payments processor Pine Labs has secured all the mandated regulatory licenses needed to offer digital payments as per RBI notification. The company has secured a payment aggregator license for offline payments, online merchant payments, and for processing cross-border payments. This makes the company the only player authorized across all three verticals. The company's IPO is set to make its debut on the Lal Street this week.
Moving on, the parent company of Mamaearth, Honasa Consumer, reported its consolidated net profit of 39 crore rupees for the second quarter of FY26. This comes after the company had reported a net loss of 19 crores in the same quarter last year. Further, the company's revenue from operations surged while expenses grew marginally.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Ladies and gentlemen, a big round of applause for the CEO of the Niti Aayog, Mr. BVR Subramaniam, who's had quite a harrowing morning trying to get from Delhi to Mumbai today because we've had technical glitches at the Delhi airport, which has led to significant delays. So thank you for braving all of that, Mr. Subramaniam, and still being here with us at the Global Leadership Summit. You know, I want to pick up where Niall Ferguson left off, and he said that we're living in a world where India, in his words, quote unquote, cannot be polyamorous anymore. You will have to pick a side. You will have to make a choice. Is it the US or is it the BRICS? I want to understand from you, do you see this as a choice that India will be forced to make as well, given what President Trump and the Trump administration has decided to do?
So I think that's a very, a very one-sided view, which I heard just now. I think the situation is a bit more complex. Let me take a minute or two just to explain. Just look, there were a lot of certainties since the Second World War. You had a Washington consensus, you had a consensus on free trade, you had the WTO, you had a general belief in multilateralism. All the certainties seem to be going. So the world is in flux. What does that mean? It means you just look at it economically. You see a world where trade is flat, FDI is flat or declining. The world doesn't know how to handle this. And what we are actually heading for is a world where low growth is a norm. We were growing at about 3.5%, 3.7% trend globally before COVID. But in the last few years, the trend seems to be sub 3%, and that's what it's going to be. And in all this, India is a standout case. I mean, it's the brightest spot in the global economy, and that's what makes it important in the context of what you asked. It's bright because it's got size, it's got a market, and it's got innovation talent. Given that, I think India will be a pole which will attract everybody else. So rather than us being forced to make choices, others will be compelled to actually reach out to India. And I think that's the sweet spot India is in. So it's not necessary for India to take sides. People will cut their own cloth to adjust to India. I think that is what it is. I think, and I think that's the way the government is actually moving. That we have, and there's another thing. We're doing good. And we're doing very good because there are strong inherent strengths. And I think if you have to live in the slightly more turbulent times, be it war, be it economy, be it tariffs, build up your internal strengths. The more you build up your internal strengths, the more the world will actually look at you far more favorably. You will be compelled to make far fewer tough choices.
Well, one tough choice, of course, at this point in time that we know that we're grappling with is, of course, how do you engage and how do you deal with the US? The US has put forward what it wants India to do, especially as far as Russian crude, etc. is concerned, and we've made our position known, and we've hopefully made our position understood as well. But given the almost sort of, it's an unyielding peace at this point in time, how do you see this playing itself out in the long term?
So I think things have been a bit difficult with the United States. And I think a reset is being tried. The trade negotiations are on. I wouldn't like to preempt anybody. Hopefully, end of the month, we may hear some news on that front. Having said that, what the US government is saying and what the US corporates are saying are totally different. You are still continuing to have the steady stream of foreign investors coming to India. You've got American companies opening global capability centers in India. You don't see anybody lessening their importance being given to India. So that basically means the fundamental attraction of India will trump everything else.
Will trump everything else. That certainly is a hope, and that does deserve a round of applause as well here for Mr. Subramaniam. But, Mr. Subramaniam, irrespective of what finally happens as far as the India-US bilateral trade agreement is concerned, you've always been a very firm believer in the fact that India must actually cut its tariffs, that it's in India's interest to bring down its tariffs.
So there are a couple of things. Let me elaborate a bit. We want to be a Vikasit Bharat, which means we want to be a developed nation. If we want to be a developed nation, we must have a long-term goal, which has been set. The Honorable Prime Minister had made it very clear. We should be a $30 trillion economy, $18,000 by 47. There are some principles which we should not forego, irrespective of what happens. Number one, don't forego openness. You need to be a world-class country, irrespective of how anybody else behaves. I mean, just because there are tariffs in one part of the world, the rest of the world hasn't changed its behavior. I mean, you still have a COP going on next week, irrespective of somebody not joining it. So I think the importance of that is something we need to realize, openness. Second, we need to be a leader in green transition and addressing, the clean energy transition. Extremely important. They're a core principle. And the third one, focus on our people, focus on our strengths. That means invest in people. As long as you invest in people, I think you're pretty good.
You know, and to the point that you made that India must remain open for the benefit of the people who are watching, last night the finance minister in a conversation also mentioned that India's Atmanirbharta policy should not be seen as an isolationist policy, and that's the point that's being made here by you as well, Mr. Subramaniam. But, you know, Niall Ferguson was also talking about the low-hanging fruits that India must address in order for us to be able to do the 8 to 10% growth ambition aspiration that we have to fulfill. Now, from Niti Ayog's perspective, given where we find ourselves today, domestically as well as globally, what would you prioritize?
Okay. So, look, this is a country whose fundamentals are very good. You know, fiscal prudence is there, inflation is under control, demography is in our favor, and I think that's okay. So what do we need to do? We need to do a couple of important transitions, and I think that's priority. First, we need to make a transition from agriculture to industry. I think that's long pending. A lot of emphasis has been given in the recent past, PLIs, this, that. But I think the transition to manufacturing of two types, high-tech advanced manufacturing on one end and labor-intensive manufacturing. One takes you to the cutting edge of the world economy, the other creates jobs. That's absolutely important. And I think that was the biggest announcement in the last budget, which is the National Manufacturing Mission. And I'm hopeful that by the end of November, the mission will be up and running. The NMM is going to transform India's manufacturing landscape. It's going to be a very different approach, quite different, not throwing money alone, but actually focusing on building capabilities.
I want to go back to the first point that you made, that we're living in a world where trade is flat, where FDI is flat. Now, India has been trying to draw in foreign direct investment across different sectors, from semiconductors to AI and so on and so forth. Given the fact that there is this global uncertainty and nervousness which seems to be impacting FDI, what worries you about our potential to grow at the rates at which we aspire without the requisite amount of FDI?
So I think this is going to be a topmost priority. Firstly, we need sustained growth of 8 to 9% for about 25 years. That itself is a big challenge.
Are we on the cusp of that?
We are on the verge. We're doing the right things. I think from next year onwards, we should be touching those kind of numbers. I mean, that's the goal. And I think the policy levers are being tweaked, number one. If you're going to have 8 to 9% growth, I mean, even if you have a capital output ratio of 4, you need 35, 36% of investment every year. We are not yet there. We're around 30, 31%, and it's been a bit flat at that. That additional 4 to 5% investment has two parts to the problem. One is, I think the government has been doing a lot. A lot of capex has been going. Households have been doing a lot. People have been buying houses, building stuff, etc. I think the private sector capex cycle needs to kick off. And one good thing is, thanks to the cut in GST, the GST festival that has happened, the reduction in income tax rates, the exemption limits being raised, I think more money is being put in pockets. You're going to see a boost in that. So that's the second. So the investment cycle needs to kick off. But on the other side, domestic capital is not going to be enough. So out of that 35, 36% that we need, 3 to 4% has to come from outside. We have touched 3 to 4% long ago, but that was a much smaller economy. Yeah. So 3% of a $4 trillion economy is quite different from 3% of a $300 billion.
So would you consider this one of your biggest worries today?
This is one of the biggest areas of focus, where we need to be actually kicking up our FDI dramatically, and that's it. And the good thing is, you got all the major multinationals in the world looking at India, thanks to the uncertainties. There are companies which are just wanting to shift operations from one country to the other. What does this mean from us? They're interested in India for two reasons. Domestic market, and we are one of the best low-cost destinations for manufacture. Having said that, we need to cut our paperwork. We need to cut our bureaucracy. The Prime Minister keeps talking about, minimum government, maximum governance, ease of doing business. Get out of the way of business. Make life easy. We don't want people to fly in with interest and fly back disappointed.
How much are we still in the way, though?
So this is the other area on which a lot of work is happening. If you actually tick the boxes on reforms, Government of India has probably done 90-95% of it. Take the Income Tax Act. It's about two-thirds the size of what it was earlier. 90% of the work now is left in the states. So we have a task force under the cabinet secretary. He is pushing day to day, without publicity, reforms at the state level. Every day I'm seeing some news item. For example, you want to convert agricultural land to industrial land, you need 1,000 permission. Andhra has just gone ahead and removed that permission. So it's a major transformation. I mean, why can't I be allowed to use the land the way I want it to be used? So a lot is happening on that. So I think the PM has been very clear, reforms, reforms. Cabinet Secretary working with states. We have 2 committees in Niti Aayog. One of them, by the former Cabinet Secretary, is called the High-Level Committee on Non-Financial Sector Reforms. They're focusing only on cutting down paperwork and waste. The first report covered 3 areas: environment, MSMEs, and the whole area about restrictions in manufacturing, etc. They're not public documents, but I'm seeing coverage in some papers. But even if half of them get done, that's going to be transformative. They're going to add 1% or 2 to India's growth.
But why haven't we seen them being done, and when do you hope that they will be done?
No, I think we shouldn't, I don't think there's any need to be sorry, because the reports have just gone out in October. So we're just about 4 weeks away from it. I think there's very high level attention. The highest level attention is being paid to that. So I foresee in a month or 2, much before the budget, some of these things happening. I think the systems are working full time. You go to Delhi, nobody is asleep. They're working 24/7.
We couldn't have asked for a better start than to start with Mr. K.V. Kamath, somebody who knows India, somebody who's been deeply associated with India's financial services sector, and somebody who is and always will be a perma bull on India. Mr. Kamath, thank you very, very much for joining us here at the Global Leadership Summit, sir.
Thank you, Shireen.
Well, let me me get started, sir, with the sector that you've, of course, been most involved with India's banking sector. And today, as is very, very evident and very clear over the last few years, we've seen India's banking sector revive, clean up its balance sheet, emerge much stronger. In fact, State Bank of India crossed 2 milestones yesterday, crossed the $100 billion mark in market capitalization, but also crossed the 100 trillion rupee mark in business. And I was asking C.S. Sethi, the chairman of State Bank of India, what's the aspiration from here? And he said to be amongst the top 10 banks globally in the next 5 years. Mr. Kamath, that is an audacious aspiration and an audacious ambition. Do you think that India's banking sector is poised to break into the top 10?
Yeah. Firstly, my compliments to State Bank in achieving these 2 milestones. My answer is certainly yes, for a simple reason. This would not have been possible if we are not growing at the pace we are growing. And it would not have been possible if the banking sector was systemically not as strong as it is today. So given these 2 things, we will reach the aspirations set by State Bank of India and indeed other bankers. Again, sometimes I look back to see what I can see ahead. And when I look back at, say, China, circa 2000-2005, that period, is when the banks started bulking up. And that's where you could see the pace of, I would say, growth go into double digits. So I think our steady growth of 7% or that range should take us to that sort of bulking in the next few years.
You know, and yes, SBI has also upped its credit growth guidance to between 12 and 14% for the year. But, in terms of the next stage of reforms for the banking sector, and to talk specifically about public sector banks, Mr. Kamath, the expectation is that we're now going to see the next wave of consolidation as far as public sector banks is concerned, because the government wants not just world-class banks, but also world-sized banks, so bigger banks. Do you believe that consolidation is the answer?
I entirely agree with the government's path for a very simple reason. Historically, consolidations have happened, at least in the Indian context, when things were not good. I think this is the first time when things are good and you're consolidating. And what does consolidation get you? It gets you scale and gets you bulk and gets you, I would say, efficiency of operation. And all these are critically important today, and even more so when you're talking of, I would say, a technological revolution that you're all going through. So this is absolutely the correct move at this point in time.
Correct move at this point in time. Another possible move is the consideration to enhance the FII limit for public sector banks, which is capped at 20% currently, to 49%. The PSB view is that this gives private sector banks an unfair advantage when we talk about FII participation. It doesn't actually dilute equity at all. Why not do it?
I entirely agree. The playing field has to be level. Why should there be a playing field which is different for private banks and different from public sector banks? Over the last whatever number of years you want to count, the public sector banks have played a major role in the banking system, and I don't see that changing. So you need to have a level playing field going forward.
While we level this playing field, so to speak, Mr. Kamath, what gives you the most confidence about what we're seeing in the banking sector and in the larger financial services sector? When we last spoke, you said banks don't need to worry about other banks. They need to be worried about what's happening on the fintech side. They need to be worried about tech companies who are also doing banking. As you look at the landscape and how much it's changed today, where do you find confidence and where are your concerns?
Yeah, my biggest confidence is the fact that what gives me the biggest confidence is the fact that the bank balance sheet is clean. If we were having this conversation in a situation where bank balance sheets are not clean, profitability is not at healthy levels, then we would have probably gone in a different direction. So banks are strong, and banks can today compete. So they have capital, they have people, they have understood how to use technology. So they have all the elements. What is required is to understand how the new player, what I call the new any fintech or any player which is not a bank but is agile in using technology, how are they acting, and make sure that you keep pace with them. That is a challenge. So that challenge exists, but I think it's a challenge you can overcome. And that's where I think in another session that I was having with one of your colleagues, I said that banks are spending money, but they need to spend it where in a competitive sense it is most productive.
Which means to actually acquire capabilities, to acquire some of these new cores that you spoke of?
No, not necessarily. What I mean is to put in the right technology that is appropriate for today, rather than do more of the same thing that we were all doing over the last few years.
Yes, so to disrupt yourselves using technology. Yeah. But, what we've also seen happen over the last few years is the retail participation in the India equity story has picked up very significantly post-COVID, and it's been a very secular rise across the nation, fueled by domestic participation and domestic capital. Has that surprised you? And given the unlock that we've now seen happen, what is the kind of headroom for growth that you foresee?
No, I think the India story is driven by 2 or 3 things. I think firstly, it is the long runway that we have. So that gives you headroom. If you did not have a 25-year growth runway, and why do you have that? Because I would think most of India is still to be built. That act of building itself provides the momentum. Again, you look at how growth has happened in other domains in the last 30, 40 years or 50 years. Japan first, Southeast Asia, tiger economy, Southeast Asia, China. You see the transformation journey starts with building what you don't have. And that itself propels you to a status where the next leap becomes easier. I think we are well on that journey. So that headroom we have. Then comes the question that is often asked, where's the capital?
Yes.
I think now we have clearly shown that question has been asked for now at least 30 years that I have been in banking. Not the 50 years I was in development banking, but the 30 years that I have been in banking, that question has been asked, but where is the capital? I think the India story is what I would call a very measured growth. The government has always been careful to make sure that we grow at a pace which we have the ability to support. But today, I think we can grow at a faster pace because the access
What is a faster pace, sir?
I would say that we should actually aspire for a 10% growth rate. And then we will achieve 8%. So that's what we need to do. And also, and I'm very happy that the index is being reset of, say, industrial production or various indices, because we will then have a better picture of at what pace are we really growing. I would think that we're probably growing a little faster than what we all assume.
Than what the numbers reflect at this point in time. Yes, and that review is, of course, underway at this point in time for metrics that measure inflation as well as growth. But, Mr. Kamath, you talked about this aspiration of getting to 10%, and you said if we aspire for 10, we'll probably get 8. If you were to look at the landscape today and the measures that have already been taken, this year, the effort seems to be to boost consumption. We saw the income tax cuts, and we've just seen the indirect tax cuts by way of the GST. What next would you prioritize to really get to that 8 to 10% number?
See, I think we have to get on to what I call a virtuous cycle. Consumption is one part of that virtuous cycle. Investment is the other side. And the question could be, where do you invest? As I said, that's where the long horizon comes in. So you've got enough to invest. And as GDP goes in, aspirations change. That's the third part of it. So this keeps the momentum going. Now, again, historically, we would, that rhetorical question that I said, but where is the money to fund this? And that question has now been answered. Now, a classic case that I would use to say how this got addressed is NHAI. NHAI, we used to I'm talking of NHAI, say 10 years back or so. How will NHAI fund all the highway needs of this country? Just didn't seem possible because it would otherwise take a larger and larger portion of the budget. But today, that issue is a non-issue, because what they have already put in place is now getting tolled properly. And that tolled road is now you create an INVIT out of it, and you have a funding which was not thought of or could not even have been conceived of 5-10 years back. So basically, we are creating new avenues to fund ourselves, and all this without necessarily looking at foreign capital. If I look at last 5 years, most of our growth has come through domestic capital, unlike most other domains. So we have got a lot of levers to push. We are on that virtuous cycle, and I think we will keep pumping at a good pace.
Welcome to Indianomics. I'm Lata Venkatesh. The big breaking news is that retail inflation, or CPI, for the month of October has come in at a record low of 0.25% against 0.44% in the previous month and against 6.21% in the year ago, October. The lower inflation of 0.25% is largely on the back of very low food prices. The food inflation is actually a deflation at minus 5.01% if you compare it year on year. Month on month as well, the overall food inflation is down by 0.25%. That is October over September. We are clearly headed for a longish bit of low food inflation because this is the 5th consecutive month that we have got a negative food number. The impact of the GST also has to be taken into account when we look at food and at core inflation. To discuss all this, I'm going to be joined by a group of economists. In a bit, we will be joined by Shamika Ghosh, the Group Chief Economic Advisor of SBI. He joins us a little later. At the moment, I have with me Subodhi Rakshit, the Chief Economist at Kotak Institutional Equities, Kanika Pachita, the Chief Economic Advisor at Union Bank, and also on the show is Devang Shah, the Head of Fixed Income at Axis AMC. Kanika and gentlemen, thank you very much for your time. Subodhi, let me start with you. As you pour through the numbers, we find that month-on-month food inflation has fallen for cereals by about minus 0.01%. For oils, edible oils, a weighty item again, like cereals, it's fallen month-on-month by 0.4%. Fruit is down about 1.5%. Pulses are down about 0.5%. These are month-on-month numbers. The fall year-on-year is significant for vegetables, 27% fall. Spices as well, there's a fall. Pulses have fallen by 16%. What is your sense of the trajectory? Are we going to continue to see food prices in negative terrain?
Sure. I think the numbers that we have today are 0.25%. The headline is broadly expected. We were looking at 0.28%. And the numbers that you talked on the food prices, I think that was also expected because this is typically the seasonal period where food prices, especially when you look at the short cycle crops, they start to decline. This will continue roughly till around December or January. And in some sense, that will set the trajectory for the food inflation, which I think for the next 2 to 3 months should continue in the negative territory. Food and beverages.
What does this do to the overall inflation, the headline inflation?
Sure.
What do you expect the annual average to be and the quarterlies?
So I stick with my annual average of 2.1%. For FY26. I'm not getting into the FY27, but just to complete the FY26 part, if you look at the next few prints, I think we are, for the next print, we should be sub 1%, closer to, let's say, 1%. And then on till March, it gradually keeps on increasing to roughly around 3.5%. So that's the trajectory I'm looking at for the rest of FY26. Of course, the assumption here, and I think it's a fair assumption as of now, given the monsoon, etc., that the food prices are not seeing any kind of sharp pickup over the next few months.
Okay, so Q4 you may get about 3% is what you're saying.
Correct.
Okay, Kanika, what is your annual expectation? And therefore, do you think that, first quarter next year, the Reserve Bank had set 4.5%, brought it down from 4.9%. And that was one reason why we thought the Reserve Bank is not cutting rates, because year ahead is above 4%. Now that also goes down, you think?
So, Lata, thanks a lot for having me. In fact, Lata, for the last 2-3 months, we've been claiming that FY26 average was tracking close to 2 to 2.3. In fact, for us, this print was, the estimate was 0.38. It's come in lower at 0.25. Now, when we are looking at numbers where vegetable deflation is still pending, it's only down 0.28% month on month this time. So, in our view, FY26 tracking 1.8%, current quarter 0.5 versus 1.8 from RBI. Next quarter, we are actually at close to 2.5 versus close to 4% from the RBI. For Q1 next year, while the RBI has revised it lower to close to 4.5, 4.7, we are at 4% with a downward bias.
For the year, quarter, that is for the April, May, June quarter.
Yes.
Okay, so the year ahead. Now, Devang, how will the market receive this? Will you see yields fall, or have we already seen them fall because of an expectation of a rate cut?
Yeah, so Lata, as you rightly pointed out, I think probably market is now expecting a rate cut in December. So our view is that probably we would see a very high probability of a 25 basis cut in December. Government bond deals are actually, I think, somewhere down the line, because we have seen in traditionally also over various cycles in fixed income markets, they don't react to the last rate cut. And in fact, we see sell-off after the last rate cuts. So markets are looking out for, first of all, is the trajectory significantly below 4 for next year? Secondly, how is the tariff deal going to play out, and what is the impact on growth? So our view is that bond markets have actually probably started looking at more the futuristic data, which is next year's inflation and growth dynamics. And also the bigger overhang has been on the demand supply dynamics, which has been the imbalance on long bonds, the imbalance because of higher SDL supply. I think that is leading to no significant rally on bond markets. But answering your specific question, yes, our view is that getting into the December policy, bond market yields should see around 5 to 10 basis rally from the current level.
What is the bond market right now penciling in a cut in December? If you look at OIS.
So not completely. I would say the swap markets are pricing in around 8 to 10 basis of cut. The bond yields are probably pricing in 50% probability of a rate cut. So if the 25 basis rate cut comes through, I think we can see. It will be all dependent on the future trajectory of rate cuts, whether it is a last rate cut or probably we can see one more. If there is one more, definitely bond markets will continue to see a downward trend.
Okay. Well, the important point to note now is that food inflation is minus 5.02. Core inflation has come in at, I think, 4.4, or for some people it is 4.35, depending on what you take. But for everyone, the non-gold core inflation, in core we tend to take gold because personal services is included in core inflation. There you also have a gold item. If that's taken off, then it falls to about 2.6%. Is that right, Kanika?
So Lata, for us that number is around 2.7, 2.75. Yes, there can be a statistically different ways to calculate it.
Fair enough.
Nice significant change there. For September, this number was 3.15, 3.2. It's been revised lower to 2.98.
Yes.
And the reason why the September number has been lowered is because housing inflation has been lowered from 3.98 to 2.98. There's a 100 bips delta shift.
Okay.
So that is leading to core X gold also showing a even more tepid trajectory now, and yes, well below the 3% mark.
Okay. Well, between now and the monetary policy, there are no CPI numbers, but there's one big giant GDP number that comes out on November 28 for the months of July, August, September. Rakshit, Suhadip, what is the expectation over there? And if it is 7 plus, does that give the Reserve Bank a reason not to cut?
So I think from a policy perspective, growth is not the concern if you go by the GDP print. If you look at activity indicators, etc., you can have various indicators which could point to a bit of a slowdown. But honestly, if you look at the GDP prints, even in the first quarter, same will be with the second quarter. I don't think there is a problem in terms of growth if you look at it from a real GDP.
What are your numbers?
7% plus is what we are looking
for the second quarter. Okay.
Correct. But again, if you look at the nominal GDP, I think there lies much of the problem. And I think a nominal GDP growth of, let's say, 8% or a 9% is not something that is signaling a very strong growth per se. So from that perspective, if you go by from a policy perspective, I think the inflation is a clear positive for rate cuts. However, the external sector balance as well as the growth part, I think will put the RBI in a more cautious mode. So I think the policy is a close call in that sense, though we stick with a 25 bips rate cut at a fine margin.
Okay. What are the chances, Kanika, according to you? Wait, before that, Suhadip, are you yes for a rate cut or no?
Yeah. We are for a...
You are expecting.
Rate cut, but yeah, it's a close call.
Okay. Kanika, what's your call?
We have a clear call of a rate cut, 25 bips.
Okay. And Devang, what's your call?
Yeah, we are also of the view that December is a very high probability of a rate cut.
Okay, so here we're going with a 3-0 in this house. After the break, we will have Shomyo and let's see what how he votes. See, it's Kanika is there on a very good probability that the Reserve Bank says we have space to cut, but we don't have to use that space now. There may be times to come. Is that a very good likelihood? Not merely because the GDP number may be well over 7. I mean, who expected the 7.8? A dipstick survey showed me that the second quarter could be 7.5 very easily. I mean, at least some people have that point of view. If that's the number, the Reserve Bank is in a very awkward position of cutting rates when the growth in the just completed first half is something like 7.6. Kanika, you think that possibility, that awkwardness will prevent the Reserve Bank?
So let's have 2 points there. First is on growth. We completely acknowledge, in fact, our number for Q2 is showing close to 7.5%. But we also want to await corporate earnings to finalize that. But growth in second half likely to slow. As Shubhadeep mentioned, there is a deflator impact even in this quarter, which may actually very well persist in the third quarter as well. However, second half, base effects fade away. So growth likely to slow down. This was acknowledged by MPC even in October. Second, an inflation targeting MPC has to acknowledge inflation numbers consistently undershooting their projections. And now the number for this quarter tracking 0.5 while they're at 1.8. So such sharp undershooting must lead an inflation targeting central bank to pay some credence to inflation numbers as well, especially when nominal GDP growth is under downward pressure.
Okay. So no, I take your point. I take your point entirely. In fact, I'm wondering if we can show the entire inflation chart. It may be difficult. From the month of January, for calendar 2025, there is only 1 month where the CPI headline is above 4% at 4.2 for January. From February onwards, the decimal point is 3 point something, and it's consistently falling now to 0.25%. And without gold, it would have been negative. So clearly, the Reserve Bank will have, the MPC will have a lot of explaining to do. We already saw in the previous MPC some of the members asking for the stance to be changed back to accommodative. Of course, they were in a minority. And of course, the stance is not the external members' responsibility. But there is a heavy moral pressure as well on the Reserve Bank to look at inflation, as Kanika has been saying. It's going to become a very interesting policy indeed. Well, Devang, Kanika and Subhadeep, thank you very much for joining me. This House votes 3-0 in favour of a rate cut in the coming policy, and they are also looking at a 2% inflation for the full year, 2 to 2.1. The Reserve Bank is still sitting at 2.6. With that, let's go into a break. We will be joined by Soumya Kanti, who is the Chief Economic Advisor of State Bank and the Finance Commission member, in just a minute after the break. Welcome back. We've got a dramatic inflation number for October at 0.25%, an all-time low as far as the new CPI series is concerned, and pretty much a record low if you look at India's record even before the new CPI index. Joining us to glean how the inflation trajectory will be and what this will do to the upcoming Reserve Bank policy on December 5th, I have with me Soumya Gandhi Ghosh, Group Chief Economic Advisor at State Bank of India and a Finance Commission member. Soumya, thank you very much indeed for joining us. Well, actually, you were the only one in my poll who gave me a minus number. Minus 0.1 was your guess for the month of October. By your standard, this is actually higher than expected inflation. What do you make of this? I mean, if it's a minus number, what does it do to policy?
Yeah, actually, Lata, our number is actually lower than the headline CPI without the gold, which is at minus 0.57%.
Oh, without gold, it is minus 0.57.
Minus 0.57%, and next 2 months also the headline CPI could be in the negative territory if we just exclude the gold out. Okay. So having said that, if we leave aside that statistical artifact, even for the next 3 months, the inflation numbers will be less than 1%. Okay. So that means that the second quarter inflation could be well below 1%, well below the RBI number. And the third quarter could be around 3 to 3.2%. As of now, it could go even lower depending on how the food prices pan out. So overall inflation for the full year, as you had just said, could be 2% or lower. And the most important point to note here is next year inflation number also gets bumped down, and it will be much lower than the RBI projection of 4.5% at this 4.2% at this point of time. Mm-hmm. So if I take all these factors into perspective, I think, and this is going to have a period of inflation disinflation now, if I call it, because inflation has been declining consistently now from the central bank projection. The central bank projection in April, if you remember, was 4%. It came down to 3.7, then it 3.1. Now it is at 2.6. It could be even lower by that. And every estimates is now lower by around 50 to 60 basis points. So if I take all these factors into consideration, I think the inflation numbers will surprise on the downside. Now it's a call for the central bank to take in the December policy of what it is going to do.
Okay. No, that point is taken. Actually, in which month do you think inflation goes back above 2%? The Reserve Bank's mandate is to keep it between 2 and 6, right? 4% plus or minus 2%. So already from the month of July, it is under 2%. Okay, August, it goes a little above, but basically July, August, September, October, already it is practically below 2%. When does it climb above? In January, February?
I think maybe very close to 2% in January, but in February and March, it should be over 2%. And in March, whether it crosses 3%, that will be a matter how the food prices trajectory works out. So,
Fair enough.
Maybe you can take this February.
Yeah, but just as I was asking the economist before you, between now and the monetary policy, there is this big GDP number which comes out. What is your estimate of the growth numbers? And would that be a good reason for the Reserve Bank to say we have space to cut, but we don't have a need to cut?
Now, of course, Lata, I think the most important dimension of this entire growth story has been what we were discussing at the beginning of the year, that the second half would be actually weaker than the first year. That is not going to happen if you look into purely in the numbers now. So because the second quarter GDP, our estimate is actually not be surprised if the number crosses 7.5%. Currently, we are getting a number in excess of 7.5%. You have to fine tune the number. But I will not be surprised if the number is even higher than 7.5%. And then the third quarter GDP, if you look into the October, whatever I can gather from the October sales, their consumption boost and other things, it was actually significantly just stupendous. So from that perspective, the third quarter will also be not a letdown. But for now, for the December policy, the RBI has the GDP number in front of it, which could be around more than 7.5%. And that actually could be the deciding factor of deciding whether to cut now or later. But the important and on a lighter note, the interesting point is that in the February policy, the RBI will not have the Q3 GDP number, which will be released only in the month of February end, which could be even higher than the second quarter. So from that perspective, I think maybe it's a very close call between December and February. But I would stick my neck out to say that maybe February could be the best bet to cut if the RBI decides to go ahead.
fair point. The Reserve Bank will have the full year first advance estimate from the MOSPI, which if it has a 7 handle, then, it makes it a little awkward to give a cut at that time. But do you think that the Reserve Bank will be bogged down by its mandate? The mandate is that you cannot have inflation below 2%, and therefore it gives a cut. Also, if it gives a cut, do you think the bond markets will even respond? Because it will be the last cut. So do you think there will be a very big fall in the cost of capital?
No,
it could be a wasted cut, is what I'm asking.
Yes. No, Lata, I think that's a very fair point, because I think the possibly, this is my point, is that the base point to cut possibly could have been in October. August, I may rule it out, because June there was a jumbo rate cut. But I think possibly the base time to cut may have gone. But the inflation and also the fact that if the RBI cuts, now the bond market may not react favorably, because credit growth, if you look at another interesting dimension, is that credit growth is now started to outpace deposit growth, because credit growth is in double digits, deposit growth is single digits. So if that is the case, so basically the RBI may have to now look for some liquidity policy adjustment on other things, rather than purely concentrating on a rate cut at this point of time.
Just one more technical point, which only a person like you will know. The new CPI series comes in February. We are given to understand that rent is going to be differently calculated, and it may be higher because they may take market rents. Also, food will be lower, and that is the one that is depressing the inflation. So do you think that may change the arithmetic going forward, that we may not have such a low inflation?
Exactly. I think even if these points are well known earlier also, that food inflation is going to play a major part. Even if the weight of food inflation goes down, even if it goes down, say, by 3%, 45 to 42%, I think the overall headline inflation at this point of time was getting impacted by 20 to 30 basis points. So I'll not be surprised that the overall headline inflation gets a further downward bias because of the new CPI series, which will be released in February. So that is another uncertain point at this point of time, which the central bank may have to watch out for. But that will actually happen after the RBI February policy. So there is a lot of moving parts at this point of time. The November GDP print, the January full year CSO number, the February quarterly number, and the new February CPI series, which will be published after the RBI February policy decision.
Fair point.
So with so many moving parts at this point of time, it's difficult to make a guess. But as a mandate for the central bank, if it goes by inflation targeting, it needs to cut rates, but that's a call with the central bank. Will take very judiciously.
Fair point. But your December vote is cut or no cut?
Yes, as of now, I am holding out for a pause in December.
Pause. All right. Thank you very much, Soumya Karthik Ghosh, for analyzing so many moving parts. Thank you very much for joining us. You can't envy the Reserve Bank at this point in time, because probably in the December policy, they have to revise up the growth forecast to probably 7%, and they have to bring down the inflation forecast to probably 2%. And at that point, growth doesn't need help, but inflation gives you space to cut. That would be a dilemma they have to, encounter. A second dilemma is everyone knows that the real inflation we face is not 2%, because there is no national indicator for health. There is no national indicator for the price of education. We all know that private school fees are going up, but that's not reflected in the inflation. So inflation is not really 2% or 0.25%. On the other hand, growth is also not as good as 7.8 because of the impact of the WPI inflation being very low, the deflator being low. So the Reserve Bank has also to contend with the fact that growth is not as good as it looks, inflation is not as low as it looks because of statistical problems. So I don't envy the Reserve Bank, but December 5th remains a close call. That's it on this edition of Indianomics. Thanks for watching. More news and updates are lined up after the break.
Hello and welcome to India Business Hour. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening. India's retail inflation cools to a record